let's see another chapter, that is exemptions under GST. Liability to pay GST we will see little later after completing exemptions, but look into exemptions under GST. In these exemptions, we have now amendments in one area, that is import of services. Import of services, there are some good number of amendments. That's why we need to learn this and see this. Page number 57. So first we understood whether a transaction is supply or not. Now we are moving on to whether it is taxable or exempted. For that we are learning exemptions. All the exemptions reference is what? Section 11, read with notification number. One notification number yesterday you told me. What is that? Very good. 12 of 2017. This notification 12 of 2017 contains list of exemptions. And in that exemptions, what we are doing is that we are grouping all similar exemptions into one heading. Okay. So right now we are starting with the first area, that is import of services. So look into import of services, which is in page number 57, and say this. Import of services is broadly divided into two: OIDR services and other than OIDR services. OIDR means what? Online information database access and retrieval services, means any service which is provided through internet, means it is not just possible through internet, it is like it can be provided only through internet. That will be called as OIDR services. Example, OTT platforms only through internet. So this Amazon, Netflix, Hotstar, without internet it is not possible. Online classes again only through internet, that will also come under OIDR services. Is it clear? So it is important to understand what is OIDR services. You can see here, online information and database access retrieval services means service whose delivery is mediated by information technology over internet. Highlight that, over the internet. Over the internet, a service which is provided over the internet or an electronic network, and the nature of which renders their supply impossible to ensure. Impossible to ensure in the absence of information technology, means without internet it cannot be provided, then it will be OIDR services. Now generally we receive online consultations, medical consultations, etc. Online also we will receive. But is it only through online it is possible? No. We can directly go to the doctor also, or over phone also we can speak to the doctor, correct? So that is not a OIDR services, which is impossible to render in the absence of information technology. That is only OIDR services. And they have given some OIDR services list, and includes electronic services such as advertising on internet. Example, Instagram, YouTube is advertising on internet. Providing cloud services. Example, QuickBooks, SAP. So this is like our accounting software will be placed on the cloud, means internet you need to require to access that, and you need to prepare the annual financials, etc. That is this. Provision of e-books, music, movies, software, etc. So example, Spotify, Kindle, Amazon Kindle, so even Apple Music, all these are example of OIDR service. Providing data or information retrieval or otherwise to any person in electronic form or through a computer network. Example, Canva, Udemy. So Udemy, there is a course. So like small skill courses will be there for $3.99, $4.99, like that you can pay and you can access those courses. Definitely internet is required. Number 2, Canva. So people who don't have the Photoshop knowledge, if they want to do any design, etc. So for that they go to Canva platform. In that they can make a design. So like Instagram post design, or even wedding cards and all, people designing in that Canva itself. So that is also coming under this OIDR service. Online supply of digital content, movie, television shows, etc. That is Netflix, Amazon Prime. Then digital data storage, cloud, Google Drive, iCloud, etc. Because nowadays almost everyone will be exhausting this drive space, correct, Google Drive space, and we need to pay some extra amount in order to get the drive space, etc. That is this iCloud, Google Drive. Then online gaming, not online money gaming. I told you yesterday, online money gaming is specified actionable claims, but online gaming is OIDR service. Online gaming, Minecraft, GTA Vice City, etc., excluding the online money gaming. So now, these are the OIDR services. In exam, they may give any situation. You be clear. Is it through internet? Is it only through internet? Is it clear? Is it through internet? Is it only through internet? Then it is a OIDR service. Is it clear? Now, why we need to learn about OIDR service? Because OIDR services is always taxable. We don't have any exemption with respect to OIDR services. Always it will be taxable. But who will pay GST? If it is imported by NTOR, non-taxable online recipient, then who will pay? Supplier will pay under FCM. FCM means what? Forward charge mechanism. RCM means what? Reverse charge mechanism. Now listen. You are coming under non-taxable online recipient or not? You are coming under non-taxable online recipient or not? See the next page, read the definition and tell me. Any unregistered person receiving online information and database access or retrieval service located in the taxable territory. You are unregistered person or registered person? You are an unregistered person. And you are importing services? Yes. Did they give purpose for what purpose it should be imported, etc. and all? No, they did not give the purpose. If you are an unregistered person, you will come under non-taxable online recipient. Are you an unregistered person? Yes. So it is import by NTOR. So who will pay? For example, Amazon Prime or Netflix, etc. You pay the subscription. Who will pay GST to government? You will pay, or Amazon Prime or Netflix will pay GST to government? Amazon Prime or Netflix will pay GST to government. It is covered under FCM. But sir, they are outside India. How they can pay GST? Why they can't pay GST? They are paying income tax, na? They are non-resident. They are getting Indian income. A non-resident earning Indian income, that is income accruing or arising or deemed to accrue or arise from India. Non-resident is required to pay income tax on Indian income, correct? They are already paying income tax, so let them pay GST also. You got it? So that is this. And what if they are not paying income tax as well as GST? What will happen? We will block their access. We will block their access. Then only when you go to UK, US, Korea, Japan, etc. and all, you need to go and you need to access that. You understood? Of course, from India itself, without passport, you can go to all those countries and you can access that. I mean to say that way. So, OIDR services by NTOR taxable under FCM. By other than NTOR, it will be taxable under RCM. I am not coming under NTOR because I am a registered person, and when I import, I need to pay GST under RCM. So once again, you see who is NTOR, an unregistered person, or one more point, registered person who is registered only for deducting TDS under section 51. This is income tax TDS? No, GST TDS. Oh, in GST also we have TDS? Yes. GST also we have TDS. So two people will come under NTOR. Who are they? Number one, any unregistered person. Number two, registered person, and they are registered only for deducting. Okay, then who will pay GST on import of OIDR services? FCM, that is supplier. Suppose if it is imported by other than NTOR, non-taxable online recipient, then it will be RCM. Next, other than OIDR service. Can you give me example of any one import of service other than OIDR service? You are importing services, but it will not come under OIDR. Others. Consultancy, very good. Management consultancy services, or legal consultancy services, or health consultancy services. Even, very good, architect services. Because lot of people in India today wanted to construct the buildings as per the foreign architecture, because they wanted a different architecture and their building needs to look unique, and for that purpose. So therefore, import of architect services from a foreign architect. Okay, so that is other than OIDR services. And who imported it? Imported by NTR, non-taxable recipient. Then it is exempted. So who is non-taxable recipient? You see that in the same page. Who will come under non-taxable recipient? Individual. Okay, individual. Can you see there? Individual. Next. Individual. Next. Charitable trust. Charitable trust. Next. Government. Okay, so who are coming under non-taxable recipient? Individual, trust, government. Individuals, we are individuals. Whom we trust usually? Government. You understood? We are individuals. Whom we trust? Government. So remember this. Individuals, trust, government. Is it clear here? So who will come under non-taxable recipient? Individuals, trust, government. Okay. Individual for what purpose? Read. Individual for what purpose? Personal purpose. Trust for what purpose? Charitable activities. Government for what purpose? Other than business or commerce. Let me give you an example. For these three, you will understand this. Swami Nityananda Charitable Trust is importing architect services for construction of Kailasa, which is his place, for the purpose of providing charitable activities. Spirituality, he will provide spirituality to babes. So this for the purpose of advancement of spirituality, he is importing architect services. And will he be coming under non-taxable recipient? Yes, charitable trust. Importing other than OIDR services. Architect is other than OIDR services. For what purpose? Charitable activities. Therefore, that import of service is exempted. Is it clear? Next example. Say there is one individual and who is importing, this medical consultancy services. Maybe, so one doctor is telling that your father should undergo a surgery. There is a cancer treatment, etc. and all. But that person wanted to take a second opinion. And definitely he know about Indian doctors and all. So he wanted to take a second opinion from foreign doctor. And the foreign doctor says, no, nothing, cancer and all is not there. That is normally some issue. And if you put one injection, it will be over. You understood? So many times like that, I have heard many people getting cured through injection and tablet itself. But the Indian doctor will say, no, surgery is required. And easily somewhere like 20 lakhs, 30 lakhs and all will be cost, etc. and all. So always people will take a second opinion. So this individual takes a second opinion from a doctor outside India. Is it an import of service? Yes. Other than OIDR service? Yes. He is what? Individual. For what purpose? Personal purpose. Is it clear or not? Sir, first of all, why we need to learn this? Anyhow, it is not a supply now. Who said it is not a supply? It is supply. Import of services for consideration whether or not in the course or furtherance of business. Even though it is for personal purpose, it will become supply under 7(1)(b) na. That's why we are discussing, but it will come under exemption. Got it? It will come under exemption if it is an individual imported for personal purpose. Got it? But individual should be what? Registered or unregistered under GST. Read there. Individual should be unregistered. And charitable trust, what is it given? Either registered or unregistered. Then government. I'll give you an example for government. Say for example, this our Tamil Nadu fishermen who are going into the sea for fishing, they don't know about the territorial water concept. So they will touch Sri Lanka territorial water. Because when they go for fishing, so they deep down they go and there is no border or check post or gate, etc. in waters. They will go. Sometime they will touch the territorial waters of another country, that is Sri Lanka. And usually they will not go with passport, visa, etc. and all. So come on, how you can expect fishermen to have visa and all to take there? For that reason, they will be arrested. The fishermen of Tamil Nadu will get arrested. When they are arrested, Indian government will file a case against Sri Lanka with the UN, United Nations. So for that they will receive litigation services. Is it clear? So import of litigation services by government. For what purpose? Business or commerce or other? Other. Therefore, it will be exempted. Is it clear? You understood this here? Import of what service? Other than OIDR service. By whom? By non-taxable recipient is exempted. Is it clear? Then, by other than non-taxable recipient, we have one more exemption. So, this is a newly added point. Previously, it was not there. So, please focus. There is an Indian establishment which is Indian establishment of a foreign airline company. Carefully listen. Indian establishment of a foreign airline company. Let's take Singapore Airlines. Singapore Airlines is a foreign airline, and do they have an Indian establishment? Yes, they have an Indian establishment. Means what? In India they have an office and they will be selling tickets for the people who want to go to Singapore, okay? So there is a Singapore Airline Indian establishment. Singapore Airlines is a foreign company, okay? They are importing services from their head office. Who is importing services from head office? This Indian establishment, Singapore Airlines, is importing services from their head office without consideration. Is it supply or not a supply? Respond here. Supply. Supply. 71C, import of service. Tell me what is that 71C, import of service? Import of service for a consideration or without consideration? Without consideration from a related person or another establishment located outside India, okay, in the course or furtherance of business. Now, Indian establishment is importing services from their another establishment located outside India. Am I right? From their head office, import of services for consideration or without consideration? Without consideration, but it will become supply under 71C, and they are giving an exemption. They are giving an exemption. To whom they are giving exemption? That Indian establishment of the foreign airline company is enjoying the exemption, provided for a foreign establishment of an Indian airline is getting the similar exemption in Singapore. For example, Indigo Airlines is there. Indigo Airlines will have a foreign establishment. So, Indigo Airlines foreign establishment, if Singapore government is giving exemption there, then our Indian government will give exemption to their airlines Indian establishment. Is it clear or not? Read that. By an Indian establishment of a foreign airline without consideration, where Ministry of Civil Aviation certifies that there is a reciprocal agreement. Reciprocal agreement between whom? India and that foreign country. Got it? What is the intention behind giving this exemption? The intention behind giving this exemption is simple. The Indian establishment of a foreign company is importing services and there is no foreign exchange outflow. There is no foreign exchange outflow. It is without consideration. That is crucial point. Without consideration, without consideration, underline, without consideration, okay? Because of that reason, they are giving this exemption. Anyhow, money is not going out, so let it be exempted, and then only, our airline establishment outside India, the Singapore government will be giving exemption. That's why we are giving exemption to their establishment in India. Understood or not? So tell me, what is the exemption? Come on. Indian establishment of foreign airline company. First, Indian establishment of a foreign airline company. Import services for consideration or without consideration? Without consideration. From whom? From its foreign establishment. A foreign establishment that is outside India, head office. Okay, import service from its head office, and that is exempted. Provided foreign establishment of Indian airline company is getting the reciprocal exemption. Means there is a reciprocal agreement between India and the foreign country. Clear? That is exempted. In all other cases, it will be taxable under RCM. Understood? So this is a newly added point. All other cases, it will be taxable under RCM. That is there already. So we understood what is the meaning of OIDR, what is the meaning of non-taxable recipient, then non-taxable online recipient. Then look into the next page. Wherever GST is payable under RCM, they are compulsorily required to get registered irrespective of the threshold limit. And if GST is payable under RCM, threshold limit is not applicable. So they are mandatorily required to get registered. Also, in case of OIDR services imported by non-taxable online recipient, the supplier will pay GST na, that supplier is also mandatorily required to get registered. Also the supplier OIDR service provider located outside India and making supply to non-taxable online recipient in India is compulsorily required to get registered under section 24. Then in case of import of service, whatever IGST that we pay, that can be taken as input tax credit. So just 4 points you need to remember. What is that? Point number 1, when it is exempted, when it is exempted. So you tell me, what is the service that we are talking about? Import of services. When is it exempted? 2 cases it is exempted. What are the 2 cases it is exempted? Don't see the book, you tell me. What are the 2 cases import of service is exempted? OIDR, there is no exemption other than OIDR by non-taxable recipient. So who is non-taxable recipient? Individual, trust, government is exempted. Got it? Next, second exemption, Indian establishment of a foreign airline company importing services without consideration from its head office. These are the 2 exemptions. Then in remaining cases it will be taxable, correct? Yes, pond. And always import of service, wherever it is taxable, it will come under RCM. Only one place it is FCM. What is that? OIDR services imported by non-taxable online recipient. Who will pay GST? Supplier will pay GST under FCM. Understood? Then look into 2 more clarifications in this regard. See the first one. Whether loan taken by an Indian affiliate from overseas affiliate when both being related constitute supply. So to understand this clarification, we really need to have the background of this, then only you will understand it. Otherwise it is like nothing will go in your brain. So for next 2-3 minutes, please listen, please listen. Already we know that interest on loans, advances, deposits is exempted, correct? Now there is a bank in India or there is a company in India which is giving loan to their subsidiary company. There is a holding company in India which is giving loan to their subsidiary company in India and they are collecting interest on loan. What is the treatment? There is a holding company in India which is giving loan to the subsidiary company. Along with the loan they are getting interest. Will it come under interest on loans, advances, deposits? Yes, and therefore it will be exempted, correct? Now if that holding company is outside India, then also they can give loans, and then also the interest will be payable by the subsidiary company, but it will not come under interest on loans, advances, deposits, because the holding company is not in India, it is outside India. Then it will come under import of services. We need to check it under import of services. Is it clear? We need to check it under import of services. Classification will change. Arey yaar, holding company in India, subsidiary company in India, it's a normal service, not a import of service. Then we need to check interest on loans, advances, deposits is exempted, correct or not? So interest on loans, advances, deposits is exempted. But the moment holding company is outside India and the subsidiary company is in India, it will not become interest on loans, advances, deposits, it will become import of services. Moreover, where the supplier is located outside India, so then we should not see from supplier point of view. This interest on loans, advances, deposits exemption is applicable. All the exemptions are applicable to taxpayers in India, not taxpayers outside India. Is it clear? All the exemptions are applicable to a taxpayer in India, not to a person outside India. So in this case, this exemption is not applicable to the holding company outside India. Then how we need to treat it? As import of services. Is it OIDR or other than OIDR? Other than OIDR, very good. And is it imported by non-taxable recipient or other than non-taxable recipient? Other than non-taxable recipient, because it's a subsidiary company will not come under NTR, individual, trust, government. Company will be other than non-taxable recipient. Am I right? And is it this Indian establishment, etc.? No. So other cases means it will be taxable under RCM. Are you understanding? Which means Indian subsidiary companies which are taking loan from the foreign holding company is required to pay GST on the interest what they pay, and it is import of service, it is taxable under RCM. But it is meaningless, na? So all the Indian companies which are taking loan from foreign companies went to Nirmala madam and asked, Madam, If we are taking loan from India, there is no GST. If we are taking loan from outside India, there is a GST that we need to pay. It is atrocious. Give us a relief. That's where this circular came. That's where this circular came. And this circular they are telling, if there is a Indian company, subsidiary company which gives only interest to their foreign holding company, that interest is not a supply, not exempted. They did not say exempted. They said it as not a supply. See there. Whether loan taken by Indian affiliate, from overseas affiliate, where both being related constitutes supply. If the consideration for loan is either interest or discount, then it will be not a supply and GST not payable. Suppose if they pay any other charges, in India also if they pay any other charges, it is taxable na. So for holding company also if they pay any other charges, that will become supply. So consideration for loan is processing fee or administrative charges in addition to interest or discount, that will become supply under 7(1)(b), and it's a supply of service, and GST payable under RCM being import of services. Got a clarity? Next, look into the next circular. Let me give you little background for this also. Generally, lot of companies in India find it difficult to retain the employees. Employee retention is really a big task. So what happens is that in order to retain the employees, the organizations will tell to the employees that we will give you ESOP, employee stock option plan, or employee stock purchase plan, or restricted stock units. The objective behind all these things is same. That is, you work with us for maybe 3 years, 4 years, 5 years, like that. Then you will become an equity shareholder in our company. Is it clear? You work with us for next 5 years, you work with us, you will get salary, plus we will give you ESOP today itself, employee stock option plan, but after 5 years you can use this and you can buy the shares of the company at a discounted rate. At that time the market rate may be high, but you can buy at a discount rate and you can become the equity shareholder of the company. Is it clear or not? That is called as ESOPs. And the moment when you go complete CA and go outside, now almost every organization is offering ESOPs, and they will add it to cost to company. They will say pay package as 24 lakhs. 24 lakhs means don't get carried away. 24 lakhs and all they will not give you. In that 24 lakhs, some 4 lakhs will be in the form of ESOPs. They will allot to you. So which you can purchase at a future point of time. And thereafter PF etc. and all will be gone. And maybe somewhere like 18 lakhs or less than that you will be getting. You will think 2 lakhs per month, but 2 lakhs and all will not be there. 1 lakh 20, 1 lakh 30, like that the salary will be, okay, take home salary. So this ESOPs will be procured by an Indian company from its foreign company to allot it to the to the employees of the Indian company. Is it clear? There is a subsidiary company here and a holding company. Subsidiary company is procuring what? Procuring what? ESOP, not shares. They are procuring ESOPs. From whom? Holding company. To allot the ESOPs to whom? To their employees. Okay. But ESOP when they procure, they have to pay na. What is that they pay? Nothing but the share price they will pay. See, they are procuring ESOP means what? They are literally procuring the shares. Correct. But that shares is not allotted today, it will be allotted in future, but today they are procuring, so which is nothing but shares. And transaction in shares is what? Neither goods nor services. So whether any GST payable on the money remitted by the Indian company to the foreign company for this ESOP? No. ESOPs are also like shares. Due to that reason it is not a supply. Suppose apart from the cost, if they pay any extra amount for that, some administrative charges etc., that will become supply. Is it clear? See there. Whether GST is applicable on ESOPs, ESPP, RSU provided by company to its employees through its overseas holding company in case of cost to cost reimbursement by domestic subsidiary to its foreign holding company. How much they paid? Only the cost they paid. Only the cost they paid. then it is not treated as supply and there is no GST liability because it is transaction in securities without consideration. In case the additional charges collected by the foreign holding company, then the additional amount is treated as supply of service and GST payable under RCM. Are you understanding this? So only the cost is paid, it is not a supply. Any extra charges is paid, that will become supply and chargeable to GST because it is also import of services. These are the two clarifications they have given in the context of import of service. Now, we will see the application of these two clarifications through the questions on amendments. So kindly open your book, concept drills. You can see questions on amendments. See the first question. See the first question. So open your concept drills. So workbook you open and page 49. Page 49, question number 1. Page 49, question number 1. That workbook only. That booklet only here. Page 49, question number 1. ABC Private Limited, an Indian entity. Carefully read the question here. ABC Private Limited, an Indian entity, secured a loan of rupees 1 crore from its overseas affiliate XYZ Incorporation based in the United States. The loan was Indian entity from its overseas affiliate. Overseas affiliate means what? Holding company. Affiliate company means holding company. What it? They'll confuse you by giving affiliate and all. Affiliate means it's a holding company. XYZ Incorporation based in United States. The loan was provided at an interest rate of 6% per annum for a tenure of 3 years, with interest being the only consideration charged. Whether the interest on loan paid to XYZ Incorporation is treated as supply and chargeable to GST. What is your answer? So not a supply. Why? We have seen one circular. What is it you will write in exam? As per CBIC circular. Concentrate, listen first. As per CBIC circular, import of services by an Indian affiliate of a overseas holding company, okay, or subsidiary company from a holding company by way of loans where the consideration is only in interest is not a supply. If there is any other consideration paid, then it will become supply. So that is what? See there, see the answer. Import of services by way of loans or advances against consideration in the form of interest or discount is not treated as supply as per CBIC circular. Accordingly, ABC Private Limited securing a loan from XYZ Incorporation against interest of 6% per annum is not a supply and consequently it will not be chargeable to GST. What will be your answer if in addition to interest, XYZ Incorporation also charged a processing fee of 1,50,000 for facilitating the loan? Then that 1,50,000 will become supply and who will pay GST? RCM. That is ABC Private Limited will pay GST under RCM. See the answer. However, if the Indian affiliate pays consideration other than interest or discount, that is processing fees or documentation charges, then it will be supply under 7(1)(b), chargeable to GST under RCM. In the present case, ABC Private Limited shall pay GST on 1,50,000 as processing fees, paid to XYZ as processing fees. Clear? Understood this? This is how they will ask the circular as a question. Then another question we will see. Question number 3. Question number 3. Unilever PLC, a foreign holding company, offers an employee stock option plan to the employees of its Indian subsidiary Hindustan Unilever Limited as a part of their compensation package. Under this plan, Unilever PLC issues 10,000 stock options to the employees of HUL, allowing them to purchase shares at a predetermined price of 200 rupees per option. At the time of grant, the market price per share is rupees 300. So even though it is 300 rupees, but at what price they are allotting? 200 rupees. They are giving at 200. Means how much the Indian subsidiary should pay to the holding company? Huh? Number of options. 1000. 1000 into 200. 10,000 options. So 10,000 into 200. What is 10,000 into 200? 20 lakhs, correct? How much they need to pay? 20 lakhs they need to pay. And options have a vesting period of 3 years. After the stock options vest and are exercised by the employees, Unilever PLC charges HUL rupees 20 lakhs as the cost of shares issued, which HUL reimburses on a cost to cost basis. Additionally, Unilever PLC charges HUL an administrative fee of 2 lakhs for managing the ESOP on its behalf. So 20 lakhs they are paying as cost plus 2 lakhs they are paying as administrative fees. Assume the applicable GST rate on service is 18%. Determine whether the 20 lakhs reimbursed by HUL to Unilever PLC for the cost of the shares is liable for GST. What is your answer? No. Why? As per CBSE circular, the cost towards the ESOP paid by Indian subsidiary to the foreign holding company is not treated as supply. Read the answer. As per CBSE circular, if payment made by subsidiary company to holding company towards employee stock option plan on cost to cost basis, it is not a supply. Therefore, 20 lakhs paid by Hindustan Unilever Limited to Unilever PLC is not a supply. Understood? Next, second. Calculate the GST liability on additional 2 lakhs charged by Unilever PLC as an administrative fee, and who is liable to pay GST. What is the treatment of the 2 lakhs? Only cost of the options is not a supply. However, if any administrative fee or other charges are paid, that will become supply, and 7(1)(b) will get attracted, wherein Hindustan Unilever Limited, Indian company, is required to pay GST under RCM. See there. Additional charges payable towards ESOP apart from its cost is treated as supply under 7(1)(b), and 2 lakhs paid by Hindustan Unilever Limited to Unilever PLC towards administrative fee is chargeable to GST under RCM. Okay. Then point number 3. Compute the total amount HUL needs to pay to Unilever PLC. How much is the total amount that they need to pay? 22 lakhs. 20 lakhs plus 2 lakhs, that is 20 lakhs towards the cost and 2 lakhs. But what about GST? That GST they pay to government under RCM. They will not remit it to the holding company. 22 lakhs and GST payable to government 36,000. Can GST on this additional 2 lakhs be availed as ITC? I told you already. On import of services, why IGST? Always import of service will be interstate. Remember, import of goods and import of service is deemed interstate. That's why IGST. So whatever IGST they pay on import of services, can they take as ITC? Yes, they can take as ITC, provided the conditions for availment of ITC is fulfilled. There are many conditions for availing ITC. All those conditions should be fulfilled. GST paid under RCM can be availed as ITC if the condition for availment of ITC is fulfilled. Understood? So this is about the questions. So after applying the information in the questions, now you understood the circular's clarity. So these are the questions which is not there anywhere. Completely I have created this, and hours I have spent in creating these questions, and I don't think so that the same question may come, but similar to this definitely will come. Chances are there. Okay, we'll start. Look into page number 41. Look into page number 41. Section 11 of CGST Act or Section 6 of IGST Act empowers central government on the recommendations of the GST Council to give the exemption from time to time. That's the reason why I told you, whenever you are writing exemption, you need to give the reference of Section 11 read with notification number 12 of 2017. That is the Section 11. Now they added one new section in this, that is 11A. What does that 11A says? Suppose if government has brought a particular transaction into taxability, but for many years they were not paying GST on the transaction. Now, whether government is having power to roll back the taxability. Roll back means what? That is like withdraw the taxability on the transaction. Again, I am repeating, carefully listen. So far, a particular transaction was not charged to tax, and now government is taxing the transaction. When government is taxing the transaction, wherein people will definitely not accept, they will make a protest. When they make a protest, at that time, whether government is having power to withdraw the taxability or should they wait for the parliament approval? No, government is having the power. They don't have to wait for the parliament approval. Government on its own also can withdraw. Okay, but for bringing it into taxability, they take the parliament approval. For bringing it into taxability in budget, they take the parliament approval. But again, for withdrawal also, should they take any parliament approval? No, they can withdraw it depending upon their decision only. They don't have to go to parliament. Whether they have that power to do so? Yes, that power they have added now recently, that is section 11A or section 6A of IGST Act. Read that. Government, on the recommendations of the GST Council, may not recover GST, short levied or not levied, underlined, as a part of general practice, as a past general practice. It is past general practice. As a past general practice, they may not do so. Okay, that is, again I am repeating, carefully listen. For bringing a particular transaction into taxability, they need a parliament approval. But for withdrawing that from the taxability, they don't need any approval of the parliament. They can do it on their own. But only condition is that as a past general practice, they should not have been levied that particular GST on the transaction. Then look into the next area, agriculture related services. So as I told you, we have all the exemptions. I am grouping it into different sectors. First sector already we discussed is import of services. Now we will see quickly agriculture related services. So here agriculture is not exempted because agriculture, first of all, not covered under GST, because remember, any service provided by an agriculturist is exempted from registration. Okay, so you write down somewhere on the notes over there, agriculturist is exempted from registration. Agriculturist is exempted from registration. They are not at all required to get registered. Is exempted from registration. Agriculturist is exempted from registration. They are not required to get registered. So we are not talking about the agriculturist. We are talking about there is an agriculturist to whom we are providing the services. Is it clear? Here agriculturist is not the supplier, agriculturist is the recipient. I am providing service in relation to agriculture or agricultural produce. Then that service is exempted. So what are the examples of service in relation to agriculture or agricultural produce? So there is an agriculturist who wanted seed testing. I am doing the seed testing, or I am doing the soil testing, or I am providing the manpower for agriculture. So all those will be coming under service in relation to agriculture or agricultural produce. You can see here agriculture related services. Any service in relation to agriculture or agricultural produce is exempted. So remember, there is agriculture or there is agricultural produce. For that agriculture or agricultural produce, you are providing some services, that service will be exempted. What is the meaning of agriculture? You can see here. Agriculture means cultivation of plants and rearing of life forms of animals. For what purpose? Anything, for food, fiber, fuel, raw material or any other similar products. Generally cultivation of plants will come under agriculture, that we know. Even rearing of life forms of animals. Rearing means what? Taking care of, for reproduction. Okay, and for what purpose? Food. Example, poultries, fisheries, etc. will come under agriculture for food. Fiber, that is sheep farming, or sericulture, that is silkworm farming, that is also coming under agriculture for fiber. Fuel, cattle farming, for the purpose of using the cattle in agriculture for ploughing, etc. and all, that cattle farming also will come under agriculture. Raw material, that is honey bee farming. Honeybee farming for extraction of honey, which is a raw material for many medicinal preparations or any other similar products. So that's the meaning of agriculture, and you have to remember the meaning of agriculture, because in exam, when you see a question, when you see a situation, you need to give the justification as to it will come under agriculture, so it is exempted. So what is the meaning of agriculture? Come on. Cultivation of plants and rearing of life forms of animals. For what purpose it is rearing of life forms of animals? For food, fiber, fuel, raw material or any other similar products. But rearing of life forms of animals except rearing of horses. Why horses are excluded? Because horses is no way connected to food, fiber. Horses we will not kill and eat, and horses will not be used as fiber, fuel, raw material or any other similar products. But sir, horses can be used as fuel na sir, like for example pulling the cart etc. and all, but not for agricultural farm. Inside the agricultural farm we will not use the horses. That's the reason why it is excluded, except rearing of horses. What about other animals? Some animals are not allowed for rearing. We don't have to bother about that, like tiger, elephant, leopard etc. and all not allowed for rearing. That you don't have to bother. Whichever animals is allowed for rearing, in that animals which are allowed for rearing except horses, everything else will be coming under agriculture. Is it clear? Then next, agricultural produce. Agricultural produce means a primary produce out of agriculture on which no processing is done. Example, tender coconut is an agricultural produce on which no processing is done, and that tender coconut we sun dry for some days and peel off the husk and we get a coconut. That is also not agricultural produce. And that coconut we sun dry for some more days, remove the shell and we get the copra. That is also not agricultural produce. But that copra, when you extract the oil, coconut oil, that will not be agricultural produce. Is it clear or not? So agricultural produce means what? The primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which does not alter its essential character. Now from coconut, tender coconut to coconut, there is no change in the essential characteristics, and usually that process will be done by the cultivator. Now what about paddy? Is paddy agricultural produce? Yes. Is rice agricultural produce? No. Why rice is not an agricultural produce? Because even though paddy to rice, there is no change in the essential characteristics, no change, really no change in essential characteristics, because paddy, one layer if you remove, you will get rice. No change in essential characteristics, but that is not usually done by the cultivator, that is done by the rice mills. So due to that reason, it will not come under agricultural produce. Read there, usually done by a cultivator is the word given. So if it is not usually done by cultivator, that is not an agricultural produce. Whether tea and coffee is agricultural produce? No. Tea leaves is agricultural produce, and coffee beans or coffee berries is agricultural produce. Got it? Same way. Is sugar agricultural produce? No. Sugar cane is agricultural produce. So agricultural produce definition. Tell me, what is agricultural produce? The primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which changes or does not change. Does not change its essential characteristics but makes it marketable for primary market. Why we discuss these two definitions? Because first exemption is what? First exemption is what? Any service in relation to agriculture or agricultural produce is exempted. Now paddy is an agricultural produce, but rice is not an agricultural produce. As rice is not an agricultural produce, in relation to rice, they have given certain activities which are exempted. That is, loading, unloading, packing and storage of rice is exempted. Only 4. What about these 4 activities for agricultural produce, which is anyhow covered in the first point? Any service in relation to agricultural produce is exempted. As rice is not agricultural produce, that's why separately these 4 points are given. But if these 4 are for agricultural produce, that is covered in the first point itself, it is anyhow exempted. Okay. For rice, what are the 4? Loading, unloading, packing and storage of rice is exempted. Then artificial insemination of livestock other than horses through injections. So they will give injections to the hens and for the purpose of laying down the eggs, etc. lot of cases reproduction will happen through injections only. So these injections are called as artificial insemination. That is also indirectly for agriculture only, therefore it is covered under exemption. But horses no way connected to agriculture, that's why artificial insemination of horses is not exempted. Then service by way of storage or warehousing of cereals and pulses. Cereals and pulses are dals, etc. like gram dal, urid dal, tur dal, etc. Lot of dals which we are using at our home are not agricultural produce because everything is processed. As it is not agricultural produce, but only one exemption is given to that. What is that? Storage of that goods. Got it? Storage or warehousing of that goods. What about storage or warehousing of agricultural produce? It's anyhow covered under the first point. Then warehousing of minor forest produce is also exempted. Minor forest produce is also not agricultural produce because it is available in the forest. No one is going there for cultivation. Naturally it will come, like bamboo, shikakai, Ayurvedic herbs, then amla, that is forest amla, then forest honey. All these are some things which are available in the forest which people will bring, that is called as minor forest produce. Naturally it will come and it is not agricultural produce, but its storage is exempted. Got it? So you have to remember 5 points. What is the first exemption? Any service in relation to agriculture or agricultural produce is exempted. Number 2. So agricultural produce definition you should know. Number 2, rice is not an agricultural produce, but loading, unloading, packing and storage of rice is exempted. Then number 3, artificial insemination of livestock other than horses. Then number 4, storage of what? Cereals and pulses. Last, storage of minor forest produce. These are the 5 activities. Storage or warehousing, both are same only, synonyms, okay? And if there is any warehousing of fruits and vegetables, what about that? Anyhow, fruits and vegetables are what? Agricultural produce. It's anyhow covered under the first point, okay? So warehousing of fruits, vegetables and other agricultural produce is covered in point number 1 above, that is service in relation to agriculture or agricultural produce. Understood? Then look into the next area, that is insurance services. In insurance services, see exemptions, carefully you listen to it, and in exam what happens is that, so you will get a question. You will definitely not get a question like whatever you know about agriculture related exemptions you write for 5 marks, like that they will not ask. So you don't have to by heart it, you need to just revise it. In exam they will give a situation. For that situation, easily if you have concentrated in learning, then you will know the answer. There you will write, okay? If you don't know the answer, something new transaction they have given, then what is your answer? Taxable. If you know, if it appears that somewhere I heard it, it is exempted. No, I don't know anything about it, the answer will be taxable. Is it clear? That's why cautiously you listen, not with the objective of remembering it, with the objective of understanding it, okay? You don't have to remember anything in this exemptions chapter, just you need to understand and revise it as many number of times as you can, okay? Now look into insurance services. In insurance service also they have given few exemptions. Point number 1, that is life insurance business provided by NPS, National Pension System Trust. NPS trust is National Pension System Trust, that is created by government. What they will do, they will provide life insurance services and collect a premium, monthly premium or yearly premium. That premium collected by them will be exempted. So first what you need to remember, NPS trust, okay? Underline that, NPS trust is exempted. Then next, second point, group life insurance. Group life insurance means what? So group of people will create a fund, insurance fund, and the members of that group will contribute to that fund, and any member, anything happens, out of that fund money will be paid to the family members of that member, okay? So that is called as group insurance. Not all group insurance funds are exempted. There are many group insurance funds. Only 5 group insurance funds are exempted. What are they? Army, Navy, Air Force, Central Armed Police Forces and Coastal Guard, okay? These five. Army, Navy, Air Force, Coast Guard and Central Armed Police Forces. These 5 group insurance funds is exempted. First one, NPS trust, premium exempted. Next, group insurance fund, these 5 exempted. Next point, service of general insurance business provided under government notified scheme. There is an insurance company which is providing general insurance services, but that scheme is notified by government. How you know that the scheme is notified by government? Definitely, if it is notified by government, it is not for all, it is for below poverty line people, or it will be for agriculture, or it will be for women. For them only they will notify. See, why will government notify a scheme here? Not for everyone. It will be only for their vote bank, correct or not? What is the vote bank of government? Farmers, correct? If it is for farmers, every political party will come and take a step in that, because they want the mileage, you understood? And because they have defined farmer as what? One poor fellow, and they will not be having proper clothes also, so they are like beggars, like that, and all these people are creating in the movies everywhere, okay? But farmers are not like that, okay? They are decent, they will also live like us only, got it? But like that they create and they say this we are doing for farmers, we are a good government, etc. So farmers. Number 2, below poverty line, because this is the vote bank na, below poverty line. Next, number 3, women, that's what they are doing for this many years. Like they will tell free mixie, free grinder, this, that, everything they are giving. So these 3, definitely government will notify for this, and for that particular insurance, if any premium is collected, that will be exempted. So for example, hut insurance is given in the question. Hut insurance, hut is what? Below poverty line, okay? And then failed well insurance, failed well, borewell. Failed borewell insurance. Borewell for whom? Definitely for agriculture. Correct or not? So like that easily you will identify when it is given in the question itself. You don't have to remember what are those notified list of services or insurance schemes. Just remember these schemes are notified for agriculture and farmers, below poverty line, women, okay, is exempted. Also one more point to remember, Nirmaya health insurance is also exempted. Then D point you see, like how C point is for life that is general insurance, D point is for life insurance, but that life insurance is under government notified scheme. How do you know that it is a government notified scheme? It will end with the word Yojana. Okay, Yojana, Pradhana Mantri Bima Yojana, Pradhana Mantri Suraksha Bima Yojana, like that. So there will be some policies wherein that policy is government notified. Towards that, if any premium is collected, that premium is exempted, okay? Scheme ending with the words Yojana. And micro life insurance, where the maximum sum assured is 2 lakhs. Micro life insurance means rather than paying insurance premium yearly, so monthly some nominal amount will be payable, but not all micro life insurance is exempted. Micro life insurance where the sum assured should not exceed 2 lakhs, then only that premium collected is exempted, okay? So now, so first one NPS, second that group insurance funds 5, and next one government notified insurance schemes 2. In that Nirmaya health insurance or notified scheme for agriculture and farmers, below poverty line, women, and then life insurance means Yojana, scheme ending with the words Yojana, and thereafter micro life insurance where the sum assured does not exceed 2 lakhs, okay? Then insurance service provided to government. So I am providing insurance services to government and government will pay me the premium. That premium is exempted because government also will take insurance on its property, on the life of the employees, etc. They pay premium. That premium is exempted. Next point you see, reinsurance of any exempted insurance service is also exempted. What is that? Reinsurance of exempted insurance. Okay. For example, I am insurance company A. I provide insurance service to government. My premium collected is exempted. Correct or not? Under E point, my premium collected is exempted. Now, I am an insurance company. I will take insurance from another insurance company. So that another insurance company, whatever premium that I receive, say that is insurance company B. I am insurance company A. I receive premium that is exempted. Now I share this premium with another insurance company. This concept is known as reinsurance. So the reinsurance premium is also exempted if the main insurance premium is exempted. Is it clear or not? Read that. Reinsurance of any exempted insurance service is also exempted. In this regard, they have given one CBIC circular now, that's an amendment. What is that? Generally, reinsurance of main insurance service is exempted if the main insurance service is exempted, correct. What if that insurance company B, in our example, I am insurance company A, I collect the premium from government, that is exempted, I share the premium with another insurance company B, that is also exempted because it's reinsurance. Now insurance company B will take reinsurance from another insurance company, that is insurance company C, whether that is also exempted. Yes, reinsurance, first insurance, second will be reinsurance, third will be reinsurance, that is called as retrocession. That reinsurance is known as, that is reinsurance of reinsurance is known as retrocession, that is also exempted. See there, reinsurance includes retrocession. Retrocession means what? Reinsurer, that is in our example insurance company B, further transferring the risk to another insurer. Okay, so they collect a premium, that is also exempted. Therefore, if reinsurance is exempted, retrocession is also exempted. Got the clarity? So this is an amendment, May 25 amendment. So remember, insurance services, wherever it is exempted, total 5 points we discussed as exempted, first 5 points. In this first 5 points which is exempted, its reinsurance also exempted, further reinsurance, that is retrocession, is also exempted. Then suppose if the main insurance is taxable, reinsurance is also taxable, retrocession is also taxable. Then service provided by business facilitator or business correspondents. Insurance companies will be appointing agents. These agents will bring in the business to the insurance companies. So those people, if they are working in rural area, then the commission earned by them will be exempted. Is it clear? Read there. Only if they are working in rural area. Service provided by business facilitator or business correspondent to insurance company in rural area is only exempted. What if they are working in urban area? Then the commission received will be taxable. Sir, what is rural area, what is urban area should we remember? Not necessary, that will be given in the question itself. Okay, so based on that itself you decide whether it is taxable or exempted. Okay, these are the exemptions with respect to insurance services. Now look into banking and other financial services. First point, transaction in money. Already we know this. Transaction in money, if it is without consideration, it is neither goods nor services. Yesterday only I told you, money is neither goods nor services. But transaction in money for a separate consideration, then it will be treated as service. So transaction in money without consideration, neither goods nor services. If it is for a separate consideration, then it is treated as service. If that consideration is interest or discount, then it will be exempted. If it is any other consideration, then it will be taxable. What is difference between interest and discount? Both are same only. The timing difference will be there. That is, discount will be upfront, whereas interest will be at the end. When you go to a money lender and borrow money for 10,000 rupees, they will deduct 1,000 rupees and they will give you 9,000. But when you are repaying, you need to repay 10,000 rupees. So they deducted the interest upfront itself. That is called as discount. Even bill of exchange, you would have studied discounting of bill of exchange. When you have a bill of exchange, you go to the bank and you give it to the bank for discounting. So they will deduct the interest and remaining amount they will give you. So the person should make the payment directly to the bank. Is it clear or not? So that is discount. Usually in working capital management also, factoring concept you would have studied. In that factoring also same concept. They will deduct the interest upfront itself and they will give the advance. Got it? So these are all called as discount. Discount means simple. Usually interest will come at the end. If it comes in the beginning itself, it will be called as discount. Is it clear? But normal bank loans and all, if you see, what will happen? First, you will take a loan and thereafter when you repay, you need to repay along with interest. So that is called as interest. But in real sense, both are same. Just the timing difference will be there. So that is exempted. Apart from that, any other consideration? What are the other consideration for banking company, financial institutions, etc.? That is credit card charges, debit card charges, processing fees, documentation charges, minimum balance, non-maintenance charges, NEFT charges, RTGS charges. Are you getting this? All these are other charges which will be taxable. Even interest involved, locker charge also taxable. Interest involved in credit card is also taxable. Generally interest is exempted, but interest involved in credit card, that is when you have a credit card and that credit card when you convert into EMI, so in every EMI there will be interest component, that interest will be taxable or exempted? Taxable. Remember this, interest involved in credit card is taxable, and we don't have anything RCM, and at this point of time wherever I tell you RCM, that only you remember, otherwise everything will be FCM. Okay, you understood the first exemption? Respond. What is it you need to remember? Interest on loans, advances is exempted other than interest involved in credit card. That is what you need to remember, first point. Second point, services provided by banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana, PMJDY scheme is there. In that PMJDY scheme, banks will provide nil balance accounts, but we need to ask for it. Bank will not give voluntarily. Only when you ask they will not promote it because it's a loss to the bank. So we need to ask nil balance accounts. Under this scheme, the bank will open nil balance accounts, and to those account holders, if they provide any services like debit card service, checkbook service, anything, that will be exempted. Is it clear? So, Pradhan Mantri Jan Dhan Yojana scheme, and under this basic savings bank deposit account holders, if bank provides any service, that is exempted. Next, number 3, foreign exchange transactions. Foreign exchange transaction means what? Converting one currency into another currency. Say for example, we need dollars and we buy the dollars from the bank and we will give Indian rupees. Same way, so bank will be buying some currency from you for against Indian rupees. All these things, all these transactions which happen between the customers and the bank or forex dealers is only taxable. All others are exempted. All others means what? Between banks, if there is a forex transaction, between forex dealers, between banks and forex dealers, it is exempted. Is it clear? Say this, bank to bank, forex dealer to forex dealer, bank and forex dealer and bank. Between them, if there is any transaction, that will be exempted. And between bank or forex dealer and the customer, then it will be taxable under FCM. Then next one, point number 4, services by a acquiring bank to any person. What is this? Generally, say when you purchase this book, lot of you purchase this book here by making the payment through card. Okay, so we have a swiping device. Say you have swiped your card and you made the payment. So what is the book price? 350 rupees. And when you paid 350 rupees, 350 only, na? 299 only. Okay, they are selling at 50 rupees less. It's okay, fine. So 300 rupees. Okay, 300 rupees when you pay, do you think really I will get 300 rupees out of that? No. What will happen? 2% it will be cut, processing fees. So when you pay 300, I will not get 300, 2% they will deduct, and that is called as processing fees. This processing fees is always there, but GST on processing fees will be exempted if the swipe amount is up to 2000. You understood? How much is your swipe amount? So which is less than 2000. So therefore in this case only 2% will be cut, not 2% plus GST. Is it clear? What if you have given me 3000 rupees, you used your card for 3000, then what will happen? 3000 minus 2% and GST on 2% also will be deducted. Is it clear? Remaining amount only I receive. So is processing fee exempted? No. GST on processing fee is exempted provided the transaction amount is up to 2000. And it is for which case? Card transaction or online transactions? Only card transactions. Read that. Services by an acquiring bank to any person in relation to settlement of an amount up to 2000 in a single transaction transacted through credit card, debit card, charge card or any other payment card service. So GST on processing fees for a card transaction up to 2000 is exempted. The next one, point number 5, services by an intermediary of financial services located in a multi-service SEZ. There is a multi-service SEZ in India. Only one multi-service SEZ we have, that is Gift City. So we have Gift City, Gujarat International Fintech City. Okay, this is the Gift City, and like amazing infrastructure they have provided, and this is a multi-service SEZ. Lot of people will be coming, like foreign companies will be coming and doing business in this Gift City. Okay, and wherein this is called as a multi-service SEZ. What services, sir? All services, insurance, banking, financial services, any kind of services they might be providing. Okay, now there is a intermediary. Where is that intermediary located? In the Gift City. To whom they are providing services? To their customers outside India, and they are dealing with what currency? Foreign currency. Then whatever charges that they collect will be exempted. Let's remember this with an example. PayPal, like that, have you heard of any payment intermediary, like how we have Paytm in India? In foreign country we have PayPal. That PayPal, in almost all websites if you see, PayPal will be the payment gateway, got it? And that PayPal will have a back office in India. Back office means which will do all the process, etc. and all. Okay, administrative work, data entry work, etc. This back office is called as an intermediary, which is there in the multi-service SEZ. They provide services to their customers. Who are their customers? Outside India. And they deal in what currency? Indian rupees or foreign currency? Foreign currency. For that, whatever money that they are receiving will be exempted. Now, won't it become export of services? Won't it become export of services? If it is export of service, anyhow it is zero rated. Because if you logically see, where is the supplier located? In India. Where is the recipient located? Outside India. Then it is export of service only now. So just because supplier in India, recipient is outside India, it will not become export of service. Total 5 conditions should be satisfied. Then only it will be export of services. What are those 5 conditions? Concentrate, then I will tell you which page it is. Okay, first listen. What are the 5 conditions? Logically, you tell me where the supplier should be. For export of service, where the supplier should be? In India. Where the recipient should be? Outside India. And the place of supply. The place of supply should be outside India. Should not be in India. Should be outside India. And how the consideration should be? In convertible foreign exchange. However, there is a relaxation. In some cases, the consideration can be in Indian rupees. It's okay. It can be in Indian rupees. But supplier and recipient are not two establishments of the same person. Means head office, branch office. It should not be like that. There should be 2 separate persons. Okay. If these 5 conditions are satisfied, then it will be treated as export of services. You can see this information about export of services in page number 73. Meaning of export of services. You can see that in page number 73. Page 73, meaning of export of services. So, what are the conditions? Total 5 conditions. Supplier should be in India. Recipient should be outside India. Place of supply should be outside India. How the consideration should be? In convertible foreign exchange. But wherever permitted by RBI, it can be in Indian rupees. Next, last condition you see, supplier and recipient are not merely establishments of the same person. Now, in this exemption, if you see, so where is the supplier located? Intermediary in India, Gift City in India. Okay. So, location of supplier, India. What is the location of recipient? Outside India. Location of recipient is outside India. And what is the place of supply? Concentrate. For intermediary services, the place of supply will be location of supplier. So what is the place of supply for intermediary services? Location of supplier. What is the location of supplier? In India. That's why it will not become export of service, because to become export of service, where the place of supply should be? Outside India. But in that exemption, for intermediary services, the place of supply will be location of supplier. Where is the supplier located? In India. That's why it will not become export of service. Are you understanding this? Here 5 conditions should be satisfied. If all the 5 conditions are satisfied only, it is export of service. Then sir, why this case, that gift city example, why it is not coming under export of services? You only tell me why it is not export of services. See there, what should be taken as the place of supply? Location of supplier. See, their services shall not fall under export of services, as the place of supply is location of supplier under section 13 of IGST Act. Got it? Even though it is not export of service, but indirectly it is contributing for bringing the foreign exchange proceeds. For that reason, they have given the exemption. Understood? So, what is the exemption that you need to remember? There is a multi-service SCZ, where in India, in that multi-service SCZ, there is an intermediary. He is providing services to a foreign customer, and they are dealing it what currency other than Indian rupees. So, therefore, they are exempted from payment of GST. Next, look into the 6th point. Business facilitator or agent of business facilitator, business correspondent or agent of business correspondent earning commission from rural area branch is exempted. So, there is a business facilitator, agent of business facilitator, business correspondent or agent of business correspondent. They are working in rural area, just like insurance. Just like insurance we have seen. The same point is in insurance also, correct or not? So, see that insurance. So, just turn the page before. You can see in insurance also, last point we have business facilitator, business correspondent of an insurance company in rural area. This is banking company in rural area. But what is the extra point that we have here compared to that? There only business facilitator, business correspondent. Here agent of business facilitator as well as agent of business correspondent. You understood? That is this. Then next one, healthcare services. So far what we have seen is, first one agriculture sector, second insurance, third banking. Now look into healthcare services. In healthcare services, there are only 2 exemptions. Number 1, see the first point, healthcare services by a clinical establishment or authorized medical practitioner or paramedics, including ambulance service, is exempted. First, we need to understand the meaning of each and every term. Healthcare services, healthcare service is exempted. What is healthcare services means? You can see below, healthcare services means it includes pre-treatment. Pre-treatment means what? Before treatment, what and all they will do? That's what, diagnosis. In diagnosis, what they do? Blood test or X-ray, scanning, MRI, etc. and all. So, that will be coming under diagnosis, diagnosing the patient. That is also healthcare service. Treatment, any surgery or operation they carry out, that is also healthcare services. Post-treatment, post-treatment means care. So, that is after surgery, the patient will be kept in observation. That will be called as care. So, diagnosis, treatment, care. For what? For any disease, illness, injury, pregnancy. Okay? Illness is something which is acquired, and disease something which is hidden, like cancer, etc. Then injury, any accident, pregnancy, in any recognized system of medicine. That is important, any recognized system of medicine. What if it is not a recognized system of medicine? That's not a healthcare service and it will be taxable. It should be in recognized system of medicine, but does not include. What will not come under healthcare services? 3 things will not come: plastic surgery, cosmetic surgery and hair transplantation will not come under healthcare services. Why? It is nowhere related to health. It's nowhere related to healthcare, sir. It is related to mental health, sir. No, yeah. It's nowhere connected to mental health also, yeah. And see, it is like hair transplantation, cosmetic surgery and plastic surgery is not even mental health. You cannot put it anywhere in healthcare service. So, that's why they have excluded it. However, it will come under healthcare when? If these are carried out to restore the anatomy of body parts affected due to congenital defects. Say for example, a person is born with cleft lip. Cleft lip means broken lip. And in that case, so baby will be carried out. That is, they carry out a cosmetic surgery on the baby to connect that lip, so that as the baby grows, it will become normal. So this will be coming under cosmetic surgery. For what reason? To restore the anatomy of body parts affected due to congenial. Congenial means by birth. Okay. Developmental abnormalities during the growth, if they have any issue. So then also they carry out this to restore the body parts. That is also covered under healthcare. Or any injury or trauma. Say they met with an accident and fire accident, completely the face is burned. So cosmetic surgery is carried out. So that will be coming under healthcare services. Is it clear or not? So healthcare service definition: means, includes, excludes. Come on, means three. Diagnosis, treatment, care for anything in any recognized system of medicine. Means you understood. And it excludes cosmetic, plastic, hair transplantation. It includes two. First, ambulance service, transportation of patient in ambulance. Number 2, that cosmetic, plastic or hair transplantation carried out to restore anatomy of body parts affected due to defects, congenital defects, developmental abnormalities, injury or trauma. You have to remember this definition also. So agriculture definition you need to remember, agricultural produce definition you need to remember, even healthcare service definition you need to remember. Okay. Then next one, if you see healthcare services by a clinical establishment. What is a clinical establishment? Any place where the healthcare service is provided. That can be nursing home, hospital, clinic or any other place. Then by authorized medical practitioner. Who is authorized medical practitioner? Minimum qualification is MBBS and registered with Indian Medical Council. Then paramedics is also exempted. Who is paramedics? Those who assist the doctors, like nurse, lab technician, physiotherapist, compounders who are working in the hospital, all their services is also exempted. Okay. So now, what is the first point you remember? Come on. Health services, healthcare services by clinical establishment, authorized medical practitioner or paramedics, including ambulance services. If you observe ambulance services, in healthcare services definition also there is ambulance service. Separately also ambulance service is given. What is the difference? Ambulance may be part of healthcare, may not be part of healthcare. It will always be exempted. Means the hospital which is providing the surgery is providing the ambulance service, part of healthcare, exempted. And an ambulance which is just transporting the patient, but that hospital is not providing any treatment, even then it will be exempted. Right? Lot of private ambulances are there which will just do the transportation of patient, that will be exempted. What is the treatment of transportation of dead body in ambulance? Not a supply, that will come under deceased. Transportation of passengers in ambulance, say an ambulance went to drop the patient, anyhow return it had come empty. For that reason they boarded 4 passengers and collected 500 rupees from each. Whether it will be taxable? Of course sir, it is taxable, no doubt it will be taxable, because that is not transportation of a patient in an ambulance. Okay. Then see this, look into the next chart below. Even though all services provided by hospital is exempted, but the room charges is exempted, provided the room charges does not exceed 5,000 rupees per day. So look into that. Division of room charges divided into 2, ICU charges or other room charges. ICU or CCU, any intensive care charges will be exempted. Other room charges will be taxable if the charges exceeds 5,000 per day. What if the charges does not exceed 5,000 rupees per day? Then it will be exempted. Next. So see the second exemption. So far whatever we have seen is exemption in relation to individuals. Even healthcare service in relation to animals or birds. That is veterinary clinics are there, na vets. So that is also exempted. Animals or birds. Then see this, renting of room to inpatient in hospital up to 5,000 per day and food supplied to inpatient is part of healthcare service and it is exempted. Who are inpatients? Those who are admitted in the hospital is known as inpatient. So even food supplied to them is also exempted. What about food supplied to outpatients, visitors, etc.? Outpatients means those who come for consulting, that will be taxable. Then service provided by consulting doctors to hospitals is also exempted. Consulting doctors means they will not be employees of the hospital, they will be working with multiple hospitals. For example, pediatricians you take. So pediatrician, that is kids doctor, children doctor. So pediatricians will be working in a hospital and they will be collecting, hospital will be collecting 500 rupees per patient as consulting charges. Out of that 500, 300 rupees they share with the doctor and 200 rupees the hospital will retain. 500 rupees collected by a hospital also exempted. Thereafter they share 300 rupees with the doctor, that is also exempted. That is this point. Even though doctor is not directly providing service to the patient, he is providing service through the hospital, that is also exempted. See this, services provided by consulting doctors to hospitals is also exempted. Then next, whether these infertility treatments will come under healthcare services. Infertility treatments, like people who are not blessed with kids, they undergo these infertility treatments called as IVF, in vitro fertilization, or ART treatments. Whether that treatment will come under healthcare service, yes, it's a healthcare service and therefore it is exempted. That's a clarification given. All these are circulars, okay. Services provided by way of ART or IVF to treat infertility is covered under healthcare service and it is exempted. So whatever in the blue font that I have given, all those are circulars, okay. And circulars, what you need to do is that you need to definitely cover that and go, because in exam mostly they will be asking questions on this May attempt, circulars and amendments, because provisions they have exhausted. Students also will know about the provisions, but the circulars and amendments are very, very important. Then exemption with respect to rehab services. So you can see there, who is a rehab professional? The one who is providing counseling in the hospitals or medical establishments or in educational institutions, etc. They are not doctors, but they are rehab professionals. Services provided by rehabilitation professionals recognized under the Rehabilitation Council of India by way of rehabilitation, therapy or counseling, where they will be working. They will be working at medical establishments or educational institutions or rehab centers which are established by central or state government or union territory, and then it is exempted. Remember, if it is a medical establishment, let it be government or private or trust, it is exempted. If it is an education institutions, then also always it is exempted. But in case of rehab center, read. In case of rehab center, they are telling that rehab center should be either government or trust owned rehab center. If there is a private rehab centers, in that private rehab centers, if these rehab professionals are working and earning money, whether it will be taxable or exempted, it will be taxable. See that line below. Services provided by rehab professionals in a private rehab center will always be taxable. Understood? Next, look into entry tickets, the exemption related to entry tickets. So entry tickets, there are few entry tickets which are exempted irrespective of the ticket price, but few entry tickets are exempted if the ticket price does not exceed 500. What are those entry tickets which are exempted irrespective of the ticket price? Number one, so you remember three related to animals, three related to animals. What are they? Zoo, wildlife sanctuary, tiger reserve. Zoo, wildlife sanctuary, tiger reserve. Okay, three related to animals. Next three related to places: museum, national park and protected monuments. Protected monuments like Taj Mahal or like Red Fort, etc. These are protected monuments. For that, entry tickets will be exempted. So total 6 entry tickets irrespective of the price. That may be 500 rupees or 5,000 rupees or 1 lakh rupees also, that is exempted. Got it? What are those 6 pa? First 3 related to animals. What is that? Zoo, tiger reserve, wildlife sanctuary. Then next three, national park, museum and protected monuments. Just these 6 entry tickets you remember. Okay. Next we have 9 entry tickets which are exempted if the ticket price per person does not exceed 500. What if the ticket price exceeds 500? Entirely it will be taxable. What are those 9? Remember this way, 4 performance related. Performance means what? Dance or musical or concert. Musical means a troupe is performing. Concert means one individual person, like E.R. Rahman's concert, Ilayaraja's concert, like that, okay. And next we have theatrical performance, drama, stage shows, etc. or stand-up comedy show, that will be coming under theatrical performance. These 4 is exempted provided the amount does not exceed 500. Under this heading we are discussing. What are the 4 performances? Dance, music, concert, theatrical. Then 4 events. Number 1, circus. Number 2, award function. Number 3, sporting event. Number 4, pageant. Pageant is beauty show, okay. These 4 events, entry tickets is exempted if the ticket price does not exceed 500. What are the 4 events? Circus, award function, sporting event and pageant, okay, pageant. Then last one place, that is planetarium. So in planetarium also. So these are the 9 entry tickets. How much should be the ticket price per person? 500. If it exceeds 500, entirely taxable, or the excess is only taxable? Entirely taxable. Remember, in exemptions chapter, everywhere except incubating services. Except incubating services, wherever the monetary limits we are discussing, if you cross that monetary limit, entirely it will be taxable. For incubating services, also there is a monetary limit. If you cross that monetary limit, the excess is only taxable. You can see that incubating services in the next to next page, point number 9. Incubator and incubating services, page number 45 you can see. Page number 45 you can see incubator and incubating services. So in exemptions everywhere, if you cross the monetary limit, the excess, full amount is taxable, not the excess, full amount. Whereas in this place, if you cross the monetary limit, the excess is only taxable. Now let's try to understand what is this about. Incubate is a place where research is carried out, a laboratory where the research is carried out is incubate, and the owner of that laboratory will be incubator, and the scientist who is working in that, or a person who is working in that incubate, is known as incubatee, okay. Now for example, you take China, which created COVID virus. So the laboratory where it got created, Wuhan, one laboratory they created. So that Wuhan laboratory is incubate. Who is the owner of that Wuhan laboratory? China government. So China is incubator. And the scientist who is creating that COVID virus is incubatee. Is it clear here? And thereafter, I know, COVID only we know. Thereafter in these 5 years, we don't know how many versions have come and went. You got it? So, but all these, it's a man-made virus. It's not something natural. It's a man-made virus and everyone knows that. So this is an example of incubate, incubator and incubatee. Is it clear? Now, so incubatee, that is the one who is working in the incubate, provides services for which they collect some money, that will be exempted. Even if you want to understand it in little bit movie example also I can tell. The Dasavatharam movie you watched, na? You remember? When you were a kid, you would have watched that movie. And in that movie, you know, Kamal Hassan, who will do the research in one laboratory, that laboratory is the incubate. And they create a biotech weapon. That will be, you know, the owner of that laboratory who tried to sell it to Russia will be coming under incubator. And Kamal Hassan, hero, who is a scientist, will come under incubatee. You understood? Incubatee will provide the services for which they receive money. How much it will be so that it is exempted? Up to 50 lakhs. See there. Incubatee services provided is exempted if it is up to 50 lakhs. What if it crosses 50 lakhs? The excess is only taxable, not entirely it will be taxable. And 2 conditions for claiming exemptions. What are the 2 conditions? Previous year, the aggregate receipt should not exceed 50 lakhs and from the agreement date, 3 years not elapsed. Suppose if it is beyond 3 years, the exemption is not available. The exemption is only for a period of 3 years. from their operations. Okay. Now, you can see the illustration below. Gross receipts of incubatee, first year 60 lakhs, second year 40 lakhs, third year 70 lakhs. First year will they get the exemption? First year will they get the exemption? Yes, because previous year how much? 0, which does not exceed 50 lakhs. First year 0 year, previous year 0 means it does not exceed 50 lakhs. So first year by default they will get the exemption 50 lakhs. So what is the taxable value? Only 10 lakhs. Second year will they get the exemption? See the previous year. First year it exceeds 50. So second year you will not get any exemption. Entire 40 lakhs will be taxable. Third year again will they get exemption? See the previous year. Second year how much? 40. It does not exceed 50. So therefore third year also they will get the exemption. And 70 minus 50, 20 lakhs will be taken as the taxable value. Is it clear here? So that is about the taxable value in this case. So what you need to remember, come on tell me, services provided by incubatee is exempted if the gross amount does not exceed 50 lakhs. If it exceeds 50 lakhs, the excess is taxable, and this exemption is for a period of 3 years. And one more condition, previous year the gross receipt should not exceed 50 lakhs. And incubator, who is incubator? The owner of that particular incubate is known as incubator. Incubator services is also exempted. All services provided by incubator is exempted, provided that incubator is approved by government. So if there is a government approved incubator, of course in India we have government approved incubators, only 2, Science and Technology Entrepreneurship Park and Technology Business Incubator. Only 2 incubators are there in India. Both of them are approved by government, so their service will be always exempted. Is it clear? So that is about these incubate and incubator services, etc. Now look into above charitable and religious services. Same page you see above, charitable and religious services. Just now we discussed that there is a charitable trust. That charitable trust is exempted provided they are providing some charitable activities. What are the list of charitable activities which are exempted? If you see in income tax charitable trust, they can provide any activity which is of general public utility, that will come under charitable activity. But in GST they have defined what are the charitable activities, like that they have defined. For these charitable activities, if the charitable trust is earning money, then it will be exempted. So what are those charitable activities? See there. Number 1, read, services by an entity registered under 12AA or 12AB of Income Tax Act by way of specified charitable activities. What is the first charitable activity? Public health. But anyhow healthcare service is exempted now. Correct? Now only we completed. Healthcare service is exempted. Anyhow healthcare service is exempted. Even if the healthcare service is provided by a charitable trust, that is also exempted. Number 2, advancement of religion, spirituality, yoga. Who will be covered under this? All Babas, Swamijis, etc. and all will be covered. All temples are covered, because temples will come under religion, place of religion. Okay. And spirituality, this ashrams, lot of ashrams. Then yoga, so yoga training centers. So this is also coming under exemption. First charitable activity is what? Public health. Second charitable activity, advancement of religion, spirituality, yoga. Number 3, educational programs. To whom? Orphans, physically or mentally traumatized persons, prisoners, and persons over 65 years residing in rural area. There are some NGOs which will go to orphanages and they will be imparting basic education and skills to these orphans. So that money, like they will be collecting some money, these NGOs will get some money from the orphanages, that is exempted. They may also provide educational programs to prisoners, or they may provide educational programs to mentally, physically traumatized persons, or even old people more than 65 years residing in rural area. The money collected from them will be exempted. Okay. Next, environmental preservation. that is wildlife protection or environment protection, etc. These are the only 4 charitable activities which are exempted. Sir, what is this persons over 65 years residing in rural area? That is like basic skills here. In Kerala it is there. In Kerala, lot of villages and all, Kerala government will be asking NGOs to go to those villages and teach them how to read their name, how to sign, etc. and all, because that basic education is towards the literacy drive. So Kerala conducts lot of literacy drives like this, okay. So not like our Tamil Nadu government. So they wanted people to get educated. They want people to read. It should not be always thumb impression. They should know at least sign and read what is there in English, etc. and all. So for that reason, these NGOs will go to rural areas, and night times, like after 6 o'clock like that or 7 o'clock, they will be providing daily 1 hour or 2 hours. So some kind of basic education to them. Definitely not CA coaching, etc. and all. If you do that now, by the time the portion gets completed, they clear CA, they will die also, okay. So not that. So basic education only. So tell me, what are the 4 charitable activities? Come on. Public health, advancement of spirituality, religion, yoga. Number 3, educational programs. To whom? Orphans, prisoners, mentally, physically traumatized persons, persons over 65 years in rural area. Next, last. Suppose if educational program is provided to persons over 65 years in urban area, whether it is exempted? No, that will be taxable only in rural area. Then second point, you see, there is a old age home. That old age home is operated by central government, state government or charitable trust under section 12AA or 12AB of Income Tax Act, and they are providing to residents. What is the age of the residents? 60 years. Be careful. Here they use the word more than 65 years, right there. In the first exemption, they use the word more than 65 years, not exactly 65 years. Can you see there? Whereas in the second exemption, they use the word greater than or equal to 60 years. Please don't get confused, because they will play with this. They will tell exactly 60 years. For old age home, it is exempted. More than 60 years also exempted. Exactly 65 years. Educational programs to residents, rural area, exactly 65 years. Taxable or exempted? Taxable. More than 65 years is only exempted. Understood this? Next, read that point. There is a old age home. That old age home is operated by whom? Either central government, state government or a charitable trust. Under section 12A or 12AB of Income Tax Act, to their residents aged 60 years or more. And how much should be the monthly consideration? It should not exceed 25,000 per month per member, provided that the consideration charged is inclusive of charges for boarding, lodging, maintenance, etc. and all. Okay. So maximum 25,000 rupees per month, then it is exempted. If it crosses beyond 25,000, what is taxable? Entirely it will be taxable. Then services provided by a person by way of conduct of religious ceremony. Who will conduct religious ceremonies? Purohit, priest, church father, etc. And they get some money for conducting religious ceremony. For example, marriage functions. Marriage function free, so Purohit will come. So he will do it for free or he will charge? Charge, sir. Nicely they will charge. And minimum to minimum 25,000 rupees to 50,000 rupees minimum, bare minimum. This is the change. 1 lakh and all they are charging. Awesome, yeah. So this money, maybe keep it as a plan B. Better keep it as a plan B. If it is not working, at least that we will do. You understood or not? And therefore, we can learn that 1 lakh. I know one Purohit, he is conducting only marriage functions. You know what could be his earnings? 1 crore in a year. He is earning 1 crore in a year, subject to tax audit and all. Okay. And 1 crore. And that person is required to pay GST or exempted from GST? Exempted from GST. Because he came to me and asked, sir, I am subject to income tax audit. I want GST return filing and all. I saw your YouTube and all, very nice it was. I want you to file GST returns. I said, Swami, no returns, not required. You are exempted. So why you are exempted? Because person by way of conduct of religious ceremony, whatever may be the amount. Services by specified organization for religious pilgrimage. There are two religious pilgrimages. One is Kailash Manas Sarovar Yatra, second is Hajj Yatra. For these two, if they collect any amount, that will be exempted, okay. But remember, it should be by the specified organization, okay. So we have discussed lot of miscellaneous exemptions. Now we will see one very important one, that is education services. Usually at intermediate level, education services, 4 services are very important for exemptions per chapter. Exemption chapter itself is important, in that I am telling you which is important. Education services, transportation services, government services and import of services, okay. Import of service already we discussed. Remaining and all also important for MCQ purpose or some other. Sometimes a question itself will be coined on these areas, okay. So look into education services. So you can very much connect with this, because major money of your parents you have invested in this area only, correct? Yes or no? Yes, yeah, because everyone. And schooling, what is the starting point? Schooling, what is the starting point? Anything. It can be, we really don't know what is starting point and all. It can be LKG, it can be pre-KG, it can be play school, and trust me, 2 years, 3 years down the line, pregnant women and all will be sent for education institutions. Mark my words. Definitely it will happen. They will tell the moment pregnant woman, the baby, after 4th month, the baby will hear the voice, it seems, okay. They will send IIT, JEE oriented coaching. So they will send, definitely it will happen. Trust me, it is going to happen. And they will tell, now itself they started. I saw some Instagram videos and all, wherein, for pregnant women, they are taking classes. And, baby will listen, it seems. Even she will not understand anything, she is sleeping. So there is a center where pregnant women should go and sleep. And the baby inside will be active. How do you know whether the baby is listening or not? I am also taking class. How do I know whether you are listening or not? Happily you slept for last 1 hour, you slept, okay. How do I know? And these kind of institutions, preschool education, they did not tell which standard, etc. Preschool, it can be starting anywhere. But ending, what is the ending point of school? 12th standard, that is category number 1. See that. Services provided by an education institution to its students, faculty and staff. Category 1. What is category 1 education institution? Up to 12th standard or equivalent. Up to 12th standard or equivalent. Why equivalent? Because in Tamil Nadu, 12th standard is part of school. But in Andhra Pradesh, Telangana, if you see, 11th and 12th is part of college. Even Karnataka also, it is part of college, PUC. And Maharashtra also same, it is part of college. Whereas Kerala, it is part of school. Tamil Nadu and Kerala, it is part of school. That's why they use the word 12th standard or equivalent. Category 1. Category 2. Okay, what's after 12th standard? College. Either UG or PG or professional, correct? Either UG, PG or professional. Professional, the CA or advocate or engineering, medicine, that will come under professional. So either it will be UG, PG or professional. So you are obtaining a qualification. Education for obtaining a qualification recognized by law. So not everyone will be intelligent like you, wherein you chose CA and you came. But what about some people who are not capable of, because we should not push them into CA unnecessarily, correct or not? So we should not tell you do CA, once you come and do CA, you will definitely complete in 3-4 years, and after that, in helicopter you can take your parents for shopping, etc. I don't know which CA is taking in helicopter, and all bullshit only people are telling nowadays, and they will induce us and tempt us to join for CA, and you join. Because you are intelligent, you have confidence on you, you join, and of course you are going to complete. But sir, there are a lot of people who are backbenchers, sir. And what is that they will do? They will not go for college also. Then what is it? Vocational education. Vocational education means skill based. Polytechnic, have you heard of? ITI, ITZ, Polytechnic colleges, Industrial Training Institute, Industrial Training Centers affiliated to NCVT or SCVT. NCVT, like how CBSE State Board we have, for vocational courses we have National Council for Vocational Training, State Council for Vocational Training, like that. Okay. So, tell me what are the three category education institutions. Category 1, up to 12th standard. Category 2, education for obtaining a qualification recognized by law. Category 3, approved vocational education. Any service provided by these three education institutions to its students, faculty and staff is exempted. Any service, bus facility, food service, extracurricular activities, co-curricular activities, ID card fees, application fees, or attendance shortfall fees, everything here, in whatever name, lab fees like that they will collect, building fees like that they will collect, names and all they will invent from time to time. All these fees will be exempted, okay, by whatever name called. From whom? Students, faculty and staff. Now see this, application fee for entrance or fee charged for issuing eligibility certificate. Basically, before joining the college, we will buy the application form by paying application fees. But this application fees is not services provided to students because they have not yet joined. Only when they joined it is students, but they are not yet students. Even then, will this application fee will be exempted? Yes, because this is from the prospective students. Prospective students means they are going to join, that's why they are buying. So the application fees or prospective fees, etc. and all will be exempted. Usually prospectus fees like that also we pay na, that is also exempted. Next, we are leaving the college. When we are leaving the college or leaving the school, we pay some money for transfer certificate, TC, or migration certificate. Whether this fees is collected from students? No, because they are not students, they already left the school. Even then it will be exempted because they are ex-students. Ex-students, therefore it is exempted. See this, application fee for entrance or fee charged for issuing eligibility certificate or fee collected for issuing migration certificate to ex-students is exempted. Okay. Then I have one doubt. There is a boy and a girl who studied in a school, and after their school they have become adults and they are now getting married and they want to have destination wedding in the school. For the sake of that, they took the school premises on rent. School Sunday and all it will not be working, so Sunday they gave their premises on rent. Okay. Now school is getting rent for the purpose of giving their premises to ex-students. They are ex-students only na, then will it be exempted? Because ex-students is exempted, any service provided to student is exempted, whether this renting of marriage hall to those students is exempted. X means not that big X, you understood? X means immediate, maybe within 1 year like that. Not after 10 years when they become adults and they are getting married and all, not that. Okay. Here ex-students, what does it mean? Immediately, maybe within a year when they are leaving, they come back, that case only. Got it? Next. Say, this maths sir and English ma'am is getting married and they take the school place on rent for marriage function. Now, whether the rent collected by the school is taxable or exempted? Exempted, because staff, faculty staff. Services provided by educational institutions to faculty and staff is exempted. Accordingly, the school premises which is given on rent for maths sir is exempted. You understood? Next, for student, for what purpose? That's what I told. Now, X students are not, that big X. That's what I told you. Okay. And why will students take premises on rent? School premises. No, not what you are thinking. Got it? Next. See the second point. Services provided to an education institution. So far what we have seen is services provided by an education institution. First point is by an education institution. Second one is to an education institution. Now education institution is recipient. Remember, transportation of students, faculty and staff, catering, security within the premises, housekeeping within the premises. These 4 services only to category 1 education institution is exempted. What is category 1? Up to 12th standard. What are the 4 services? Transportation, catering, security, housekeeping. That security and housekeeping should be within the premises. Listen carefully. There is an engineering college. That engineering college, they will find one good forest and they will construct there. Now, from the city to that forest, they will only provide the bus facility, and for which they collect the fees, bus fees. Is it taxable or exempted? Exempted. That is services provided by education institution. You are not referring here, you should be referring here by an education institution. So the bus fees will be exempted. Now that college is not operating the bus. They ask Parveen Travels, like one travel operator, to do the transportation, for which the college pays the money to that Parveen Travels. Whether that will be taxable or exempted? Taxable, because services, transportation services provided only to category 1 is exempted, otherwise it will be taxable. Are you getting this? Suppose if a school is providing transportation service to students, it is anyhow exempted because it is by education institution. Now school receives transportation services from a travel agency, whether that is also exempted? Yes, because it's a category 1 education institution. Like that, catering service also, and security and housekeeping service also, but security and housekeeping should be within the premises. Now I'll give you one example, carefully listen. There is a school which is conducting a annual day function in one auditorium, and that auditorium, they have received security and housekeeping services and paid some money by the school. Okay, whether this security and housekeeping service is taxable or exempted? Why taxable? Outside the premises, only for the premises. Within their premises, if they receive security and housekeeping, then only it will be exempted. Now in that auditorium, for the annual day function, they need to provide food to the students. For that reason, they receive catering services by the school. Taxable or exempted? Exempted, because catering nowhere it is given within the premises. Catering can be anywhere, transportation can be anywhere, but security and housekeeping only should be within the premises. The next point you see, admission or conduct of examination. Admission to an education institution means what? Marketing. Education institutions will appoint lot of marketing agencies. What these marketing agencies or PR agencies will do, they will bring in the admissions to the education institutions, for which they get a commission. That commission is exempted. Let it be category 1 or category 2 or category 3. All 3 category institutions it is exempted. Then conduct of examination. Can you give me examples? Conduct of examination. You are providing services to education institution by way of conduct of examination. Huh? No, I am talking about what service you provide. You are providing service to education institution by way of conducting the examination. Invigilator services, then paper correction, evaluator, paper setter, renting of place for conducting exam. You understood? All these are services by way of conduct of exam, but this is exempted for all 3 category institutions. Then online periodicals and journals. In case of online periodicals and journals, so for which category institution really it is required? Online educational journals, etc. and all. Category 1 is it required? Category 3 it is required. If they are able to read, why will they go for skill education? Yeah. So therefore category 2 only. So that's why for category 2 only it is exempted. Is it clear? So first point by, second point 2, into first 4 transportation, catering, security, housekeeping only for category 1. Then next admission to or conduct of examination, all 3 categories, and then online educational journals and periodicals, category 2. See this, exemption is provided to, that is Anganwadi schools. Have you heard of Anganwadi schools? Correct. So what is that they do? They provide daycare, correct? Preschool education. So Anganwadi schools will provide preschool education, daycare like that. And they also provide food to the kids. They provide food facility to the kids, and they receive outdoor catering service to provide the food to the kids there. Whether this catering service provided to Anganwadi school is taxable or exempted. Why? Because Anganwadi schools come under category 1 and catering service provided to category 1 is exempted. That's why. Read this circular. Exemption is provided to services supplied to an education institution including Anganwadi, which provide preschool education also by way of serving of food including midday meal scheme sponsored by government irrespective of the funding. It may be from government grants or corporate donations. Okay, so let him sleep, no issue. So government grants or corporate donations, that will be coming under exemption. So Anganwadi schools may not pay money out of its pocket. They don't have money. Actually, they are not charging any fees from the kids, but they get the donations from corporates or they get government funds. Using that, they will be paying. That will be exempted. That is this. Then next, third point, IIM's Indian Institute of Management. Is it an education institution? Yes, IIM is an education institution, but they offer 2 types of courses. One is regular qualification courses, more than 1 year, where they give diploma or degree, that is a qualification. So it is exempted. They also provide short-term courses like executive program for employees who are working in the organizations like that. They provide short-term courses like 3 months, 6 months like that courses, for which there is no diploma or degree etc. Just a certificate they will give. So that will be taxable. Suppose if they offer any course less than or equals to 1 year, where a participation certificate is given, that will be taxable. Understood the third point? Next, fourth one you see. There are some educational bodies or like examination bodies which will conduct only entrance exam. They will not give any admission etc. and all. You need to write the entrance exam, get the score. Based on that score, you can go and join in the college. Like NEET, IIT, JEE, etc. wherein they will only conduct the entrance exam. NEET exam, if you see, that examination board is National Board of Examination or National Testing Agency, which will conduct the NEET entrance exam for medical aspirants, and we need to write the NEET exam, and thereafter they will give us a score. So with that score, whichever college, that is rank they will give. Depending upon the rank, whichever college is accepting our rank, we can go and join in that particular college. That is called as counseling. Now the question is whether this National Testing Agency, which conduct only the entrance exam, whether the fees collected by them is taxable or exempted. Generally, entrance exam fees is exempted if it is collected by a education institution. Please listen. Generally, entrance exam fee is exempted if it is collected by an education institution. Whether this National Testing Agency will come under education institution, for that they gave a clarification that yes, National Testing Agency and National Board of Examinations are also education institutions for the limited purpose of conducting the entrance exam, because without that entrance exam you will not be getting admission in the college. Means it's a part of curriculum, correct? It's a part of curriculum. So please read this. Services provided by an education institution by way of conduct of entrance examination against consideration in the form of entrance fee is exempted. Now central and state education boards are treated as education institution for the limited purpose of providing service by way of conduct of examination. Therefore, National Board of Examination or National Testing Agency is an educational institution in so far as it provides service by way of conduct of entrance exam to the students. So, therefore, it is exempted. Got it? Then, look into point number 5. Amount paid to training providers under Deen Dayal Upadhyaya Grameen Kausalya Yojana, DDUGKY scheme. Under DDUGKY scheme, so government will recruit lot of volunteers and NGOs, will be sending them to the rural area to provide the skill development for the unemployed youth there, for which government will pay some money to these NGOs, that is this DDUGKY scheme. Whether the money collected under this scheme is exempted, yes. Read it once again. Amount paid to whom? Training providers. What these training providers will do? Will go to rural area and train. And they are covered under which scheme? DDUGKY scheme, for providing training in relation to vocational education courses. Then number 6. So when you see DDUGKY, exempted. You understood? Next, number 6. This is an amendment here. Any service provided by National Skill Development Corporation. So see this. In India, NSDC is the supreme institution or body for skill development courses. Today, you see lot of skill centers or skill development centers or coaching centers which are offering skills, etc. But the point is that all these centers should be covered under NSDC. It is like there is a school. When you call it as a school, if it gets a government recognition, correct? Otherwise, you will not call it as a school. Understood? It is just a tuition center. Agreed? Same way, skill centers also, not every skill center is called as a approved skill centers. To get the approved mechanism, there is a government body. What is that government body? NSDC. Under this NSDC, National Skill Development Corporation, we have sector skill councils. For every sector, they created one council. For all management related, that is our related, management, finance related skill courses, we have MEPSC, management, you can see, management and entrepreneurship and professional skill council for our commerce related, all finance related courses. Like that, for one sector they created. For aeronautical, one sector skill council, for logistics, for data entry operators, like that. Now, if you go to this, there we have lot of partners, that is 3 type of partners will be there. Assessment partners, training partners, awarding partners. Assessment partners means they will conduct the exam. Training partners means they give the coaching. And awarding body means they will give the certification. These 3 people collecting any fees will be exempted. And whether it is approved or not, you can see. So you can just go to training centers. So only these people are approved. If you see the list here, then they are approved. Otherwise, they are not approved. Don't spend your money waste. Don't waste your money. You understood? So any skill center, you can definitely learn skills. Nothing wrong in learning skills, but that should be there in this list. So there are 3 people. Who are those 3 people? Awarding body. What awarding body will do? Certificate. Assessment agency, what will they do? Conduct the test. Training body, what will they do? Provide the coaching. So money collected by these 3 people will be exempted. Can you remember this year? This is the latest amendment, May 25 amendment. NSDC, National Skill Development Corporation. They are under National Council for Vocational Education and Training. They provide services for any scheme implemented by NSDC or vocational skill development course or any national skill qualification. The money collected by them is exempted. Then point number 7, services by assessment bodies under skill development initiative scheme. So just underline skill development initiative scheme. If you see that word skill development initiative scheme, it is exempted. In skill development initiative scheme, they create some assessment bodies. What they do is that they review the curriculum. So skill courses they will review and they will suggest the changes. For doing that, they will be paid some money by government, that is exempted. Then 8th one, this is a latest amendment, that is affiliation services. Generally, to get the recognition, we need to pay affiliation fees. Many places you would have seen one college affiliated to Madras University or affiliated to Anna University, like that and all they will be mentioning. Na? So to get the affiliation, we need to pay the affiliation fees. Even schools also should pay affiliation fees to state board, state education board or CBSE, they need to pay the affiliation fees. But not all affiliation fees is exempted. Read that and tell me whether a school paying affiliation fee, a private school which is paying affiliation fee to the CBSE board is taxable or exempted. Read that and tell me. A private school paying affiliation fee to CBSE board, is it taxable or exempted? Taxable. Why it is taxable? Because if you read the wording, they said affiliation services provided by central or state education board, means CBSE or state board, got it? CBSE or state board to a school, that school is established, owned or controlled by central government, state government, local authority. GA means government authority, GE means government entity. GA means government authority, GE means government entity. Okay. Now, Kendriya Vidyalaya, like that one school you would have seen, central government school, like that corporation, state owned schools, corporation schools or state government controlled schools will be there. All these schools also should pay the affiliation fees to CBSE and state board. That fees collected by them is only exempted. But a private school paying affiliation fees will be taxable. Okay. You just write down there, note, affiliation fee payable by private schools, affiliation fee payable by private schools, affiliation fee payable by private schools is taxable. Affiliation fee payable by private schools is taxable. Okay. Then see this point. These are some additional points. First one, fee collected by ICI or ICMI is exempted as they are education institutions, correct? However, fees collected by coaching centers or individual faculties, why it will be taxable? Because they are not giving qualification. See, how much ever you may attend coaching with any private coaching center or any teacher, you get a qualification na, after you complete intermediate or final. In that, whether the coaching center name will come, whether the faculty name will come, no. So then we are not recognized. No one is recognized here. No one is recognized here to provide the coaching. That's why the coaching fees will be taxable. What if the same coaching you are attending in ICI? Exempted. Exempted, because ICI is an educational institution. So it is exempted. That's what I told you, registration fees is exempted, exam fees is exempted. ICI also will do coaching. That coaching is also exempted. Okay, say this. However, fees collected by coaching centers or individual faculties is not exempted, that is taxable. Up to 12th standard, it can be any board. That is, what is category in one education institution? Up to 12th standard. Which board it should be? Either state board or CBSE, or it can be ICSE, that is, international schools. So CBSE, state board, matriculation, ICSE, etc. What about private tuitions and home tuitions? Taxable. We don't have any exemption, but mostly they will not cross the threshold limit of 20 lakhs. Individual school teachers will be there now who conduct tuitions and all. So they will not cross 20 lakhs. If they cross 20 lakhs, why will they be into school? They will open happily tuition center and they will survive. So their salaries will be somewhere like 25,000 to 50,000 per month. If you take year also 6 lakhs only, and through tuitions they will be earning some 10,000 rupees or 20,000 rupees like that. Definitely they will not cross aggregate turnover, etc. Got it? And private tuitions or home tuitions are taxable, but if they are registered, they will pay GST, otherwise they will not pay GST. Approved vocational education means a course run by Industrial Training Institute or Industrial Training Center affiliated to NCVT, SCVT. So here, if you see category 3 education institution, what is category 3 education institution? Approved vocational education. So what is the meaning of approved vocational education? A course run by whom? ITI. ITI means Industrial Training Institute, or ITC, Industrial Training Center, affiliated to NCVT or SCVT. What is NCVT means? I told you, like how CBSE State Board we have National Council for Vocational Training, State Council for Vocational Training, offering any courses or modular employable skill course under Ministry of Skill Development and Entrepreneurship. So under Ministry of Skill Development, if there is any person, that person also will come under approved vocational education, and that is exempted. These are the various exemptions with respect to education services. Okay, we completed this. And so look into one small area, 5 minutes, thereafter we will leave. Look into this, pension services, page number 44. Page number 44, pension services. In pension, what will happen? So usually monthly some amount will be collected. In pension scheme, what happens? Monthly some amount will be collected. It is called as SIP plus SWP, systematic investment plan plus systematic withdrawal plan. Monthly some amount will be collected and they will create a fund. Thereafter, post retirement, out of that fund, monthly an amount will be paid. That is called as a pension scheme. There are a lot of pension schemes which are available in India. Private people are also offering, but only 2 pension schemes monthly contribution will be exempted. What are they? Atal Pension Yojana, which is a central government pension scheme, like that state government notified pension scheme, only these 2. If it is a government pension scheme, it is exempted here. Is it clear? So either Atal Pension Yojana or state government operated pension fund. Then services by specified organizations. You just need to remember these organizations. If they collect any amount, that is exempted. What are those organizations? ESIC, Employee State Insurance Corporation, Employee Provident Fund Organization, they will collect Provident Fund, employer contribution, employee contribution. NCCCD, National Center for Cold Chain Development, for the purpose of providing assistance in establishing cold chain. Cold chain means what? A place to store the agricultural produce, that is that. Then Foreign Diplomatic Mission in India. Who is Foreign Diplomatic Mission? You can see there UN agencies. What are UN agencies? UNESCO, UNICEF, WHO, these are some UN agencies. Then consulates are embassies. Consulate will provide the visa to visit their country, and embassies will be providing services to the foreign people who are coming to India. So Indian embassy will be outside India, foreign embassy like Russian embassy, US embassy, etc. and all will be in India. Their citizens will be coming to India. If they need any assistance, they will be providing services to their citizens in India. But consulates will provide services to Indians to leave the country to visit their country. So all these are exempted. Foreign Diplomatic Mission, what are they? UN agencies, consulates or embassies. Then CMPFO, Coal Mine Provident Fund Organization. EPFO is a normal provident fund. In salaries you would have studied public provident fund, PF contribution by employer employee, no, that EPFO. For workers who are working in coal mines, so there will be Coal Mine Provident Fund Organization, so that is also exempted. So these are the specified organizations. If they collect any amount, that amount collected by them will be exempted. Okay. So we completed all these things: charitable, incubator, education services, etc. And afternoon we'll meet at 2:15 and we will discuss some practical questions on education services, etc. and we will discuss remaining exemptions. So we have advocate services, transportation services, government services, etc., which are very, very important areas, so that we will see in the afternoon. Question number 5. Question number 5. You see in page number 51. Question number 5 in page number 51. ICICI Lombard General Insurance provides coverage for the coconut palm insurance scheme. Coconut palm insurance scheme. Is it a government notified scheme? Yes. So I told you general insurance services provided by an insurance company under government notified scheme is exempted. What are government notified schemes? Number 1, to agriculture and farmers, to below poverty line, and then women. So therefore it will come under agriculture and farmers, therefore it will be coming under exempted. Okay, so insurance service is exempted. Coconut palm insurance, a government sponsored scheme. The scheme is exempt from GST, and in October 2024, to manage its risk, ICICI Lombard enters into the following reinsurance arrangements. Situation 1, ICICI Lombard cedes a portion of the risk associated with the coconut palm insurance scheme to General Insurance Corporation of India, another Indian reinsurer. The reinsurance premium for this transaction amounts to 4 crores. And situation 2, GIC Reinsurance in turn cedes a part of the reinsured risk to Munich Re, a cross-border reinsurance based in Germany. This transaction is classified as retrocession. First, so whether this insurance is exempted? Yes. So ICICI Lombard cedes a portion of the risk associated to General Insurance Corporation. They get a premium. What is your answer for this 4 crores? It is exempted. Why? Because as the main insurance service is exempted, its reinsurance service is also exempted. Then again, I told you one circular. What is that? Retrocession. So retrocession of the reinsurance, that is reinsurance, they will again take reinsurance. Even that is also exempted. As this reinsurance is exempted, even retrocession is also exempted. See the next one. GIC Re E in turn cedes a part of the reinsured risk to Munich, a cross-border reinsurer. So whether the money collected by them also exempted? Yes. So both are exempted in this case. Then look into question number 6. This is related to that Indian establishment of a foreign airline company, like that we discussed now. Connecting that and import of services, how they can coin a question. See this. Question number 6. Air Europa Limited, India, the Indian establishment of Air Europa Limited, a foreign airline company incorporated in Spain, provides various services as a part of its operations in India. So where is Air Europa Limited located? In India. And it is importing services from its holding company. Where is that holding company? Spain. The airline company imports certain administrative and operational services from its head office in Madrid, Spain, without any consideration. These services includes IT support, financial management, legal advisory service, and staff training. Compute the value of taxable supply on which Air Europa Limited is liable to pay GST under FCM or RCM. First, passenger transportation services. What is it? Passenger transportation services? Normal, they are outward supply, correct? It's not an import of service. Please concentrate. Air Europa Limited is providing transportation services. That's their outward supply. Normally it will be taxable. Is it clear? We have studied exemption for what? Only import of services, that too from their head office without consideration. Is it import of services? No. Normal. So whether it is taxable? Yes. Cargo transportation service also taxable. Now they have given some data, and see the last line. Compute the value of taxable supply and GST payable if the rate is 18%. So we need to compute the GST payable. What will be your answer in the above case? If Government of Spain is not giving any exemptions to Indian airline company operating in Spain. So I told you import of services will be exempted from the head office, provided there is a reciprocal exemption given by foreign government to Indian establishment, that is foreign establishment of the Indian airline. Got it? Now this question, if you see the answer directly over there, you will not be able to learn. So that's why we will do the answer for this question. It's a very good question. So let's make note of the answer. Okay, already answer is there, but I want you to write once so that you will know the application of it. Okay. So take your notebook. I'll dictate, you try. Okay. Take your notebook. And prepare a table, particulars and 2 columns, particulars and 2 columns, make it like all 3 equal columns, particulars, 2 columns, and in particulars column, next second column, if Government of Spain gives reciprocal exemption. First column heading is particulars. Second column heading, if Government of Spain, that is, instead of doing 2 separate computations, we are doing it in one single table. Okay. If Government of Spain gives reciprocal exemption, if Government of Spain gives reciprocal exemption, first column particulars pa, second column heading I am telling you, second column heading, if Government of Spain gives reciprocal exemption. Thereafter, third column heading, if Government of Spain is not giving reciprocal exemption. If Government of Spain is not giving reciprocal exemption. If Government of Spain is not giving reciprocal exemption. Now in the particulars you write down passenger transportation services. Passenger transportation services. Passenger transportation services. Let it be Government of Spain giving exemption or not giving, this point is not having any impact, correct or not? So therefore they need to pay GST, and that is their outward supply. Am I right? First we are writing outward supply liability, that is their outward supplies. So transportation of passengers is their outward supplies, agreed? Passenger transportation, go to both the columns, update 2 crores into rate of GST 18%. 2 crores into 18%. What is 2 crores into 18%? 36 lakhs. Both the columns you write 36 lakhs, 36 lakhs. 36 lakhs and 36 lakhs. Are you understanding? Next, second transaction. What is the second transaction? Cargo transport service. That is their outward supply now again. So write down cargo transport service. Cargo transport service. Both the columns you update 1 crore 50 lakhs into 18%. That is 27 lakhs. 1 crore 50 into 18%, 27 lakhs, 27 lakhs. Both the columns. Next, say this, IT support services imported, means it's a inward supply, correct? Inward supply. Then legal advisory service imported, that's a inward supply. Catering service received, that's a inward supply. So far what you have calculated is only GST payable on outward supply. So total it. Gross GST payable, in particulars write down, gross GST payable. Gross GST payable under FCM, gross GST payable under FCM on outward supplies. Gross GST payable under FCM on outward supplies. What is that? 36 plus 27, 63 lakhs, 63 lakhs. No change in the answer up to this, correct? Now we need to see inward supply, whether there is any RCM liability or not. Okay. So far what you have computed is the FCM liability. It is on outward supplies. Now where they have some inward supplies. On that inward supplies we need to check their RCM liability. Got it? Now first point you see, that is IT support services. IT support service import from head office in Madrid without consideration. Is there any exemption in this case? Open market value is 25 lakhs. Is there any exemption? Is there any exemption? That's what we started. There is an Indian establishment of a foreign airline company. Indian establishment of a foreign airline company. See properly. Indian establishment of a foreign airline company. Importing service. With the disclaimer only I started. What, you slept off or what? With the disclaimer I started. Whatever we are discussing now is an exemption related to Indian airline, foreign establishment, etc. and all. And you are telling no exemption. Properly read here. Properly read. Indian establishment of a foreign airline company is importing services for consideration or without consideration? Without consideration. And do we have a reciprocal agreement? Yes, that's the heading you have written. So therefore it will be exempted. Write down. IT support services. IT support services. First one you did na, total. You underline that. That's over. That's the first statement. Next statement continuing we are doing. IT support services imported. IT support services imported from head office. IT support services imported from head office. In the next column, you write exempted. Why exempted? Because there is a reciprocal agreement, reciprocal exemption. Thereafter, next column, you need to compute the liability. Why you need to compute the liability? It is not exempted if we don't have a reciprocal exemption, correct or not? And it is what services? OIDR or other than OIDR? Other than OIDR. Imported by whom? NTR or other than NTR? Other than NTR, because NTR means non-taxable recipient, individual, trust, government, but it is Air Europa Limited, other than NTR. Therefore, it will be taxable under RCM. So, right there, 25 lakhs into 18%. In the last column, you write, second column, don't write anything, exempted. In the last column, you write 25 lakhs into 18%. How much? 4,50,000. Are you getting this? Next one you read. Next one you read. Legal advisory services imported from head office in Madrid for consideration. What is your answer? If there is a reciprocal exemption, if there is a reciprocal exemption given by that country, government of Spain is giving the exemption, what is your answer? Taxable. Taxable. Read properly. It is for consideration. The exemption is available only when it is without consideration. I told you this logic also. Why they are giving the exemption? Because the foreign exchange is not going outside India. That's the reason why they are giving exemption like that I said. But this is for what? For consideration. So no exemption. Is it clear? So write down. Legal advisory services imported from head office. Legal advisory services imported from head office. In brackets write down, in particulars column itself, no exemption. Why no exemption? No exemption as the import of service is for consideration. No exemption as the import of service is for consideration. Next, so both the columns we need to pay GST. How much? 20 lakhs into 18%, 3,60,000. 20 lakhs into 18%, 3,60,000. Both the columns, okay. Next one, read. Marketing services imported from Google Incorporation for a consideration. Is it from head office? It is from some other person. And that to what service it is? OIDR services. Imported by whom? NTOR or other than NTOR? Other than NTOR, because they are registered in India. Is it clear? Air Europa Limited, India, the Indian establishment. So definitely they are registered. Sir, how they are registered, sir? Yesterday only I told you. What is the threshold limit for registration? 20 lakhs or 40 lakhs, correct? What is their turnover? 2 crores, 1 crore 50 lakhs. You understood? They are providing 2 crores and 1 crore here. So definitely they are registered, correct? So OIDR services imported by NTOR or other than NTOR? Other than NTOR. So therefore it will be taxable under RCM. Write down. Marketing services imported from Google. 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 In brackets write down OIDAR services. OIDAR services by. OIDAR services by other than NTOR. OIDR services by other than NTOR. Next column, GST payable, how much? 15 lakhs into 18%. 2,70,000. Both columns 2,70,000, 2,70,000. Now, next one you see, catering service received from a person in India. It is not an import of service within India. So, we don't have any RCM related to this. Okay. Now, you do the total of that. What is the total? GST payable under RCM. So, next column total, how much? 6 lakh 30. Thereafter, next column total 8 lakh 10 lakh 80,000. 6 lakh 30 and a 10 lakh 80. You write it as GST payable under RCM. That is your RCM liability. GST payable under RCM. So, usually 14 marks question like this comprehensive questions we get 10 marks questions. Whenever you get a 10 marks questions, the same presentation you need to follow. You need to prepare the answer in 4 steps or 4 statements. Statement number 1, gross GST payable under FCM. First you need to take your FCM liability, that's what we did in this. Then number 2, GST payable under RCM. RCM liability we need to take, that is the second statement. Third statement is ITC, computation of ITC. Okay. So write down, next line. Can we take all inward supply GST paid as ITC? Yes, but only thing, this IT support service, legal service, marketing service, all these things we can take as ITC, but this catering service ITC cannot be availed. Why catering service ITC cannot be availed? Because catering service is a blocked credit. So outdoor catering is a block credit, due to that reason we cannot take ITC. So write down, next line, computation of ITC, side heading, computation of ITC, computation of ITC. You continue the table full it will continue. In particulars write down computation of ITC, side heading, underline that, and below write down GST paid under RCM. Can the GST paid under RCM be taken as ITC? Yeah, when you pay GST under RCM, that is your inward supplies. When it is your inward supplies, definitely GST paid either to the supplier under FCM or you pay GST under RCM, you can take as ITC. What is input tax credit? What is input tax credit? GST paid on inward supplies. Okay, so right there, GST paid under RCM. What is the GST paid under RCM? 6 lakh 30, 10 lakh 80. 6 lakh 30, 10 lakh 80. Next one you write down, catering services. Catering services. In both the columns you write down blocked ITC. It's a blocked ITC, you cannot take ITC on that, blocked ITC. Now, so ITC total same, 6 lakh 30, 10 lakh 80. Now fourth statement. What is the fourth statement? Net GST payable. How to compute net GST payable? Listen, how to compute net GST payable? First we need to take, so for computation of net GST payable, first we need to take gross GST under FCM. Gross GST under FCM, that is first. After you take gross GST under FCM, we need to reduce input tax credit utilized. So ITC we need to adjust. Thereafter we need to add RCM liability. Why like that? Because ITC we cannot use for payment of RCM liability. Is it clear? Input tax credit we cannot adjust against RCM liability. So that's why we need to follow this order. First, gross GST payable under FCM, right there, gross GST payable under FCM. Copy paste, first statement. What is the first statement? 63 lakhs, 63 lakhs. Minus ITC utilized. Third statement, minus ITC utilized. 6 lakh 30,000, 10 lakh 80,000, that you need to reduce. Then add RCM liability. Then add RCM liability. Second statement, same. 6 lakh 30, 10 lakh 80. It's a coincidence here. Why it's a coincidence? RCM liability and ITC is same. Otherwise it will differ. Is it clear? And this is known as net GST payable. Net GST payable. So what is a net GST payable? 63 lakhs and 63 lakhs. Is it clear? It is just a coincidence here. It's just a coincidence here. Not necessary that always it is like that. Here ITC equals to RCM liability. Sometimes ITC may be more than the RCM liability. So I'll give you one situation. You need to answer this. Look into the screen. Look into the screen. FCM liability is 8 lakhs. FCM liability is 8 lakhs. My RCM liability is 2 lakhs. And my ITC is 9 lakhs. My ITC is 9 lakhs. Tell me what is the net GST payable? Huh? 1 lakh is wrong answer. That's what. Entire story I am telling you and you are doing the same mistake. So, why you do the same way? It should not be like that. 2 lakhs is the answer. Ayya, first you need to take FCM liability. What is the FCM liability? 8 lakhs. Minus ITC utilized. How much is the ITC? So, how much you can utilize? 8 lakhs only you can use. Your liability is 8 lakhs means how can you use 9 lakhs? Are you getting? You can use only 8 lakhs. And then you need to add RCM liability. How much is RCM liability? 2 lakhs. Therefore, net liability will be 2 lakhs. Write this. Write this. Illustration. Illustration like that you write. Illustration. FCM liability of a person, rupees 8 lakhs. FCM liability of a person, rupees 8 lakhs. FCM liability of a person, rupees 8 lakhs. RCM liability of a person, rupees 2 lakhs. RCM liability on what? Inward supplies. FCM is on your outward supplies. RCM is on your inward supplies. FCM liability 8 lakhs. RCM liability of a person, rupees 2 lakhs. ITC available, rupees 9 lakhs. ITC available, rupees 9 lakhs. Compute net GST payable. Compute net GST payable. ITC rupees 9 lakhs. Compute net GST payable. Compute net GST payable. What is the net GST payable? 2 lakhs. How? First you need to take FCM liability, that is 8 lakhs. And from that 8 lakhs, we need to reduce ITC utilized. Okay. So from this 8 lakhs, that is FCM liability, 8 lakhs minus ITC, only 8 lakhs. We cannot deduct beyond this. And then you add RCM liability. What is that RCM liability? 2 lakhs. So that's where you will get net GST payable as 2 lakhs. Net GST as 2 lakhs. It's not 1 lakh. Understood? Yes. Excess ITC carried forward. What is excess ITC carried forward? 1 lakh. What you can do with that 1 lakh? Next month you can adjust against your FCM liability. Remember, always ITC can be adjusted against my FCM liability, not against RCM liability. Okay. So excess ITC carried forward. For how many months we can carry forward this? No limit. We can carry forward. Till the time the business is in existence, we can carry forward. Okay. Next. You understood now these two questions on amendment? So what they can do, amendment they can connect with computation of net GST payable, and they can make a question for 5 marks or 10 marks also. Okay. Now We will see the next area. Please take transportation services. Transportation services. Transportation of passengers. Page number 54. Page number 54. We have two charts in page number 54 and 55. One is transportation of passengers, another one is transportation of goods. First look into transportation of passengers. Following are exempted. So I have divided the modes into 4. So what are the 4 modes? Either railways, airways, waterways or roadways. Now what we are learning is only exempted. So remaining cases it will be taxable. Is it clear? Whatever we are learning now is exempted, exempted transportation. Balancing figure will be taxable. Look into railways. In case of railways, what is exempted? See there, other than first class or any AC. Other than first class or any AC is exempted. Means AC is always taxable, first class is taxable, other than AC or first class. What is other than first class or AC? Second class AC taxable? Yes, AC always taxable, AC always taxable. Sleeper class, general ticket, that will be coming under second class sitting, that will be exempted. Got it? Next, metro, mono, tramway, always exempted. That may be AC, non-AC, where there is non-AC metro, AC only. So metro, mono and tramway, always it is exempted. Metro you know, monorail is like bullet train. So it is there in India, in Mumbai it is there, monorail. So in monorail there will be only single track in the sense like this, okay, like a bridge it will be, like a bridge it will be, on that it will go, okay. So that is called as monorail, okay, and this is also exempted. Tramway, it is there even today in Calcutta, that is in the road itself they lay down the track. That is tramway. Even we have aerial tramway in Palani temple. So Palani, if you see, there is a, on the top of the hill there is a tram, okay. They lay down a railway track kind of and they will go. That is, that they will be taking the passengers, that is called as tramway. So tramway, monorail or metro, it is always exempted. First one is what here? Other than first class or AC. Second, metro, mono, tramway. Then look into this. Notified services provided by Indian Railways to individuals. That's the latest amendment. Previously, platform tickets was taxable. Platform tickets, whenever we buy, it was taxable. Even sometimes we go early to the railway station. Now a lot of people and all, if you see what they do, suppose train is in the evening, no, morning itself they will go, and afternoon lunch and all they will do in the railway station itself. Evening snacks, everything they will complete and they will go. I don't know what enjoyment they will be getting. I see a lot of Vadakkans doing this kind of things and all, okay. And they spoil the railway station completely. So they make things nasty, and maybe at their home they don't want to spoil things. So that's why they are spoiling railway station or what, we don't know. And this waiting halls will be there. Waiting hall in the sense like one room they will construct AC waiting hall and they collect some charges for that. Whether these AC waiting hall charges, suppose if you go early and all, you can stay there. Previously it was taxable, now it is exempted. Then clock room charges. Clock room charges means luggage you can keep and for which they collect some nominal amount. Again, that was previously taxable, now they have made it exempted. Battery operated car services, that is inside the railway station there will be buggies, like small vans will be there, and old people or a lot of people will be transported, but they collect some amount for that. Previously it was taxable, now it is exempted. You read this. Notified services to individuals, what are they? Sale of platform tickets, facility of waiting room, clock room services, battery operated car services. These activities are now exempted. Understood railways 3 exemptions? Come on, first one. other than AC or first class. Number 2, metro, mono, tramway. Number 3, notified services. To whom? Individuals. What is that? Sale of platform tickets, waiting room, clock room, battery operated car services. Then airways. Looking to the next one, airways. In case of airways, if the starting point or ending point of the passenger is in northeastern states or Bagdogra in West Bengal, and if it is economy class, then the train ticket is exempted. Say for example, you want to travel from Chennai to US. When you want to travel from Chennai to US, the ticket cost will be approximately 1 lakh. On the top of that, you need to pay GST also. Now, you buy 2 tickets. Ticket number 1 from Chennai to a place in northeastern state or Bagdogra in West Bengal. That ticket will be exempted. Why that ticket will be exempted? Because ending point of the passenger is in that place. Okay. Again, you buy another ticket from there to US. Some connecting flight, you book another ticket. So that ticket also exempted. Why? Because the starting point of the passenger is in that place. So you can complete the journey without paying 1 rupee of GST also. Got it? And mainly to develop the airports in this area, they have brought in this exemption. But this exemption is applicable only if you are traveling by economy class. If you travel by business class, this exemption is not applicable. Are you understanding this? So what you need to remember, if starting point or ending point of the passenger is in northeastern states or Bagdogra and West Bengal. What are northeastern states? MMTN, ASAM. MMTN, ASAM. MMTN is Manipur, Mizoram, Tripura, Nagaland. A, Assam. Yes, Sikkim. A, Arunachal Pradesh. And M, Meghalaya. So these are the northeastern states. MMTN, ASAM. It is there below. Okay. Next, look into the next exemption for airways. Consideration as viability gap funding for 3 years. What is this viability gap funding? Airline will receive money from government if they are operating in certain regional connectivity airports. There are a lot of airports in India which are not that much functional. Why it is not functional? Because people are not using the airport, means they are not booking the flight. Why people are not booking the flights? Because the flight ticket is high, because of which they are not booking. And if the flight ticket is low, will the people travel? Definitely they will travel. Simple here. Tiruchi, there is an airport. There is an airport in Tiruchi, in Tamil Nadu. And Tiruchi to Chennai, so if the flight ticket is 750 rupees, will people travel or will not travel? Definitely they will travel, sir. Sir, bus itself, during peak time they are charging 1000 rupees, sir. And if you see trains and all, so trains, second class AC and all, if you see, automatically it will be somewhere in this range only. Got it? So then, why the hell I should not travel if it is 750 rupees? Even if it is 1000 rupees, I will travel. But they are charging 2500 rupees, so I will not travel. You understood? Now what government will tell to the airline? Boss, you operate at 1000. Sir, but I am incurring loss, sir, if I operate at 1000. Don't worry. The viability gap. What is the viability gap? What is your sale price? 2500. Now you operate at 1000. What is the difference? That viability gap will be funded by government. Means airline will receive a part from the government and part from the passenger. How much they received from passenger? 1000. How much they received from government? 1500. That money which is received from the passenger will be taxable. But the gap, what is that gap? 1500 received from government will be exempted. For how many years it will be exempted? 3 years. Means this funding is given by the government for 3 years only? No. They may give it for 10 years also, but the exemption is only for 3 years. And what is the benefit out of this to the government? Simple, when people start using it, they will be accustomed to it and they will never travel in train, definitely. Because the moment we see the luxury, we will never come backwards. That's sure, that's a consumer behavior. Usually when people, once they travel in flights and they see the luxury that they get, time, everything. So they prefer train, like flight only, they will not come back to train unless extreme situations. That is the change in consumer behavior government wants. So because of which more people will use. When more people uses, even when 1000 becomes 1500, 2000 also people will start using, so that airport will become profitable. That is the intention behind giving this. Okay. So tell me what are the two exemptions for airlines? Come on. Number one, starting point or ending point is in Bagdogra or West Bengal, economy class. Number two, consideration as viability gap funding for a period of 3 years. Then next, in case of waterways, you see inland waterways. Inland waterways means what? Rivers. Rivers. Through rivers, if the people are being transported, then that will be exempted. It may be for any purpose. It may be tourism or it may be for public transportation. In Kerala, lot of places, the connectivity is through river only. So people will be transported through rivers, and that will come under inland waterways, that will be exempted. And even tourism purpose also they use boating. So in rivers they use boating. Backwaters will be there na, sea backwaters. Okay, in that backwaters they do boating. That boating will also be coming under exemption because it is inland waters. That can be for public transport or that can be for tourism purpose. But coastal waters, what is the difference between inland waters and coastal waters, sir? Coastal waters means sea. The moment you touch sea, that is called as coastal waters. Backwaters or rivers will be called as inland waters. And in case of coastal waters, what is the treatment? If it is for public transportation only, it is exempted. If it is for tourism purpose, then it will be taxable. Example, so if you go to Kanyakumari, there is a Thiruvalluvar rock and Vivekananda rock. From Kanyakumari shore to that rock, people will be transported through boats in coastal waters. That is for what purpose? Public transportation or tourism? Tourism. Therefore, it will be taxable. Whereas Andaman and Nicobar, Lakshadweep, people will be transported, but people are living there. So that will come under public transportation. That will be exempted. Lot of cruise ships will be transporting the people from Chennai to Andaman. That's normal public transportation. That will be exempted. Is it clear? But this exemption is only if it is between places within India. See that. Coastal waters within India for other than tourism purpose, whether government operated or private operated. Is it clear? So means that cruise ship may be operated by government or the cruise ship may be a private cruise ship. Till the time they are transporting the people, general public, then it will be exempted. If it is used for tourism purpose, then it will be taxable. Come on, tell me what are the two exemptions for waterways? Inland waterways, coastal waters between places in India. For what purpose? Other than tourism purpose. Then, whether by private or government. Okay. Roadways. Roadways, non-AC stage carriage. Nee appa active aita. So, roadways, say this, non-AC stage carriage. Non-AC stage carriage means what? Share auto will come under stage carriage. Even local bus is there na, that is also stage carriage. Stage carriage means what? Which stops at every stage during the journey is called as stage carriage. Non-AC stage carriage will be exempted. What if it is a stage carriage, whether local bus AC is there in Chennai? I have not seen. Seriously, I have not seen. That's why I am asking. AC is there? Okay. So, but in these areas and all, I have not seen. In Nungambakam or Mylapore or Annanagar, this surrounding I have not seen. Maybe in OMR, ECR, that side it is there, I think. Okay. So, that AC stage carriage will be taxable. AC local bus. Non-AC exempted. Share auto, there is no AC, na? It's non-AC only. So, always it is exempted. Then, non-AC contract carriage other than hire or tourism. What is non-AC contract carriage? Contract carriage means it stops at every stage or point to point, point to point, point to point. Point to point will come under contract carriage, like one town to another town or city to town, we have buses, na? That will be coming under. For example, Chennai to Velur, point to point, or Chennai to Madurai, or Chennai to Tiruchi, or Chennai to Hyderabad, Chennai to Bengaluru, lot of buses are there. All these will come under contract carriage. Mostly it will be AC, correct? Rarely we will find non-AC. If it is non-AC, the two other than tourism or higher, then it will be exempted. If it is for tourism or higher, then it will be taxable. Example, so there is a point-to-point SCTC bus which is transporting people from Chennai to Tirupati, Tirumala for pilgrimage, and the same bus will bring back the passengers back to Chennai. So it's like a one-day trip, morning and evening, and it's like a tour bus. Therefore, it will be, it's non-AC only. It will be taxable or exempted? Taxable, because it is for tourism. Then I have seen in many villages and all, they take bus on rent for transporting their family members to a marriage function. They will take a bus and convert that bus into a marriage bus, and battalion, some 40 people and all will be going for marriage function. That is on hire. So therefore, is it taxable or exempted? Taxable. Other than tourism or hire will only be exempted. Got it? Non-AC contract carriage, other than hire or tourism. Then metered cab or auto rickshaw. Metered cab, car with meter. That is metered cab, car with meter. Taxis you would see in outside the railway station, outside the airport, that is exempted. Auto also exempted, normal autos. But if it is through e-commerce operator, now whatever we discussed, non-AC stage carriage, non-AC contract carriage, metered cab or auto, if it is through e-commerce operator, then it will be taxable. For example, normal auto is exempted. Ola auto, Uber auto will be taxable. Normally, when you buy a ticket in the bus, it will be exempted, stage carriage or contract carriage. But if the same bus ticket you buy through Redbus app, then it will be taxable. Is it clear or not? So because this is through e-commerce operator, liability to pay GST is on the e-commerce operator. We don't have any exemption. See the note below. With effect from 1/1/2022, exemption is not available if the services are provided through e-commerce operator. Are you understanding this here? Now, so we have for railways two exemptions. What is that? Other than AC or first class, no, sorry, three exemptions. Other than AC or first class. Number 2, metro, mono, tramway. Number 3, notified services to individuals, platform tickets, waiting room charges, clock room charges, battery operated car services. Then when it comes to airways, two exemptions. Number 1, starting, ending, northeastern states, Bagdogra, West Bengal, economy class. Number 2, viability gap funding for a period of 3 years. Then when it comes to waterways, two exemptions. Inland waters, coastal waters, between places in India, mainly for what? Other than tourism purposes, whether operated by government or private. Last, that is in case of roadways, three exemptions. Non-AC stage carriage, non-AC contract carriage other than tourism or hire, metered cab or auto rickshaw. But if it is through e-commerce operator, it will be taxable. Now look into this note below. Transportation of passenger other than above is always taxable. Whatever we learnt is only exempted, remaining is taxable. For example, transportation of passengers through ropeway, cable car, taxable. Horse car, taxable. Rickshaw, taxable. Chartered flights, helicopter, etc., taxable. All these are taxable. But sir, horse cart, rickshaw and all taxable means will they pay GST? I never said that they will pay GST. It is taxable. If their aggregate turnover exceed threshold limit, they will pay GST. If their aggregate turnover does not exceed threshold limit, they will not pay GST. Are you understanding this? But this service is taxable. This service is taxable. Then there is a difference between renting of motor vehicles versus transportation of passengers. Many times we get confused because for renting of motor vehicles also we have some exemptions. Transportation also we have exemptions. Whether it is renting of motor vehicle or transportation, how to segregate? Simple. If the vehicle is with your possession, under your possession for a period of time, under your control for a period of time, then it will be coming under renting. If the vehicle is at the disposal of the recipient for a period of time, then it is renting. If the vehicle is not at the disposal of the recipient for a period of time, normal, they will bring, drop and they will go, then it will be coming under transportation of passengers. Is it clear? See there. renting a motor vehicle is different from transportation of passenger. In case of renting a motor vehicle, the vehicle is at the disposal of the recipient for a period of time, which is absent in case of transportation of passenger. Say for example, if I book a Ola or Uber car, they will pick me up in one place and drop me here. That's the end, correct? Whereas if I take a vehicle on rent, that vehicle will be with me throughout the period and I can use it for any purpose. You understood? That will be coming under renting of motor vehicle. Any purpose means not for nasty things and all, for transportation only. Next. Then look into the next one, transportation of goods. So whatever we have discussed in the previous page is transportation of passengers. Now it is transportation of goods. What are exempted? See there. For railways only one exemption, specified goods. That same specified goods point is there in case of waterways also, coastal water specified goods. Can you see? Railway specified goods, waterways, coastal water specified goods. Even in case of goods transport agency, even in case of goods transport agency, you can see that is there, specified goods, GTA services. So this specified goods is in three places, concentrate, railways, coastal waters within India and GTA services. What is that specified goods? Total 6 specified goods we have. Number 1, agricultural produce. Number 2, food grains including pulses, flours, milk and salt. Flours means, that's what, gram flour and wheat flour, atta, maida, etc. All those things. Then milk, not milk products, only milk. Then salt. Then number 3, organic manure. So organic manure, using cow dung, they make the manure as a opposite or as a substitute for fertilizers and pesticides, that organic manure. So these 3 are agriculture related. Agricultural produce, food grains including flours, pulses, milk and salt, organic manure. Then newspapers and magazines. Then defense material, defense or military equipment. Finally, relief material for natural or man-made disasters. These are the 6 notified goods. If transported through 3 modes, it is exempted. What are those 3 modes? Railways, exempted. Coastal waters between places in India, exempted. Or through a GTA, that is goods transport agency, then also it is exempted. Now, you understood this railways point? Next, for airways, there is only one exemption. What is that? If you are transporting goods by airways from where to where? Outside India to India, then it will be exempted. Then, for waterways, 2 exemptions. Inland waterways, even for passenger also same. Inland waterways is exempted. For goods also inland waterways is exempted. Coastal waters within India, what? Only specified goods. In case of roadways, concentrate, other than goods transport agency or courier agency, all other transportation is exempted. Got it? All other transportation is exempted other than GT or courier agency. Courier means what you know already. What is courier? They will take small parcels from multiple people, they will collect and they transport it to another place and they deliver it, correct? Whatever courier that we see for small parcels, if it is large parcels, then it will be called as GTA. Courier agency, whatever it does, the goods transport agency also will do the same. But courier agency will deal with small parcels. Goods transport agency deals with big parcels, large parcels. For example, if you need to send a box from Chennai to say Mumbai, this box, for the sake of this box, you cannot book a lorry. So this box you will hand over to a goods transport agency. Like you, lot of other people will hand over the goods to the goods transport agency. Say Blue Dart is a goods transport agency or DHL, like that, lot of people are there. What they will do, they will take the goods from one location to another location and hand it over there. And the freight will not be borne by one person. They will divide it between lot of people. That is what goods transport agency is. Is it clear? So other than GTA or courier agency, all other cases, roadways will be exempted. For example, this porter, Tata Ace, lot of goods are transported, whether it is taxable or exempted. That is not GTA or courier agency. For relocating your house from one location to another location, you will book packers and movers. Taxable or exempted? Exempted, because that is not GTA or courier agency. Is it clear? Then, there is a manufacturer who will send the finished goods manufactured by them from the factory to the depot or warehouse, whether that freight will be taxable or exempted because they are not GTR courier agency. Is it clear or not? If they are giving GTR courier, then only it will be coming into taxability. Otherwise, everything will be exempted. 90% of the lorries that you see in highways are exempted. You understood? Fully. It is not GTAs. GTA means what? You can see below. Goods Transport Agency. We have 3 exemptions. Okay. So first again, I am repeating. GTA or courier agency taxable pa. All others are exempted. For GTA again, we have certain exemptions. What is that? Number 1, specified goods. Number 2, if the recipient is government registered only for deducting TDS. So if government pays any freight to GTA, that is exempted. Then next, if the recipient is individual, HUF, AJP or trust, all are unregistered and not having factory. Who should be the recipient? Individual, HUF, AJP, trust, and they are unregistered and they are not having factory, then also it will be exempted. Now concentrate. Say you are not from Chennai. How many of you not from Chennai? Ayyo. Super. Yes. So for the sake of this only you came? No, na. Or for the sake of this you came? How many of you came for the sake of this class? Ayya. Thank you, please. Now, so lot of people will be coming to Chennai for the purpose of attending classes here, and they will do articleship, etc. And say you came here, at the time when you are coming here for attending some coaching, so you will bring one bag only, and one bag, clothes, etc. The moment you come here, you will be having a small bookshop by now. Yes, in your place, lot of books you have, correct? And all these books you will keep for what? After you clear, you have to keep all the books and make a photograph and put it in LinkedIn, social media, correct? For that we need that books. And exams got over. You need to go back to your place. And when you need to go back to your place, you will pack all those books, you will sell it. Exam only got over, result not yet came. Okay. So you will pack those books and you will book it as a goods transport agency. You will ask your father, so which lorry service it is. You will take the books and you will hand it over there. They will deliver it to your place and you pay some nominal amount like 300, 500 or 800 like that. Whether it will be taxable or it will be exempted. Why it is exempted? Because the recipient is individual. Clear? The recipient is individual and they are unregistered, not having factory. Therefore, it is exempted. So tell me, what are the 3 exemptions for GTA? Specified goods, if the recipient is government registered only to deduct TDS, recipient is individual, HUF, AJP, trust, and they are what? Unregistered and they are not having factory. So this is about transportation of goods. Sir, whether transportation of goods by waterways from outside India to India is exempted? No. This outside India to India only for airways is exempted. For waterways we don't have any exemption. Outside India to India or India to outside India, we don't have exemption, that is taxable. Now look into some special points in this regard. Who is a GTA? Goods Transport Agency is a person engaged in transportation of goods by road. Highlight road. They are engaged in transportation of goods by road, only roadways, and issues a consignment note by whatever name called, and issues a consignment note, then only they will be called as Goods Transport Agency. Both the conditions here. First, they should be transporting goods by road and they issues a consignment note. Just because they are transporting goods by road, they will not come under GTA. Next, GTA has 2 options. Either they can choose for FCM or RCM. If they choose for FCM, they will only pay GST. If they choose for RCM, their recipient will pay GST. Is it clear? Read the next line. GTA has an option to choose either FCM or RCM? If it is FCM, two rates again. If it is FCM, two rates. Should we remember these rates? Yes, you should remember these rates. FCM 12% with ITC, 5% without ITC. Means what? If GTA wants ITC on their inward supply, they need to go for 12%. If they don't want ITC on their inward supply, they need to go for 5%. What are the inward supplies for goods transport agency? They'll buy a lorry and they will receive repair and maintenance for the lorries, and they take insurance service, very good, and they receive telecommunication service, they receive internet services, they receive manpower services, and they will be taking a building on rent. These are all the inward supplies of GTA. If they want ITC, they should go for, come on, 12%. If they don't want ITC, the rate will be 5%. Whereas in case of RCM, always it will be 5%. Okay. In case of RCM, who will pay? Recipient will pay during a financial year. So therefore, whether they can choose this option with respect to each invoice or each financial year? Each financial year. And when they need to opt for this? Previous financial year last quarter, that is between January to March. For example, current financial year 25-26. For 25-26, I need to decide it by 1st January 2025 to 31st March 2025. Then only for the financial year 25-26, I can be going into this FCM option or RCM option. See this. However, such option should be selected between 1st Jan and 31st March of the previous year, and option 1 selected remains till the subsequent selection is made. Suppose if they are not giving consignment note, then will they be called as GTA? No. If they are not issuing consignment note, they are not called as GTA, and consequently it is normal transportation of goods by roadways, and therefore it will be exempted. Consignment note means what? It will contain details of consignor, consignee, which vehicle number, all those details will be there. Consignor, consignee, goods transported, vehicle details, place of origin, destination, etc. Then we have one last area with the transportation is over. Focus, please. This is a very, very important circular. That is, whenever there is a non-AC vehicle which is given to another person, if it is operated on a predetermined route on a predetermined schedule. What is predetermined route on a predetermined schedule? Mornings when you see, there will be lot of corporate buses, company buses, which will be picking up the employees in different locations. Like lot of buses you would have seen, Accenture, Cognizant, or Caterpillar, even this MRF, or even that L&T, a number of buses. Morning, for that you should be getting up in that slot called as 6 o'clock, 7 o'clock, you should have seen that time. Okay. If you get up only at 8 o'clock, you will not see that. So morning, even you see 6 o'clock, 6:30 and all, lot of buses will be picking up the employees, will be dropping them in the office. Again evening those buses will come, pick up the employees and will drop at different locations. This is called as operated on a predetermined route on a predetermined schedule. This will not be treated as contract carriage for hire. This will be treated as contract carriage other than tourism or hire, therefore it will be exempted. Is it clear here? Generally it is like rental only, but the circular says it is not treated as contract carriage for hire, it is contract carriage other than tourism or hire, and it is exempted. Which vehicle? AC, non-AC? Non-AC, because non-AC only exempted. Here non-AC contract carriage other than tourism or hire is only exempted. Are you understanding this? For that reason only they connected it this way. When pa, respond. When it is operated on a predetermined route on a predetermined schedule, contract carriage other than tourism or hire, it is exempted. What if vehicle is at the disposal of the recipient for a particular voyage or journey? For a particular voyage or journey, vehicle is at the disposal of the recipient for a particular trip. Then it will be transportation, contract carriage for hire or tourism, and it will be taxable. Is it clear? Clear? Why? Because it is for hire. Because say for example, the same company is taking employees for a vacation to Goa or some other place, then it will be coming under for a particular voyage or journey, then it is for tourism purpose, therefore it will be taxable. If the vehicle is at the disposal of the recipient for a period of time, then what it will be? It will be renting of motor vehicles. Is it clear? Already I told you this point. If the vehicle is at the disposal of the recipient for a period of time, it will be called as renting of motor vehicles, otherwise it will be transportation of passengers. Understood? For renting of motor vehicles, always it will be like we have exemptions, but in this case it will be taxable. 3 conditions are there. If 3 conditions are satisfied, it will be RCM. So when renting of motor vehicles will come under RCM, listen, what are the 3 conditions? Concentrate. Supplier should be other than body corporate. Recipient should be body corporate. And the rate of GST should be 5%. If these 3 conditions are satisfied, then it is RCM. Otherwise, it will be FCM. Don't worry, again we will discuss this in RCM provisions. Next, what is the meaning of a stage carriage? A vehicle which transports passengers where they can board at any stage during the journey. On the other hand, contract carriage is for point-to-point journey. Then one more circular, transportation of minerals within a mining area by vehicles deployed with driver for a specific duration. I am taking a vehicle for a specific duration. Is it transportation of passengers or transportation of goods or renting of motor vehicles? Renting of, because it is for a specific duration, falls under renting of motor vehicles but not transportation of goods. Is it clear? So these are the circulars which are given. With this we completed transportation sector. Got it? Now take your concept bills. Yes sir. Dunzo is an example of transportation of goods only, but basically they will come under the category of courier agency. They will come under courier agency because Dunzo will not only transport your parcel, they are operating like a courier. So they will collect parcels from different people and they will hand over the parcels the same day. The difference between normal courier agency and Dunzo is that they do it immediately. Normal courier agency will take time, but they do it quickly. But I don't think so, they will come under other than GTA, because for every time you deliver, you ask them to deliver, they will be giving you a consignment note. What is the partner number, that is who is the person picking up, where they are picking up, where they are delivering, they will give a consignment note. Okay, so that is coming under courier agency. Then look into another area, that is renting. Renting, you see, page number 51, page 51, page 51. Renting, we have amendments in this. Concentrate please. Definitely you can expect a question on this renting because of the amendment. Renting, including leasing, licensing, etc., following are exempted. So renting of movable property, renting of immobile property, we are dividing into 2. Again, this renting of immobile property divided into land and building. First we will see renting of movable property. For renting of movable property, we have 4 exemptions. All these 4 are relation to motor vehicles. This already you know also. I have a motor vehicle that can carry more than 12 passengers, that is given on rent to a state road transport corporation. So there is a state government transport corporation. To that, I am a private bus operator. I am giving my bus on rent, but the capacity of the bus should be more than 12 passengers. Whatever higher charges that I receive will be exempted. That is this, hiring of a means of transport that can carry more than 12 passengers to state road transport corporation. Read third point, hiring of electric vehicle that can carry greater than 12 passengers to a local authority. So what is the difference between first point and the third point? First point and third point. First point is to a state road transport undertaking. Third point is to a local authority. First point is a normal motor vehicle or electric motor vehicle, any motor vehicle, correct? any motor vehicle, normal or electronic. Okay, whereas third one is a electric vehicle, got it? And both the cases common is greater than 12 passengers. So tell me these two exemptions: motor vehicle more than, any motor vehicle more than 12 passengers. 2, State Road Transport Corporation. Next point, electric motor vehicle greater than 12 passengers. 2, local authority. Second point, hiring of means of transportation of goods to GTA. So what type of motor vehicle? What type of motor vehicle? No, goods transportation vehicle means lorry, truck, etc. Given on rent to whom? To a GTA. Given on rent to a GTA. So motor vehicle given on rent to a GTA. Then point number 4, concentrate. First, there is a person, for example, you are providing transportation service to a school. You are providing transportation service to a school. You took the motor vehicle on rent from me. So whatever rent I receive is also exempted. Is it clear or not? You provide transportation service to school, taxable or exempted? Exempted. Now instead of you owning a vehicle, you take the motor vehicle on rent from me and use that for transportation of students of the school. Therefore, that rent received by me is also exempted. Now you are providing transportation service to college. You are providing transportation service to college. Taxable or exempted? Taxable. Now you take the motor vehicle on rent from me. That rent is also taxable in my hands. Is it clear? So read there. Hiring of bus to a person who provides transportation services to educational institution up to 12th standard or equivalent. Is it clear? So these are the 4 exemptions with respect to renting of motor vehicles or renting of movable property. What are the 4 exemptions? Come on. Hiring of motor vehicle that can carry more than 12 passengers to a state road transport undertaking. Number 2, hiring of motor vehicle that can, electric motor vehicle that can carry more than 12 passengers to a local authority. Number 3, hiring of motor vehicle that can carry goods to a GTA. Number 4, hiring of bus to a person providing transportation services to educational institution up to 12th standard or equivalent. Then next, look into this. Immovable property. Immovable property, renting of immovable property. This renting of immovable property is divided into 2, land and building. So in case of land, so we have 2 exemptions. So first you see these 2 exemptions, what is the difference? You read it carefully and tell me what are the differences you can find in these 2 points for land. Upfront charges and annual lease rentals with respect to lease of land by government to government authority or government entity. Who is government, who is government authority and who is government entity? You know that? Government means central government, state government, local authority. Got it? CGST, local authority, that is government. Government authority or government entity means a body or authority established under an act of parliament or state legislature, or a body in which government has invested greater than or equals to 90% is known as government authority or government entity. Okay. So for example, is ICI a government authority? Yes. Why? Because it is a body set up under an act of parliament. So due to that reason. Like that, is RBI a government authority? Yes. SEBI a government authority? Yes. All these are established on an act of parliament or state legislature, so they will come under government authority or government entity. What is the difference between government authority and government entity? Government authority is to carry out the functions under the constitution, whereas government entity is to promote business or commerce. Okay. All these definitions I have given below the government services, which you can see in previous to previous page, page number 48 you can see. Page number 48 you can see government, government authority, government entity. So who will come under government? Central government department, state government department, local authority. Okay. Whereas who will come under government authority? You see, board or body or authority established on an act of parliament or state legislature, or board or body in which government invested greater than or equals to 90%. But what is their job? To carry out the functions under Constitution. Example ICI. Then CMDA, Chennai Metro Development Authority, okay, which will be giving the license for constructions, etc. And that will be CMDA. CMWSSB, Chennai Metro Water, Sewage and Supply Board. What is that they do? They do the water supply, metro water supply. So that is also coming under government authority. Government entity means same as government authority, but government authority is established to carry out function under Constitution, but government entity is to promote trade or commerce. Is it clear? And government entity, example PSUs like ONGC, Steel Authority of India, etc., that will be coming under government entities. Now why we discuss this? Coming back to the land given on lease. Land given on lease. What type of lease? What type of lease? Long term or short term? Nothing is given. Means either long term or short term. Read this carefully. They did not mention any type of lease. So long term or short term. What type of land? They did not specify. So it can be industrial land or agricultural land. And what is exempted here? Both upfront charges as well as annual royalty. Who should be the supplier? Government should be the supplier. Who should be the recipient? Government authority or government entity is the recipient. Understood this? Whereas next point you read, upfront charges, only upfront charges, including preferential occasion charges with respect to long-term lease. What is a long-term lease? Greater than or equals to 30 years of industrial plots or plots for development of infrastructure for finance business. By whom? State Government Industrial Development Corporation. You would have heard this word, SIDCO. SIDCO. What is that SIDCO? State Government Industrial Development Corporation. They will be giving land on lease. What type of lease? Second point you see, what type of lease? Long-term lease. It's not a short-term lease, it's a long-term lease, correct? And what is exempted here? Only upfront charges, not annual lease rentals. What type of land should be given on lease? Only industrial land or land for development of infra for finance business. Who should be the supplier? SIDCO. Who should be the recipient? So industries, okay. Then it is exempted. Clear here these 2 points, okay. So now these 2 points, we will prepare one table to understand this, because this is an important area not yet tested. So there is a chance of asking this question in exam. So please write down, take your notebook. Take your notebook. Give a heading, exemption with respect to lease of land. Already it is there, but why are you writing? For practice, okay, right. Exemption with respect to lease of land. Exemption with respect to lease of land. Prepare a table. Particulars, exemption 1, exemption 2. Particulars, exemption 1, exemption 2. Particulars, exemption 1, exemption 2. In particulars you write down supplier. In particulars you write down supplier. Who is the supplier for exemption 1? Government, right there. For exemption 1, who is the supplier? Government. And for exemption 2, who is the supplier? SIDCO, State Government Industrial Development Corporation. For exemption 1, supplier is government. For exemption 2, the supplier is SIDCO. Then next, second, recipient. Particulars write down, recipient. First in particulars you have written supplier. And next point, in particulars you write down recipient. Who is the recipient for first exemption? Government authority or government entity. Government authority or government entity. Second exemption, industries. 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 Then third point, in particulars, type of land. Type of land. Type of land. First exemption, any land, agricultural or industrial, any land. But second exemption, industrial land or land for development of infra for finance business. Industrial land or land for development of infra for finance business. Then next one. What is it? Type of lease. Type of lease. Type of lease. First exemption, any lease, long term or short term. But second case, long term lease. What is called as long term lease? Greater than or equals to 30 years. Greater than or equals to 30 years is long term lease. Next, amount of exemption. Amount of exemption. In the first case, upfront amount and annual lease rentals. Upfront amount and annual lease rentals. But in the second case, second exemption, only upfront amount, including the preferential location charges. Preferential location means if you want to get an area which is near to airport, near to port or near to highway, etc., you need to pay some extra charges. That is the preferential location charges. You understood the differences between these two here? Then say this. First we completed renting of movable property, what are the exemptions? Renting of immobile property, land, what are exemptions? And renting of immobile property, that is building, what are exempted? Look into that. 3 exemptions we have for building. For building, exemption number 1, I have a residential property and that residential property given on rent for residential purpose. To whom? To an unregistered person. Then it is exempted. Got it? What property? Residential property. For what purpose? Residential purpose. To whom I am giving on rent? So whenever you are taking property on rent for your house, on rent there is no GST. Why on rent there is no GST? Because residential purpose to an unregistered person. Suppose if it is renting of residential property by a registered individual, for example, I take a property on rent. I am a registered individual, but I am not taking it for my office, I am taking it for my family stay. Is it exempted? Yes. Second point, residential property for residential purpose to a registered individual for their family stay. Got it? For their family stay means my family stay, not someone's family stay. Is it clear or not? Or not my other family stay, my own family stay. You understood or not? Then residential property for residential purpose to a registered individual for their family stay. Then third point newly added, accommodation services for a continuous period of minimum 90 days. For a continuous period of minimum 90 days where the value of supply less than or equals to 20,000 per person per month. Now say this, as you said, many people here are from outside Chennai, means you might be staying in hostels. Whether that hostel fees is taxable or exempted. So for giving exemption to the hostels, PG accommodations, short-term accommodations, etc. and all, they brought in this exemption. So what is a continuous period you should be staying in the hostel? Minimum 90 days. Minimum 90 days. Okay. And what should be the monthly hostel fees? Less than or equals to 20,000 monthly per person. Per person. Definitely it will be less than or equals to 20,000, correct? But even then you will not get the exemption. Why you will not get the exemption? Because you will come here and stay for say 1 month and go, then you will not get the exemption. Got it? And what the property owner should do, what the hostel owner should do, he should give you invoice for 90 days. Is it clear? He should give you invoice for 90 days and mention monthly rent as 7,000 or 8,000. Anyhow it is exempted now, so we don't have to bother. If he mention the period as less than 90 days, then whatever money that is collected will become taxable. Is it clear or not? So minimum period of continuous period of 90 days where the value of supply does not exceed 20,000 per person per month. So why per person? Sharing. Suppose if there is a single room and in that 4 people are sharing, per person it is 8,000. 4 into 8, 32,000. 32,000 means more than 20,000, but don't see that. Per person you see. per person less than or equals to 20,000 per month. Therefore, it will be exempted. Tell me, for residential property or immovable property, what are the three exemptions? Sir, is this accommodation only for residential property? No, for commercial property also. They did not tell accommodation service what type of property. It can be a residential property or it can be a commercial property. How do we know whether it is a residential property or commercial property? At the time of construction, we go for approval. At that time, we will select whether it is a residential or commercial. It will be given in the question itself. You don't have to worry. Okay. Come on, tell me what are the three. Number one, residential property for residential purpose to a unregistered person. Next, residential property for residential purpose to a registered individual for their family stay. Okay. Number three, accommodation service for a continuous period of minimum 90 days and subject to value per month per person, how much? Less than or equals to 20,000. Then look into the second one, renting of precincts of a religious place meant for general public. What is religious place meant for general public? Temple or church or a mosque or gurudwara, etc. All these are religious place meant for general public. The precincts means what? Surroundings or that premises can be given on rent. For what purpose they will give it on rent? Let's take Tirumala temple. Tirumala temple is a trust that should be registered as a trust. That is important condition. First, is Tirumala temple a public religious place meant for general public? Yes. And is it registered as a trust? Yes. And are they giving the precincts? Precincts means surroundings for rent? Yes. For what purpose? Accommodation. For the pilgrims who come there, accommodation. Number two, marriage functions. Okay, hall they will give on rent or shops they will give on rent. If it is for accommodation, if it is less than, not equal to, less than 1,000 rupees per day, you remember 999 per day exempted, got it? You remember it like 999 rupees per day, it will be exempted, got it? Don't remember 1,000, because 1,000 means you will get a confusion there in exam. So exactly they will give 1,000. What is your answer? Taxable. Less than 1,000 is only exempted, so 999 rupees per day. Yes, we have lot of rooms at less than 999 rupees that will be exempted. What if it is greater than or equals to 1,000? Entirely taxable. For hall it should be how much? 9,999 per day. Whereas for shop it should be how much? 9,999 per month. Then it is exempted. Otherwise entirely taxable. So tell me what are the three exemptions. Number one, accommodation 999 per day exempted. Hall 9,999 per day. Then shop 9,999 per month. What it should be? Precincts of a, no, what is that place? Precincts of a religious place meant for general public, and that should be registered as a trust. Now, related to this amendment, I have prepared one amendment based question. You can see that. Question number 4, page 50. After this, we'll take break. Okay? Say this. Question number 4. Say this, concentrate, we'll complete this. Mr. Rahul, an individual registered under GST, owns multiple residential and commercial properties across different cities in India. In October 2024, he rents out the properties under different situations to various individuals and entities. Compute the value of taxable supply in the hands of Mr. Rahul based on the following details of the rentals for October 2024. Renting of luxury residential flat in Mumbai to Mr. Kapoor a proprietor of a proprietorship concern for personal use as his residence. Renting of what property? Residential property for residential purpose to an registered person. Where is it given that Mr. Kapoor is a registered person? It's not given, correct? So therefore it will be coming under exempted. What if Kapoor is registered? Even then exempted. If Kapoor is registered, if Kapoor is unregistered also, it is exempted. If he is registered also, as it is for family use, therefore it will be exempted. Understood? Second, renting of student hostel in Pune to 20 students for a period of 6 months from October 2024. Exempted. Why? 6 months means minimum 90 days. Monthly rent is 12,000. So therefore it is exempted. Offers PG accommodation in Delhi for 10 working professionals for a period of 4 months from October. Sir, for working professionals also exemption is given. Yes, everyone. Accommodation service can be student, working professional, any person. Okay. And 4 months means more than 90 days. What is a monthly? 15,000, which does not exceed 20,000. Therefore it is exempted. Renting of guest house accommodation in Bengaluru to a corporate company for its employees, and the accommodation is used for consecutive 90 days, 19,000. What is your answer? Exempted. Even if a company is taking it on continuous 90 days, then also it will be exempted. Why to go there? Even if you take a hotel, hotels are there now, hotel accommodation. If you take a hotel accommodation for a continuous period of 90 days, where the monthly charges is less than or equals to 20,000 per month, then also it will be exempted. Is it clear? There are a lot of, homestays. Homestays means what they do, like monthly and all they will be giving. So a company may take for 6 months, 1 year, like that. For what purpose? Maybe that company has lot of guests who are coming from other states. To give the accommodation, they will take one apartment and that will be taken on a continuous, but it is like a homestay kind of, and continuous period. Monthly, how much is the rent? Less than 20,000 rupees. So it will be coming under exemption here. Is it clear? So therefore for company also it is available. Renting of hostel in Chennai for 40 students pursuing CA final for attending exam oriented batch on IDT of Mr. THARUN'S for a consecutive period of 60 days, 10,000 per month. Taxable. Why? Even though monthly is less than 20,000, but for a minimum period of 90, but it is only 60. That's why it will be taxable. Okay. But I'm not that much obsessed about my name and all. I have incorporated my name in many questions because if people steal this question also, so they will not modify this and all. So they will, I will know that they have stolen from my book only. Okay. For that reason. Then next. Renting of commercial property in Bengaluru to XYZ Limited, a registered company for office space. What is your answer? Commercial property, always taxable. For commercial property, we don't have any exemption. That exemption is only accommodation services. Offers paying guest accommodation in Kochi for 10 students who pursue a short-term skill course for a consecutive period of 90 days. Even though it is for a period of 90 days, but the charges is more than 20,000 per month per student. That's why it will be taxable. Got it? So you can expect a question like this, similar to this, because there is an amendment related to accommodation. Okay. And listen, take a break, come with fresh mind, because we are going to discuss one important area, that is government services. Okay. Thank you. See this, page number 48. Page number 48. Services provided by government. So here when we are referring to government, we are referring to central government, state government and local authority. And services provided by government is broadly divided into two. That is covered under supply, excluded from supply. This is a latest amendment. Previously we had a different thing. Now, only two activities are excluded from supply. What are those two activities of government which is excluded from supply? Already I told you, sovereign functions, that is panchayat or municipality under Article 243G or 243W of the Constitution. Then liquor license granted by state government. These two activities are excluded from supply. What are the two activities which are excluded from supply? Sovereign functions, that is municipality or gram panchayat. Number two, liquor license granted by state government. All other activities of government is covered under supply. When it is covered under supply, in that we have Department of Post, Indian Railways, transportation of goods or passengers and other services. So first look into services by Department of Post, and this information, as there are a lot of things involved in this, carefully listen. Services by Department of Post, we have three activities which are exempted. What is that? Inland letter, postcard, registered post or book post of envelopes less than 10 grams is exempted. All other activities of Department of Post is taxable. Is it clear? In this, what we are going to learn is what are exempted. Rest of the cases will be taxable. Okay. So first, services by Department of Post. What is your answer? Three cases exempted. What are they? Postcard, rest in peace, it's not there now. Then inland letter, that is also not there. Then envelope, less than 10 grams, no use, correct? Less than 10 grams means what? One paper we will be sending, got it? So postcard, that is registered post or book post of envelope less than 10 grams. What are the other activities of Department of Post? Other activities of Department of Post apart from these three, can you give me examples? Speed post, express parcel post, life insurance services, agency services, Aadhaar card update, and then mobile bill payment, electricity bill payment, like that, a number of services. Even they will provide banking services also, post office. All those will be taxable. Only these three are exempted. Then next, services by Indian Railways apart from transportation, because anyhow transportation already we completed, transportation chart. So, but apart from transportation, other services by Indian Railways, in that first point already we discussed. What is that? Notified services to individuals. What are those notified services to individuals? Platform tickets, clock room charges, waiting room charges, battery operated cars, correct? Then second point you see, services provided by Indian Railways, one zone or division to another zone or division. This is also now newly added. Usually railways are divided based on zones, like southern zone, then south central zone. In that again there will be divisions, lot of division, like in Tamil Nadu, Chennai division, then Tambaram division, Jolarpet division, like that, Velur, Katpadi division, like that they will divide it into different divisions. Okay. So one division to another division or one zone to another zone, that is this. Services by one zone or division to another zone or division is covered under exemption now. Next, this maintenance services to SPVs, special purpose vehicles, in relation to infrastructure built and owned by SPVs during the concession period. So actually there is one more connecting exemption also. You read it once, first you read it once, then one more connecting exemption also you have, that you read it next. That is services provided by special purpose vehicle to Ministry of Railways by allowing them to use the infrastructure built and owned by SPVs during the concession period against consideration. So what is these two? These two are latest amendments only. So let's see the connection to that. First concentrate. There is a SPV, special purpose vehicle. What they do? They create a infrastructure in the railways. What infrastructures are they create? Escalators. In railway stations, if you see, escalators are there, lift is there. Then they will create some separate line itself for one area. They will create an electric line, you understood? So all these works are done by SPVs, special purpose vehicles. They create what? They create what? Infrastructure. They create infrastructure. They create infrastructure. Why can't railways create that infrastructure? Railways don't have money. Railways don't have money to create infrastructure. If in one railway station you will install an escalator, then every railway station will ask that, na? Correct or not? So railways will say, we don't have money to install escalator and lift in every station. So we will give it to some SPVs, special purpose vehicle. They have money, let them invest. Now, they create the infrastructure and they give this infrastructure. So what is the services provided by SPVs to railways, Indian railways? What is the service provided? They are permitting Indian railways to use the infrastructure, correct? First SPVs are there, sir. What SPVs are doing? They are creating infrastructure. And what they are doing? They are permitting railways to use the infrastructure, okay? So, permit railways, that is services by way of like renting or allowing railways to use the infrastructure. Allows railways to use whatever infrastructure that they have constructed, they are allowing Indian railways to use that infrastructure. For that, Indian railways will pay some consideration, correct? Indian railways will pay some consideration. What is the treatment of this consideration? What is the treatment of this consideration? Taxable or exempted? This consideration will be exempted. You understood this point here? Again I am repeating, SPVs allow railways to use the infrastructure and for which railways will pay the consideration. They are creating the infrastructures and this consideration will be exempted. Understood? Is it permanently? No. This is for a period, say for example 10 years like that, okay? 10 years like that. What will happen after 10 years? After 10 years, that infrastructure is owned by Indian Railways. Indian Railways already paid, last 10 years they have paid. Now again they will not pay anything. Now the infrastructure is owned by Indian Railways. You got it? This is called as concession period. This 10 years is called as concession period. Now you read, you will understand. Services provided by special purpose vehicles, okay? To whom? Ministry of Railways. By what? Allowing them to use the infrastructure owned and built by SPVs. For how many years? During the concession period against consideration. So that is exempted. Got the clarity? Now listen. Now what happens? Indian Railways will provide the services to these SPVs. First SPV provided the services to Indian Railways by allowing the Indian Railways to use the infrastructure. This is okay. Now Indian Railways will provide services to SPVs. What services, sir? Indian Railways will provide the maintenance services to SPVs. Maintenance services. Sir, this infrastructure is constructed by SPVs. Lift is constructed by SPV. But that lift, if it is not working, again we cannot call the SPV, na. So that will be done by railways only. You are SPV, you constructed a lift and you are giving me that lift to use it. Now, any problem happen in that lift, you only should come and rectify, correct or not? But what I am doing is that I have a lot of labor with me. Railways has a lot of labor, engineers. So therefore, I will use my engineers to do the rectification of that lift. I will repair that lift, which actually you should have done. But I will do, for which I will be collecting some charges from you. Is it clear or not? So Indian Railways will provide maintenance services. Maintenance services for that infrastructure, they provided the maintenance services for which SPVs will pay some consideration. for which SPVs will pay some consideration. Okay, that consideration which is paid by SPVs, that consideration which is paid by SPVs is also exempted. Got it? That consideration is also exempted. There are two supplies. First one is this: allowing railways to use the infrastructure for which they pay a consideration. That consideration is exempted. Okay, that is the first point we did. Now second point, Indian Railways is providing services to the SPVs. You read this. Indian Railways is providing the maintenance services to SPVs in relation to infrastructure built and owned by SPVs during the concession period. So again, this maintenance services for infrastructure, they get a consideration. That consideration will be exempted. Understood these 2 points here? These two are amendments only. Got it? And first point is what? Come on, respond. SPVs will provide infrastructure to railways, for which railways will pay consideration to SPVs for the concession period. That will be exempted. Second point, Indian Railways will provide maintenance services to whom? SPVs, for which SPVs will pay the consideration. That consideration received by Indian Railways will be exempted. That is this point. Got it? So tell me, for Indian Railways, what are the exemptions? Number 3. First one, services, notified services to individuals. What are they? Platform tickets, waiting room, clock room, battery operated cars, etc. Then next, services by one zone or division to another zone or division. Next, number 3, maintenance services to SPVs in relation to infrastructure built and owned by SPVs during the concession period. Okay. Then look into this, transportation of goods or passengers. Refer the transportation chart, already we discussed. Then fourth one, any other services. What are the 3 sectors we discussed? Sector number 1, Department of Post. Sector number 2, Indian Railways. Sector number 3, transportation sector. Apart from that, any other services by government. Any other services by government. In that any other services by government, if they are providing services to business entities, we have certain exemptions, and to others, fully it is exempted. Okay. To other than business entity. Who is other than business entity? Individuals. To other than business entities means, please write down. To other than business entities means, that is individuals. Individuals. To other than business entities, that is individuals, it will be exempted. Sir, what about airport or port services? Airport or port service provided by government is always taxable. That sector is always taxable. This is the another sector. Airport or port services provided by government is always taxable. We don't have any exemption. Got it? Now, again I am repeating, carefully listen. First, government service, divide into two activities, that is sovereign functions or liquor license, not a supply. Other activities, supply. In that whatever becomes supply, sector number 1, Department of Post, 3 activities exempted: postcard, inland letter, registered post or book post or envelope less than 10 grams. All other activities of Department of Post, taxable. Second sector, that is Indian Railways. Indian Railways, 3 exemptions. Other activities of Indian Railways, taxable. Third sector, transportation, already we discussed. Fourth sector, that is airport or port, always taxable. We don't have any exemption. Then next sector, all other services. In that all other services, if they provide services to individuals, that is other than business entities, it will be exempted. What if they provide services to business entities? That discussion we need to make. We have some exemptions, and other cases it will be taxable. Okay, that is given in segment 3. You give the page number reference here. Refer page number. Refer page number 33. There you give the reference. Refer page number 33. Refer page number 33. and come back to page number 33. You understood? Right now we are into what discussion? Yes. In case of government services, we have some specific exemptions. Government services to whom? Business entities. Is it Department of Post? No. Is it airport or port? Is it transportation? Is it railways? All other activities. Got it? All other activities. All other activities to business entities. We have specific exemptions, then general exemptions, 14 specific exemptions and 2 general exemptions. In remaining cases, it will be taxable. Is it clear? So look into 14 specific exemptions. RTI charges. RTI charges means, what is that? You know, na? That is, generally to get the information, we need to pay some charges. How much you pay to get the answer sheet? That 10 rupees is collected by whom? Government of India. That is what? RTI. So Government of India, that will be exempted. Not only this, any information if you need to pay some charges to government to obtain the information. That charges collected by them will be exempted. Is it clear? That is this RTI charges. Then interdepartmental services means one department of central government, state government to another department of central government, state government. Example, say this actor turned politician. So Mr. Joseph Vijay has started a political party by name TVK. It's not a paid promotion and all. And he started one political party. And when he started political party, what he should do is that there are a lot of works which they need to do first. But going, he hit the central government. First itself, he hit the BJP party. And thereafter he hit the local DMK party, which is ruling. Now what will happen? From quite a long time, there is lot of rumors which are going around that he has earned lot of money, black money, and he did money laundering, etc., etc. All kind of economic offences he did like that. Lot of news, rumors are being spread. Now it is the time where central government will be sending their income tax department for a raid to Vijay Anna's home. And whenever they are sending, so far he was individual. Now today he is a revolution, okay, wherein lot of people are there next to him. Definitely those like party members will not allow. So far fans will have fear, but now party members. The party members will not allow income tax department to enter his home. Now definitely income tax department need police department help. Definitely police department will help. You understood? Reason? Because here also he has the enemy. So therefore Tamil Nadu Police Department providing services to income tax department against a consideration. Even though state government and central government is not having good terms, but an enemy's enemy is a friend. You understood or not? And because of that reason, definitely it will happen. So state government of Tamil Nadu provides police service to income tax department for a consideration, that is interdepartmental services, which is exempted. Understood? So RTI charges, interdepartmental services, then right to use telecom spectrum allocated before 1/4/2016. What is this right to use telecom spectrum? That is, who owns the telecom spectrum? Government of India owns telecom spectrum. They will be allotting the telecom spectrum to the telecom operators. If they have assigned it before 1/4/2016, both one-time charges and annual royalty collected will be exempted. What if they are allotting after 1/4/2016 like 5G or 4G VoLT, etc. and all? That will be taxable. Then what is the difference between third point and fourth point? In fourth point, right to use natural resources. In previous point, it is only right to use telecom spectrum. Here, right to use natural resources. In the previous point, both one-time charges and annual royalty exempted. Here only one-time charges is exempted. Okay. And next, right to use natural resources. What is the difference between fourth point and fifth point? Fourth point, right to use natural resources, but here to any person, but here only to an individual, and that to individual farmer. Here before 1/4/2016, here assigned any time. Here only one-time charges exempted, here both one-time charges and annual royalty exempted. So tell me what are the three assignment of right to use is exempted. Number one, assignment of right to use telecom spectrum. When? Before 1/4/2016. Both one-time charges and annual royalty. Number two, assignment of right to use natural resources to any person. Before 1/4/2016. Only one-time charges. Assignment of right to use natural resources to an individual farmer any time. Both one-time charges and annual royalty. Then look into point number 6. Merchant overtime charges under customs. Customs department will be working after office hours and on public holidays also, for which they will be collecting extra charges to do the clearances during night time or holidays. Those extra charges collected by them is merchant overtime charges, that is exempted. Then safety certificate charges. This safety certificate charges is collected by the safety officer for issuing the safety certificate. All the complexes or malls or cinema theaters, hospitals, factory buildings, etc. should obtain this safety certificate mandatorily. For that purpose, one safety officer will visit and inspect and will be giving safety certificate for which some charges is collected, that is exempted. Then consideration for tolerating an act. What is this consideration for tolerating an act? Already morning we discussed. If it is compensatory in nature or penal in nature, first of all it is not treated as consideration. Otherwise, it will be treated as consideration. Say government entered into contract with you, wherein you wanted, like you should construct a building for the government. You could not complete it in 2 months. There is a delay by 1 month. As there is a delay by 1 month, government is tolerating your act of delay. So is it possible to perform or not possible to perform? Possible to perform. For which government collects some extra amount. Is it treated as consideration? Yes. But it will be exempted. Why it is exempted? Specifically it is given as consideration for tolerating an act collected by government is exempted. What if it is compensatory in nature, penal in nature? First of all, it is not treated as consideration. Is it clear? Next one. Share of profit petroleum. What is this profit petroleum? So there is a concept of cost petroleum and profit petroleum. We need to understand this concept. Whenever government assign right to extract petroleum, crude or natural gas to a leaseholder. Let's take an example of Reliance Industries Limited. Reliance Industries or Adani Group, etc. They wanted to extract the petroleum, crude or natural gas. For that they need a license, mining license. So they approach the government, central government. Central government will be giving them right to extract the petroleum crude. Who owns this petroleum crude below the earth? Who is government? For the people, of the people, by the people. It is our money. You understood? Our money. You got it? And any natural resource is owned by people of the country, not government. Not government. It is not monarchism where government owns everything. No. Government is not a king, government is not queen to own everything in India. In India, everything is owned by people of the country. Got it? So therefore, when government is giving the right to extract the crude oil, they need to pay the royalty. That royalty is no doubt taxable, correct or not? Because only one-time charges is exempted, that too before 1/4/2016. Otherwise, it is taxable. Agreed. Now, government wanted a share of profit also. Boss, you are extracting the crude oil, you make the refinery and you sell the petrol, you sell the natural gas, you make huge profits. But I am getting only the royalty, so I also need the share of profit. So now government gets 2 types of consideration. What are the 2 types of consideration? Number 1, royalty. What is the treatment of royalty? See this. Right to use natural resources allotted before 1/4/2016, only one-time charge is exempted, but royalty will be always taxable, correct? Even if it is assigned after 1/4/2016, it will be taxable. Before 1/4/2016 also royalty will be taxable. Whereas second consideration, what is the second consideration that they receive? Share of profit, that share of profit is exempted. Is it clear? Only annual royalty will be taxable, that share of profit is exempted. Again I am repeating, carefully listen. Government assign right to extract petroleum crude or natural gas to the leaseholder, for which the leaseholder will pay two types of consideration to government. Number one, annual royalty, that will be taxable. Number two, share of profit, that share of profit will be exempted. Read it. Share of profit petroleum. What is that profit? Revenue from operations minus cost petroleum minus royalty. What is cost petroleum? Who will be incurring the cost in extracting the crude oil or natural gas? Leaseholder, mining leaseholder or leaseholder, correct? Means first they need to recover their expenses. That recovery of expenses is known as cost petroleum. And what about the recovery of expenses, taxable or exempted? That is also exempted. Cost petroleum is recovery of expenses by leaseholder, which is also exempted. Then, so government receives share of profit on extraction in addition to royalty, that share of profit is exempted. Then next, point number 10, registration charges under any law for the time being in force. What does it mean? Usually, we pay some registration charges for registering motor vehicles, we pay some registration charges for registering properties, or for incorporating a company we pay some registration charges. All those registration charges under any law for the time being in force is exempted. Got it? Then next, fee for birth certificate, death certificate, driving license, visa or passport, that is also exempted. So only 5 certificates. But sir, if these are provided, these are to individuals, na? Anyhow to individuals it is exempted, that's what we listen. We have written one chart. In that chart you go and see, only to business entities we are discussing. To others, that is individuals, it is exempted. Am I right? Services provided by government, other services, to business entities only we are discussing. To others means individuals. I told you, what is it? Exempted. But these are to individuals, na? Then why are we discussing it under services to business entities? Because these are provided to business entities on behalf of their employees who are individuals. Is it clear or not? So service is to business entity only. For example, a company is taking keyman insurance policy. They need the birth certificate of the keyman, and they are claiming keyman policy, means they need the death certificate of the keyman, and they are taking driving license on the drivers who are employees of the company. So for that they receive driving license services. Or if the company is sending their employees for outstation for the purpose of, that is outside country for site work, I mean on site. So for learning or training, etc., means the company only should process their visa and passport. So all these services are provided to company on behalf of their employees. What are the 5 certificates here? Come on. Birth certificate, death certificate, driving license, visa and passport. That is exempted. Then guarantee commission for guaranteeing the loans taken by PSUs. Public sector undertakings will borrow loans, that is unsecured loans, and those unsecured loans are guaranteed by government. For guaranteeing that, the PSU should pay commission to government for giving the guarantee. That commission which is received by PSU is exempted. Guarantee, that is that commission which is paid by PSU to government is exempted. Guarantee commission for guaranteeing loans taken by PSU. Then 13th point, excess royalty collection contractor to the extent of variable royalty. What is this? Generally, government will be appointing one person as excess royalty collection contractor who will receive the fixed royalty and will pay the variable royalty. Okay. So about this ERCC concept, we have a chart, we will discuss that. So you give the page number reference there. So, okay, fine, it's not there, I'll tell you, you make note of this, okay. This ERCC alone, somewhere in the last page, you give the last page, page number reference, some notes you have space, na, that page number reference you give and you write there about ERCC. say this, state government is allotting mining license to a leaseholder. State government is allotting mining license to a leaseholder, okay, to a leaseholder. First write down state government, leaseholder. First, what state government is doing? They are assigning right to use natural resources. Assignment of right to use natural resources. Assignment of right to use natural resources. Now, whatever royalty that the leaseholder will pay is fixed royalty or variable royalty. I mean, the royalty will be always same every year or it will vary. Why? Depending upon the quantum extracted, they will pay, correct? Say for example, at the rate of 10,000 rupees per ton. Means what? If the leaseholder extracts 100 tons, 100 into 10,000. If the leaseholder extracts 150 tons, then 150 into 10,000, like that they will be paying. Is it clear here? First, state government, leaseholder. State government will give assignment of right to use natural resources to the leaseholder against 10,000 rupees per ton, and the type of royalty that leaseholder pay will be fixed royalty or variable royalty. It will be variable royalty. Total will be variable depending upon the quantum. It's not fixed royalty. Per ton it is fixed here, but total will be variable. But government wants fixed royalty. They don't want variable royalty. Every year, whatever income that they are generating, they should be knowing before itself, because they prepare a budget, and for that reason they need. So they will appoint one person. Who is that person? ERCC, Excess Royalty Collection Contractor. What this excess royalty collection contractor will do? From the leaseholder, they will receive variable royalty. From the leaseholder, they receive variable royalty, From the leaseholder, they receive variable royalty, and to state government, they will be paying fixed royalty. To the state government, they will be paying fixed royalty. Okay. Now, say for example, the variable royalty is 40 lakhs and the fixed royalty is 50 lakhs. The variable royalty is 40 lakhs and the fixed royalty is 50 lakhs. So, state government assign right to use natural resources at 10,000 rupees per ton to the leaseholder, and the leaseholder will pay variable royalty 40 lakhs and fixed royalty 50 lakhs. Now, to government, first the leaseholder will pay GST on variable royalty. Leaseholder will pay GST on rupees 40 lakhs. GST on rupees 40 lakhs under RCM. Why RCM? Because services provided by government to business entities is covered under RCM. So, due to that reason, leaseholder will pay GST on rupees 40 lakhs to government under RCM. Is that clear? Understood. But how much state government has got? How much state government has got? 50 lakhs. Means extra 10 lakhs they received. On that extra 10 lakhs, who will pay GST? ERCC will pay GST. ERCC will pay GST on rupees 10 lakhs. Whether ERCC is required to pay GST on entire 50 lakhs? No, not entire 50 lakhs. ERCC is exempted to the extent of variable royalty, because on variable royalty already leaseholder is paying. Is it clear? ERCC is exempted to the extent of variable royalty because already on variable royalty, so GST is payable by the leaseholder. Is it clear? Then what if you return this? Respond. What if, write down, if if the variable royalty is 55 lakhs and fixed royalty is 50 lakhs, write down. If variable royalty is 55 lakhs, if variable royalty is 55 lakhs and fixed royalty is 50 lakhs, then what will be your answer? ERCC required to pay or not required to pay? Not required to pay GST, okay? ERCC not required to pay GST. If variable royalty is 55 lakhs and fixed royalty is 50 lakhs, ERCC not required to pay GST because on that 55 lakhs already leaseholder shall pay GST, write down. ERCC not required to pay GST. ERCC not required to pay GST as leaseholder pays GST on, as leaseholder pays GST on 55 lakhs. As leaseholder pays GST on 55 lakhs. Are you understanding this here? Already leaseholder will pay GST on 55 lakhs. That's the reason why, you know, ERCC is not required to pay any GST because they pay only 50 lakhs. That is about this. You read it, you will understand. Excess royalty collection contractor to the extent of variable royalty. Then next, fee for granting national permit to goods carriage or state permit. Usually for yellow board vehicles, when they need to go from one state to another state, they need to take permit. That permit charges which is collected by government will be exempted. These are the 14 specific exemptions with respect to services provided by government to business entities. Apart from these 14 specific exemptions, we have 2 general exemptions. In these 2 cases, it will be exempted even if not covered under 14 specific exemptions. Look into the first point. Services provided by government to a business entity whose turnover during the previous year does not exceed threshold limit for registration, but it is not applicable for renting of immobile property. Concentrate. There is an advertising company newly starting business in this year. What is their turnover during previous year? 0. Now government is allowing that advertisement company to place the hoardings for which government is collecting some license fees. Is it covered anywhere in the 14 points? License fees collected by government for allowing a advertising company to place the hoardings anywhere in the 14 exemptions? No. And first general exemption is applicable? Yes, because other than 14 services provided by government to business entity whose turnover during the previous year does not exceed threshold limit, therefore it is exempt because this year only they started. So previous year it is 0, so that service is exempted. Got it? But this first general exemption is not applicable in which case? Renting of immobile property. Then second general exemption, you see, if the value of supply does not exceed 5,000 rupees per invoice. Example, say Taj Hotel is having a pub inside the Taj Hotel and lot of celebrities will be coming to that pub in the night times, Friday night, Saturday night. For that purpose, so Taj Hotel requests Tamil Nadu police to provide the security outside the Taj Hotel, and yes, Tamil Nadu police will provide the security. Now in this case, government is providing services to security services to business entity. Will they provide, sir? Yes, they will provide. Definitely they will provide. And because lot of celebrities will be coming, so for that reason police department will provide, but not for free. They will collect some charges. I am not talking about below the table. Above the table itself they will collect the charges. Okay. And is it covered anywhere in the 14 exemptions? No, it's not covered in the 14 exemptions. And will it come under the first general exemption? Oh, Taj Hotel turnover during the previous year does not exceed threshold limit. Sir, definitely it exceeds. So first general exemption not applicable, but second general exemption will be applicable provided value does not exceed 5,000. Understood? So suppose if it is a continuous supply of service like renting etc. and all, that 5,000 rupees is for a financial year, 1 year. Okay, like say complex, commercial complex, usually in bus stops, railway stations and all, shops will be there, na? That shops belongs to whom? Government will be giving it on rent to various traders, and they are collecting say 1000 rupees per month. Whether it will be taxable or exempted, is it covered in the 14 exemptions? No. First general exemption not applicable to renting of immovable property. Second general exemption is applicable, but 1000 rupees per month. If it is a continuous supply of service, we need to see more than, like if it is 5000, then definitely it will be taxable. 1000 rupees per month. In a 12-month period, how much it will be? 12,000. More than 5000, so taxable. Sir, what is a continuous supply of service? You just write down there. Continuous supply of service means a service which takes more than 3 months to complete. Service more than 3 months to complete. Service greater than 3 months to complete. 3 months to complete. And involves periodic payment obligation. Involves periodic payment obligation. A service which takes more than 3 months to complete, service greater than 3 months to complete, and involves periodic payment obligation. Regularly some payment should be made. Then it is a continuous supply of service. Renting for 1 year means more than 3 months, and monthly rent will be payable. So therefore it's a continuous supply of service. So two general exemptions. What are the two general exemptions? Come on. Services by government to business entity whose turnover during the previous year does not exceed threshold limit. But that exemption is not applicable in case of renting of immovable property. Second general exemption. If the value of supply does not exceed 5000. And if it exceeds 5000, then entirely it will be taxable. For continuous supply of service, it should be 5000 in a financial year. With this, we completed services provided by government. Services provided by government. Now come back to page number 48. So this chart is what we have discussed so far. Services provided by government. Okay. Then look into various definitions related to government. Already we know this. Government means central government, state government, local authority, government authority, government entity, already we discussed. Government agency means what? Generally, government is required to do certain activities, but they will not do everything. They outsource it to some agencies like contractors. Laying down road is the job of the government, but government will not lay down the road. They will give it to one contractor. That contractor will lay down the road. The contractor will be called as government agency. Then government should clean the roads, garbage, etc. Solid waste management. But government is not doing. They outsource it to one company called as Urbaser. You would have seen that company. Okay. So like a lot of people, they are doing this work in the Chennai. That is a company. So that's the reason why today Chennai is clean. So this is the Urbaser. You would have seen lot of people, okay, these people. Done. So this is Urbaser, and that person is also coming under government agency. Person providing services to government in relation to functions entrusted to government as per constitution. Example, Urbaser and contractors, etc. Now we are moving on to services provided to government. In the previous page, what we have seen is services provided by government. Now here government is the recipient. Number one, see carefully. There is a government authority. Who is a government authority? Who is a government authority? Just previous page you see. Any board or authority or body established in an act of parliament or state legislature or a body in which government has invested greater than 90%, greater than or equals to 90% to carry out the functions under constitution. If they provide services to any person, that service will be exempted. Is it clear? Services provided by government authority to any person is exempted. You understood this part? Yes? Now, suppose if any person is providing services to government authority, means first by government authority to any person. Now next, to government authority also exempted. What activities are exempted? read these activities. What are those activities? Water supply, sanitation conservancy, solid waste management, public health, slum improvement and upgradation. Okay, these activities. You remember this easily. Okay, just take an example of a slum. How the slum will be? Wherein, lot of drainages, open drainages will be there, correct? And because of the open drainages, that is sanitation is not proper. Mosquitoes and all will come and it will bite the people who are living over there. So for which dengue, malaria and all will come. So their health gets spoiled. Then they will not have proper drinking water, etc. and all. Every time they need to depend on some lorries to bring and supply the water to them, correct? And thereafter, lot of garbage here and there it will be there. So therefore, that is what you need to remember. Just visualize this. Slum improvement is required. Water problem, water supply, health issue, public health and open drainages, sanitation conservancy. So lot of garbage and all will be there. So solid waste management. These activities to government authorities exempted. Clear pa? What activities? Come on, try, recollect. Slum improvement and upgradation. Next. Water supply, super. Next. Solid waste management. Next. Sanitation conservancy means drainage, filling the drainages with the insecticides, pesticides. Next. Public health. These activities, only these activities to government authorities exempted, all other activities will be taxable. Now, whether services provided to government is covered here, no, that is not covered. Only services provided to government authority. Services provided to government is given in the next point, point number 2. Point number 2 you see. Any person providing services to government is exempted provided it is a pure service. What is a pure service? Labor service. There is no goods element, only labor element with respect to Article 243 GRW of the Constitution. There are some list of activities that is listed out under Article 243 GRW. Just now I told you, RBI is an example. So solid waste management, whose work it is? Government work. But what they are doing? They are outsourcing it to one person. So they are providing the service and that's a pure service which is exempted. So RBI is a company which is providing cleaning work to the government, whether the money collected by them is taxable or exempted under this pure service point. Understood? Then number 2, contractors. What contractors will do? They will lay down the road. Correct here? And in the laying down of road, is it a constitutional function? Yes, it's a constitutional function. What is the value of goods involved in laying down road? Definitely more than 25% of total or less than or equals to 25% of the total. More than 25% of the total. So the second exemption is not applicable. Read the second exemption. Composite supply with respect to Article 243 GRW where the value of goods does not exceed 25% of the total. Okay. So it will be taxable. Why it will be taxable? Because the value of goods exceeds 25% of the total. What if it is sanitation service? In sanitation service also it's not a pure service because they use chemicals for the purpose of filling the drainages. Okay. Now what is the goods element? Chemicals used. What is the service element? One person will take the box and he will pour it on the drainages. You would have seen na. So this kind of activity, both goods and service, definitely the value of goods is not more than 25%. Their chemicals and all is of less value. But the labor effort is only more, so it is exempted. Got it? So tell me what are the 2 exemptions? Come on. This is services provided to government. Number 1, pure services in relation to Article 243 GRW. Number 2, composite supply of goods or services where the value of goods does not exceed 25% of the total. That is also in relation to Article 243 GRW. Then number 3, fair price shops. Fair price shops means what? Ration shops. Ration shops are owned by government? No, not everywhere it is owned by government. They will give agencies. So in your place and all, lot of ration shops will be there. One person will be operating that ration shop. They will get a commission from the government for operating the ration shop. That commission received by them is exempted. That is this fair price shops. Then training program. So there is a coaching center which is conducting NEET coaching. and for conducting NEET coaching to below poverty line students, government will bear some fees. Is it clear? There is a coaching center which will provide NEET coaching. Whether NEET coaching is taxable or exempted. Coaching center providing NEET coaching, taxable or exempted? Taxable, definitely taxable. But in this case, they are providing coaching to below poverty line students. Out of that, if greater than 75% of the expenditure or greater than or equals to 75% of the expenditure is borne by government, then the training program is exempted. Say the fees is 1 lakh. In that 1 lakh, 80,000 rupees is borne by government, 20,000 rupees is paid by the student. What is the treatment? Entire 1 lakh will be exempted. Is it clear? Suppose if there is a training program where 70,000 of the fees is borne by government and 30,000 by the student, then what is your answer? Then taxable. Entirely it will be taxable. Entire 1 lakh will be taxable. Read it. Training program where expenditure borne by government is greater than or equals to 75% of total. Then next, import of services. For what purpose? For non-commercial. Already we discussed import of other than OIDR services by NTR. In that NTR we have government, correct? So government importing services. For what purpose they should be importing? Other than business or commerce. So these are the activities, services provided to government is exempted. Got it? Sir, what if these activities, water supply, sanitation conservancy, solid waste management, etc. provided to government, that's anyhow covered under pure services and it is exempted. Read this. All above services, that is water supply, solid waste management, etc. provided to government falls under pure services and is exempted. Means these activities, even if provided to government also, it is exempted. And whether government includes public works department, yes, that's what I told you. Contractor example, contractors who lay down the roads will also come under exemption provided it is a pure service. Pure service means what? All the material required for laying down the road should be provided by government. If the contractor just lay down the road and collect money, then it is exempted. Then next, this third point already we discussed, that SPV's point. Now look into the next page. Services by governmental entity. So if you have observed, if you have attended last time revision batch to this revision batch, last time batch to this batch, you would have seen complete change in the book. Are you observing? If suppose anyone attended before, you might see the difference. Lot of charts I have incorporated. So because to make you get the clarity and easily understand, okay. So government entity providing services to government or person specified by government. Who is government entity? Who is government entity? Just turn the pages and see. Who is government entity? Same as government authority except that they are established for promoting trade or commerce. So if they provide services to government or any person specified by government, they will receive a grant. That grant will be exempted. Next, look into services by government authority. Already I told you, any service provided by government authority to any person will be exempted. Services provided by government authority to any person is exempted. Okay, so that is this point. Government authority providing services is exempted. Services provided by government authority in relation to any function entrusted under constitution is exempted. Now listen, whether RERA, Real Estate Regulatory Authority, is a government authority, yes. Real Estate Regulatory Authority is a government authority. It is established under an act of parliament. So whatever service provided by them will come under services provided by government authority and therefore it is exempted. That is a CBIC circular. Real Estate Regulatory Authority is a government authority and the statutory collections made by RERA is covered under exemption. That's why this much in detail I explained. Because there is an amendment, definitely they will ask this entire area, they can connect. Then government entity is also same as government authority except that it is not established to carry out any functions under constitution. Therefore, whether this exemption is applicable for government entity? No. This is specifically only for government authority. Hence, the above exemption is not applicable to government entity. Then look into some circulars in this regard. Total 3 circulars are there. Point number 1. Accommodation services is provided by Air Force mess or similar mess to its personnel. Okay, Air Force, people who are working in Air Force or Army or Navy, etc., there will be a mess canteen and they will be providing food to their personnel, employees, for which they collect some charges. Is it taxable or is it exempted? First, it is service provided by government or to government? By government. Now, we should go to services provided by government. Just turn the pages. It should be services provided by government. In service provided by government, is it sovereign function? No. Is it liquor license? No. So, therefore, it is covered under supply. Is it Department of Post? No. Is it airport or port service? No. Indian Railways? No. It is not transportation service and it is not to business entities. It is to others. So, exempted. Read it. Accommodation service provided by Air Force mess or similar mess to its personnel or in relation to other than business entity, and it will be exempted. Next, in North India and all, they will be purchasing wheat flour they will purchase, wheat flour they will purchase, and for distribution in the fair price shops, ration shops. In South India they distribute rice, like that they distribute wheat flour in the ration shops and they are procuring wheat flour. In the wheat flour there are two elements, goods is wheat and grinding it into flour is the service element. Okay. Now you tell me whether the value of goods exceeds 25% of total or does not exceed 25% of the total. Definitely it exceeds 25% of the total, therefore it is taxable. Supply of wheat flour after fortification to government for public distribution in a fair price shop is taxable as the value of goods exceeds 25% of total. Then next, sanitation services provided by Indian Army is not with respect to Article 243W of the Constitution, therefore it is not covered under exemption. That is, sir, is Indian Army government? Yes, Indian Army is government. And there is a person who is providing sanitation services to government. Will it come under pure services? It will come under pure services, but it is not in relation to Article 243 GRW because it is not the job of the Indian Railways. So, due to that reason, it will be covered under exemption or not covered under exemption? Not covered under exemption. Read it again. Sanitation service provided to Indian Army is not with respect to Article 243W and therefore it is not covered under the exemption. Clear? That is with respect to this. We completed renting also already, and now we are moving on to advocate services. Please see that advocate services, page number 61. I just simplified it to a greater extent. Advocate services, see this. First, advocate or arbitrator services we need to see. First we are discussing normal advocate or firm of advocate. Who is a normal advocate? Individual advocates or firm of advocates. Senior advocate. Senior advocate means it is a designation which is given to them by High Court or Supreme Court. So then they are senior advocate. In question it will be given senior advocate. Arbitrator. What arbitrator will do? They settle the disputes out of the court. That is arbitrator. Got it? Now, if there is a supplier, okay, normal advocate or firm of advocate, if they provide service to a person other than business entity. Who is other than business entity? Individuals. That is exempted. Even for senior advocate exempted, even for arbitrator also it is exempted. Is it clear? So, if they provide services to individuals, divorce case exempted. Divorce is for individuals only, na? Companies there is no divorce, correct? So, individuals. Then murder case exempted. Why? Again murder is for individuals only, na? Are you getting this or not? So, if they provide services to individuals, it is exempted. Means 90% of advocates' work is exempted. Am I right? They deal with individuals only, na? Individual litigations. very less will be business entities. Majorly it will be individuals, that is exempted. Let it be senior advocate or normal advocate or firm of advocate or arbitrator, the provision is same. Is it clear? Then second, if they provide service to government authority, government or government entity, then also it is exempted. Who? All three, if they provide services to government, government authority or government entity, it will be exempted, no change. If they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, then also it is exempted. To whom they are providing? To a business entity. What is their turnover during previous year? Does not exceed threshold limit, it is exempted. What are the three common exemptions? Number one, if they provide services to individuals, that is other than business entity. Number two, if they provide services to government, government authority or government entity. Number three, if they provide services to business entity whose turnover during the previous year does not exceed threshold limit. And in other cases, that is to another advocate or firm of advocate, that is normal advocate or firm of advocate providing services to another advocate or firm of advocate is exempted. But senior advocate providing service to another advocate or firm of advocate is not exempted directly. You check that senior advocate or another advocate's ultimate litigant or petitioner or applicant. Ayya, I am a senior advocate, you are another advocate or firm of advocate. Your client will be there, na? Your client, he is my recipient. You understood or not? When I provide service to you, you are not my recipient. Who is my recipient? Your client will be there, na? Your client is my recipient. Is it clear or not? Say this. Ultimate litigant or applicant or petitioner is deemed to be recipient. Accordingly, I need to check whether your client is individual, yes, then my service is exempted. Your client is government, yes, then my service is exempted. Your client is business entity whose turnover during the previous year does not exceed threshold limit, yes, then my service is exempted. Otherwise, it will be taxable. Is it clear? Then, arbitrator providing service to another advocate or firm of advocates, not applicable, not possible, impossible. It is hypothetical because arbitrator will settle the disputes out of the court, but advocate will settle the dispute through the court of law. Why will arbitrator provide service to advocate? It is like allopathy doctor going to a homeopathy doctor. You understood? So they both are practicing different medicines. Why will they approach here? Definitely not possible. So arbitrator will not provide service to another advocate or firm of advocate. We don't have that. So see this, always advocate or arbitrator service falls under RCM if taxable. So wherever taxable, who will pay GST? Recipient. Means advocate service will be either exempted or it will come under RCM. And which means they are exempted from registration. Yes, they are exempted from registration. Services provided by senior advocate to individual advocate or firm of advocate is not exempted. In such case, the ultimate litigant, applicant or petitioner shall be deemed to be recipient. And an advocate and arbitrator are not required to get registered. Why not required to get registered? Because their outward supply will be either exempted or it will be covered under RCM. So they are exempted from registration. Is it clear? Say this, an advocate and an arbitrator are not required to get registered as they are exclusively engaged in supplies covered under RCM. That is given in section 23. Even though they are compulsorily required to get registered if they import any services, even then they are not required to register because they are exempted from registration. Once a person is exempted from registration, don't apply compulsory registration. For example, advocate also will import services. Concentrate are very important point. Advocate also will import services. When advocate imports services, they need to pay GST under RCM, correct or not? Means they need to compulsorily get registered, yes or no? they need to register. But section 23 says that they are exempted from registration. So which will prevail? Again, I am repeating, please concentrate. Advocate, I am an advocate. My outward supply is fully covered under RCM. So I am exempted from registration as per section 23. Now I am importing some services. Already we discussed import of OIDR, other than OIDR, etc. Wherein I need to pay GST under RCM. There you only told me, what if they are not registered? Compulsory registration. As per section 24, I am compulsorily required to get registered. As per section 23, I am exempted from registration. Which will prevail? Section 23 overrides 24. If a person is exempted from registration, they are exempted from registration. That's what I told you. Even while discussing the flow chart yesterday, you please turn the pages and go to supply chapter. In supply chapter, before composite supply, mixed supply, one chart is there, one flow chart is there. You see that flow chart. In that flow chart, what is the page number, ma? 21. So take page number 21. In that page number 21, one chart you will be able to see. In that chart, last point you see, whenever GST is payable under RCM, they are compulsorily required to get registered unless, got it? If they are unless exempted, means if they are exempted from registration, not compulsorily required to get registered. Otherwise, they are compulsorily required to get registered. Understood? Clear? So we completed advocate and arbitrator services. Look into other areas, whatever we have not discussed. Before government services, did we keep anything pending? No. Education services, government services we completed. Renting also we discussed. Now look into sports services. Sports services, page number 52. Now what we are having is miscellaneous here. All small services. So happily listen. Up to 6:30. Listen. Yesterday I asked you already. I asked you, let's complete this chapter so that it will be over. Okay, concentrate please. So in sports services, there is a sponsor. Total 3 exemptions we have for sports related services. Exemption number 1 is sponsorship services. Whenever sponsorship money is collected by recognized sports body from any person, that sponsorship money collected will be exempted. So, let Tata, an example of body corporate or firm, or THARUN'S Brainery, a sole proprietor, any person may give sponsorship money to recognized sports body, that money collected by them will be exempted. Okay. Whereas, if there is a unrecognized sports body, if they are collecting the sponsorship money, that will be taxable. Now we need to check who is the recipient. If the recipient is body corporate or firm, it will come under RCM. If the recipient is other than body corporate or firm, it will be coming under FCM. Is it clear? Because sponsorship services is covered under RCM if the recipient is body corporate or firm. Understood? What is the first exemption you need to remember? Come on. Sponsorship services provided by a recognized sports body. In sponsorship services, who is the supplier, who is the recipient? The one who organizes the event is the supplier, and the one who pays the sponsorship money is the recipient. So if it is provided by recognized sports body, it is exempted. What is a recognized sports body? National Sports Federation. So BCCI will come under that. Then inter-university, BCCI, Indian Hockey Federation, etc. will come under that. Then inter-university sports board, which will conduct the tournaments between the universities. Then Paralympic Committee for physically challenged people. Then Indian Olympic Association, which will conduct national games in India. Then Central Civil Services Culture and Sports Board, which will conduct tournaments for government employees. So railway team and all you would have seen in MS Dhoni movie. So railway team where he will go and play for the railway team by he will join in railways. So that Central Civil Services Cultural and Sports Board. Then Panchayat Sports Board. So Panchayat Sports Board will be at the village level. They will be conducting kabaddi matches or volleyball matches, etc. So they will be coming under Panchayat Sports Board. Total 6 recognized sports bodies. What are they? National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board and Panchayat Sports Board. If they collect any money as sponsorship money, that money collected by them will be exempted. Is it clear? Also, one more point also you remember, service provided by one recognized sports body to another recognized sports body. Example, say Inter-University Sports Board is conducting a cricket tournament and they requested BCCI under National Sports Federation to provide the support. Now in this case, one recognized sports body to another recognized sports body, the service will be exempted. Is it clear? That is this. Service provided by one recognized sports body to another recognized sports body. Then, services provided by individual as a player, referee, umpire, coach, team manager to a recognized sports body is exempted. So, total 5 people. Who are those 5 people? Player, referee, umpire, coach, team manager. Who are others involved in cricket who will provide service to recognized sports body? Commentators, curators, and broadcasting, camera people, then physiotherapists, and then technical experts or pitch curators. All those people are others who provide services. They will be coming under exemption. So, curators, selectors, technical experts, will they come under exemption? No. Only these 5 people. Okay. What about cheer girls? First of all, why will they provide service to recognized sports body? They provide it to unrecognized sports body, na? Correct. Any person providing service to unrecognized sports body will be taxable. Example, Virat Kohli providing service to BCCI and getting a match fee. What is your answer? Exempted. And if he play for IPL, RCB, and he gets money from RCB management, taxable or exempted? Taxable. Same way, there is an umpire. That umpire will be providing services to tournaments, BCCI tournaments. Then what is your answer? Exempted. And almost in IPL matches, all umpires will receive money from Mumbai Indians team management. So what is it? Taxable or exempted? Taxable. Definitely that will be taxable. That is this. Okay. So that is about sports services. Understood? Next. So what are the 3 exemptions? Quickly tell me. Sports services. Number 1, sponsorship money collected by recognized sports body. Number 2, sponsorships, one recognized sports body to another recognized sports body. Next, player, referee, umpire, coach, team manager to recognized sports body. Then next, services by an unincorporated association to its members. There is an unincorporated association, means what? Like a AOP, BOI, like that. They are providing services to their members. If that association is a trade union, industrial labor union, or agricultural labor union, the membership fee collected by them will be exempted. Okay, what are the 3 unions? Trade union means association of traders. Industrial labor union means all workers who are working in the factories. Then agriculture labor union, farmers. If they collect any membership fees, that membership fees will be exempted. Next, suppose if the service itself is exempted, for example, COVID vaccination is exempted. Same COVID vaccination is provided by a housing society to its members during lockdown, that is also exempted. Why? See, the underlying service itself is exempted. Even if it is provided by association to its members also, it will be exempted. Membership fees are maintenance charges collected by a resident welfare association. What is a resident welfare association? Apartment owners association. All the flat owners will form an association, and they will be providing common area maintenance services, for which if they collect maintenance charges up to 7,500 rupees per month per member, then it is exempted. What if it exceeds 7,500 per month per member? Entirely taxable. But trust me, it will not be more than 2,000, 3,000. They have given a higher exemption. This 7,500 and all, you know, when it will exceed, it will be like a gated community where inside swimming pool, then cinema theater, gym, everything will be there. That kind of places only maintenance charges will be more than 7,500. Otherwise, all the apartments which we see in our day-to-day lives and all will not exceed 7,500, and that is exempted. You got it? Then apart from this, any other association, apart from all these things, any other association, if the charges does not exceed 1000 rupees per annum, not per month, per annum per member, then it is exempted. If it exceeds 1000 rupees per annum per member, entirely taxable. Example, ICI is an association, so of members. So who are the members? RCA qualifieds will be members. They need to pay membership fees, yes. They need to pay membership fees. Whether that membership fees will be taxable or exempted, definitely it is taxable because it is greater than 1000 rupees per annum per member. So therefore entirely taxable. Got it? Suppose if we start one association, post-ca like that one association we will start. Protection of Students of Chartered Accountancy Association. Okay, what is the purpose of this association? This association will fight against the student rights. Okay, number one, so we want the suggested answer immediately after the exam. So number one, got it? Required or not required? Immediately after exam, immediately after exam, not after result and all, immediately after exam. Number two, condition number two, that is, the mark sheets, whatever the answer sheets, should be sent to our mail to every person, not that we need to apply for RTA. Everyone should receive it. And suppose if there is a mismatch between suggested answer and the mark sheet, and if they have not given the marks, the evaluator should apologize and give the marks and recorrect it. You understood? And number four, all the, articleship, etc. and all, the timing should be strictly followed. Morning 9 o'clock means 9 o'clock to evening 5 o'clock. Extra time and all, they should not make us work. And if they are making us work, the principal should be punished severely. Got it? So, like this, our association will put the conditions and will fight for the student rights. Now, will you join our association? Of course, yes. And I will keep a membership fees of 500 rupees per annum. Will you join? Yes. Whether this is taxable or exempted? Exempted, because it does not exceed 1000 rupees per annum per member. Got it? And don't ask me, sir, when are you going to start that association? I will not start. If you are starting, please approach me. I will help you. Funding will be mine. How much ever it may be. Even it may be few lakhs also, don't worry. If you are starting, you let me know, contact me, okay? And definitely I will support you in terms of funding, and even I will tell you what are all the things that you need to fight for, okay? Not now. After writing exam, you come, okay? We will do. Then see this. You understood this exemption? Please respond. What is that? Trade union, industrial union, agricultural labor union, it is exempted. If the service itself is exempted, then it is exempted. Membership fees or maintenance charges. Resident Welfare Association up to 7,500 per month per member. Any other association up to 1000 rupees per annum per member. Now see this. This is a very important circular. Definitely this can be tested, related to electricity charges. Electricity charges which are incurred by the association and collected it from the members. Who will pay the EB, electricity bill? Who will pay the electricity bill? Association will pay. Actually, bill is in whose name? Member's name. Member's name. Who paid? Association paid. Again, in turn recovered from the members. Will it be added in the maintenance charges or it will not be added in the maintenance charges? It should not be added in the maintenance charges, because the bill is in the name of the member, which the association pay and just recover. This is like a pure agent concept, and that should not be included in the value. Is it clear or not? Say this. Electricity supplied by malls, airport operators, real estate owners or resident welfare association, they pay the electricity charges on behalf of members and claims reimbursement of actual electricity charges from members. Means they will become a pure agent. Will it be included in the value or it will not be included in the value? It will not be included in the value. Suppose if the bill is in the name of the association, carefully listen. First case, the bill was in the name of members. Who paid? Association. In turn, it is recovered from the members. It will not be added to 7,500. Is it clear? Maintenance charges. Suppose the bill is in the name of the association and they divide it between the members and recover on actual basis. Actual basis means they pay 5,000. that 5,000 only they are recovering from the members, then also it will not be included in the value while counting 7,500 rupees. Don't include it in the value while counting 7,500 rupees because again it is deemed to be pure agent. Collects from members on actual basis for electricity as charged by the board, electricity board, deemed as pure agent. It will be forming part of value or it shall not form part of value. It shall not form part of value. Suppose if they collect from the members on ad hoc basis. What is this? Some associations, what they do, common electricity bill will be there, motor bill, common area bill, lift, etc. and all. What they do, some ad hoc amount they will collect. Okay, monthly you pay 1,000 rupees like that. But monthly 1,000 rupees when they collect from the members, the real amount what they pay may not be that much. Say there are 10 flats per 10 into 1,000, 10,000. But really that much they are paying? No, they may not be paying 10,000, they may pay 5,000, 6,000 like that. Remaining 4,000 they will keep and use it for expenses, etc. and all. Now in that case, whether the 1,000 rupees collected ad hoc should be included in the value? Yes. Collects charges from members on ad hoc basis. Underline here, actual basis. Here, ad hoc basis. Collects charges from members on ad hoc basis, which sometimes exceeds the actual electricity charges of electricity board. Will it form part of value? Yes, it shall form part of value entirely. And if Resident Welfare Association collects an amount exceeding 7,500 per month per member, then entire amount is taxable, even though there are some contrary judgments. Practically, if you see in Tamil Nadu, only the excess will be taxable because of the Madras High Court decision. But that will be not applicable for your exam. For your exam, if it crosses 7,500 per month per member, then entirely it will be taxable. Understood this? Then, transportation sector, already we have completed. Import of services also we have completed. Now look into construction services. Page number 59. Construction services you see. Read the first point and second point and tell me what are the exemptions you can, like what are the differences you can find in these two. First point you read, construction of individual house irrespective of floor area or cost, not as a part of complex, is exempted. What is an individual house? House occupied by a single family. And it should be a pure labor contract and not a works contract. Then the entire money collected will be exempted. Then second point, construction, repair, alteration, renovation, etc. of following project is exempted. What is that? Housing for all mission or Pradhana Mantri Awas Yojana. These two projects are exempted. Okay, what is exempted? Construction, repair, alteration, etc. Now read these two and tell me what are the differences you can find in this. Come on. First case, only construction. Second case, construction as well as repair. First case, it should be individual house. Second case, it is housing for all mission or Pradhana Mantri Awas Yojana. Is it clear? Then whatever money that they are collecting will be exempted, and in both cases, it should be a pure labor contract. It should not be a works contract. Okay. Now, you know this Antilla, like that one house is there. You know, na? Mukesh Ambani's house. This is the house. Okay. Antilla, like that one house is there. It is an individual house. It is an individual house. For construction of this individual house, a contractor receives the money. Taxable or exempted? Exempted. Exempted. Sir, why sir? This is an individual house. See the first point. Construction of a individual house. What is an individual house? House occupied by a single family. Yes, house occupied by a single family. So money collected will be exempted. What is the criteria for individual house, sir? Simple. There should be only one kitchen. Number of floors irrelevant. If there is only one kitchen, it's an individual house. And coincidentally in this building, one floor full is kitchen only. You understood? So therefore, it will be coming under individual house. And the builder who constructed this house, so the money collected by them is exempted. You understood? And what is the condition? What is the condition? It should be a pure labor contract. Means material should be supplied by the recipient. logically, when I buy the material, I'll buy in recipient name. I buy the material I buy the material in recipient name, means it is as good as material given by the recipient only na. So the money I am collecting will be exempted. I don't know what they were smoking while drafting this. So this is one stupid exemption. Lot of loopholes are there in this. Construction of an individual house. Second, construction, repair or alteration of these two projects, Housing for All, Pradhana Mantri Awas Yojana. Next, look into the third point. Understood the first 2 points here? Next, third point, you listen. That is, generally, this land is excluded from supply. But when you buy a flat, you are also paying for the land. When you buy a flat, you also pay for the land below the flat, called as UDS, undivided share of land. For example, if there is a land of 2,500 square feet, in that 2,500 square feet, suppose if 5 flats are constructed, each flat will have a UDS of 250 square feet. What is that? 500 square feet. So 2,500 divided by 5. 500 square feet is the UDS. Means whenever you pay money, you also pay money for the land. Then logically, GST should not be payable on entire flat value. There should be a reduction. For that reason, they gave this exemption. That is, out of the gross amount, say for example, you pay 75 lakhs to purchase a flat. In that 75 lakhs, one third is what? 25 lakhs will be exempted. So GST payable only on 50 lakhs. Read that point. 1/3 of the gross value of the flat is exempted towards land or undivided share of land. When the gross value includes value of the land. Is it clear? Then next one, you can see TDR, FSI and long-term lease, an exemption related to that. So before that, we need to see what is the meaning of TDR, FSI and long-term lease. So say this. First we will understand what is TDR and what is FSI, etc. So first we will see what is FSI. So what is FSI? Ratio of building or complex to the total area of the plot on which it is built. That is known as FSI. For example, so actually FSI is built up area divided by plot area. So built up area is 20,000 square feet. Plot area is 10,000 square feet. So what will be FSI? 2. So who will determine the limits? Municipal authorities, yes. How much I can construct? Some areas only ground plus 2 will be allowed. Some areas ground plus 3 is allowed. Some areas only ground floor and first floor will only be allowed. So all these things, who will determine? That is FSI limits. Who will determine? The municipal authorities. They see the width of the road, they see the soil capacity and they see the neighborhood. There are a lot of factors before giving this particular FSI. And FSI, usually if you see, if the width of the road is very good, Anna Nagar and all, FSI is very good, 2.5, 3 and all they will be giving, because all are 100 feet road, etc. But if you see other areas like Triplicane, Mylapore, etc. and all, that much of FSI they will not be giving, because the width of the road is so small. And again, in Velachery, Kolattur, etc., some areas which were previously lakes, there they will not give too much FSI, because if big buildings are constructed, easily it will fall. So for that reason, okay, that is how FSI will be determined. So what is the meaning of TDR? First we discussed FSI. Now we are looking into TDR. What is TDR? Transferable Development Rights. So whenever his house was getting demolished, that person is telling I don't need money, but when the government is offering TDR, he accepted the TDR. What is the power of the TDR? What he can do with the TDR? See this. What he can do with the TDR? Already he is having a building, already he is having a land, some other land. In that land, how much he can construct? Say 2 he can construct, means if he is having 1500 square feet, he can construct 3000 square feet, correct or not? Now, if he want to construct more than 3000 square feet, logically not possible, but with the help of TDR, he can construct. Is it clear or not? Say he has 2 land spa. Land number 1, 1000 square feet. Land number 2, 1500 square feet. Land number 1 gone because rail project, metro rail, they have taken. They gave 1000 square feet of TDR to me. Land 2, 1500 square feet. Say 2 is the FSI. How much I can construct in land 2? 3000. Now I want to construct more than that. Possible? Yes. I have land 1 ka TDR na. That into 2. How much? 2000. So 3000 plus 2000, 5000 square feet I can construct. Means 5 floors I can construct. You got it? So that is the cheat code. The cheat code for FSI is TDR. They are only telling this much only you can construct. Now they are only telling if you want to construct, you need to have TDR. You got it? Now they created a artificial hype for TDR. Got it? Now, what the owner can do with the TDRC? Either he can construct, he can exceed the FSI. Say if he don't want to exceed FSI, what he can do? You understood? He can also sell it to some other builder who needs more FSI. Is it clear? So there is a value now. What is the advantage of this to government? 1 rupee they are not spending, just one paper they gave. One paper they gave, 1 rupee also they are not spending, and they created an artificial hype for this paper by telling FSI, this much only you can construct. Are you understanding this? Now, the landowner will be transferring the TDR to the builder, and the builder can do more constructions. Okay, that is number of floors. That's where if you see in some areas, some buildings will be 20 floors, some buildings will be only 5 floors. Why such a disparity? Because of the TDR. So this is 4000 to 6000 some 10 years before. Today it is going for 15,000 to 20,000 in Chennai itself. So 10,000 to 15,000 is the rate of this TDR. Now concentrate. I am a landowner. I have unutilized FSI. Unutilized FSI means, say I have 2500 square feet of land and the FSI is 2, which means how much can I construct? 5000 square feet I can construct, but I constructed only 1000 square feet. What is the unutilized FSI? 4000 square feet. That 4000 square feet I can give to a builder, and that builder will do the construction, flats and all he will construct. As I gave him 4000 square feet of unutilized FSI, land is mine only, the 1000 square feet is mine only, I am only staying there, but I gave the unutilized FSI for which he constructed, say some 4 flats he constructed. In that 4 flats, 2 flats he will be giving to me as a consideration, because I am allowing him to enjoy that 4000 square feet. What is the advantage for him? Without investment on land, he is able to construct 4 flats and he is able to sell that. So 2 flats. So that's why he will be giving me 2 flats to me. Is it clear or not? Now landowner transfers the unutilized FSI to the builder, for which builder will pay the non-monetary consideration. On that non-monetary consideration, who will pay GST? The builder will pay GST under RCM. Is it clear or not? Same way, TDR. Now I have a TDR. What I can do with the TDR? I can transfer it to the builder. When I transfer it to the builder, he will give me consideration. Again on that consideration, who will pay GST? The builder will pay GST. Now third one, that is long-term lease of land. Long-term lease of land means lease for a period more than 30 years. So I am having a land which I am giving on lease to a builder. For what period I am giving on lease? Greater than or equals to 30 years, for which I am collecting some rental, lease rental. All these 3 cases, I will not pay GST. Who will pay GST? The promoter or builder will pay GST. That promoter or builder, when they pay GST under RCM, they get an exemption. What is that exemption they get? Using this, they do the construction. In that construction, how much is the residential units ka area divided by total carpet area of the project? To that proportion, they will get an exemption. So see the chart in the next page, you will understand. Say this. There is a landowner who is transferring TDR FSI long-term lease to promoter or builder, for which promoter or builder pays a consideration of 10 lakhs. This may be monetary or non-monetary, and this will be taxable under RCM. So who is liable to pay GST? The promoter or builder is liable to pay GST. Got it? However, there is a proportionate exemption. To what proportion exemption will be given? To the proportion of residential units booked before completion certificate or first occupation divided by total carpet area. How many units they have constructed? How many units they have constructed? 100. In that 100, how many are residential? How many are residential? 60. In that 60, how many got booked before completion certificate? 25. So 25 divided by 100 will be exempted. Is it clear? What is 25 by 100 is exempted? Ayya, out of this 10 lakhs, they need to pay GST na. So how much GST they need to pay? Gross GST will be 1,80,000. 1,80,000 because they pay 10 lakhs. They pay 10 lakhs. On the 10 lakhs, they need to pay 18%, 1,80,000. But full 1,80,000 they don't have to pay. Proportionate to this residential units divided by total carpet area, that is 25 by 100, 45,000 will be exempted. Remaining 1,35,000 only they need to pay. Is it clear? Now tell me, what is the formula for the exemption? Come on. Value of inward supply into 18% into carpet area of the residential units booked before completion certificate or first occupation, whichever is earlier, divided by total floor area of all the flats in the project. Is it clear? So this is about this exemption, and I gave one illustration related to this. Fine. Continuing to the previous session, we were into the discussion related to this exemption for inward supply of TDR, FSI and long-term lease. I said that I will repeat it again. So look into this discussion. Please take page number 60. Please take page number 60. There is a landowner who is transferring TDR, FSI and long-term lease to promoter or builder, for which promoter or builder pays the consideration, that is 10 lakhs. And I told you that this particular transaction is covered under RCM. Already we understood what is the meaning of TDR, FSI and long-term lease. TDR means transferable development rights, FSI means floor space index, and long-term lease means lease for a period greater than or equals to 30 years. And on this 10 lakhs, the promoter or builder will pay GST under RCM. So what is the rate at which they will pay GST? On this 10 lakhs, 18% they need to pay GST. So the liability will be 10 lakhs into 18%, that is 1,80,000. But what happens here? Using this TDR, FSI long-term lease, a promoter or builder is making total 100 units. Total 100 units. But the exemption will be given only for residential units. Why the exemption is given for residential units? Because these residential units are taxable at the rate of 1.5% or 7.5% without ITC. Means a promoter or builder cannot take ITC on their inward supplies. As they cannot take ITC on their inward supplies, due to that reason, their outward supply will be taxable at 1.5%, 7.5%, means there is a burden. There is a tax burden, ITC not available. So to ease out that burden, they are telling, okay, to whatever extent residential units, that too booked before completion certificate, to that proportionate, we will give you exemption. So what is the proportion? 25 units out of the total 100 units, which means 10 lakhs into 18%, 1,80,000, 1,80,000 into 25 divided by 100, 45,000 will be exempted. Remaining 1,35,000 is the value on which GST will be payable. So that's what you need to remember, this formula. So exemption with respect to inward supply of TDR, FSI and long-term lease, see the previous page. That is value of inward supply into 18% into carpet area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area of the project. So what we need to see, for example, value of inward supply 10 lakhs, already I told you 18%, 1 lakh 80. Sometimes they will give the number of units like this. Sometimes they will not give the units, they will give carpet area of the property. Based on area of property you take. So how much is the residential area booked before completion certificate? 28,000 square feet. What is the total area of the project? That is all apartments put together. That is 50,000 square feet. So to what extent exemption will be given? 1 lakh 80 into 28,000 divided by 50,000. To the extent of 1 lakh 800 there will be exemption. So therefore 1 lakh 80 minus 1 lakh 800, the remaining amount they need to pay GST under RCM. So this is with respect to inward supply of TDR, FSI and long term lease. Then there is one latest amendment in this regard, taxability of preferential location charges. Preferential location charges means whenever we wanted east facing flat or beach view flat or flat in the first floor, etc. and all, or flat with covered car parking, we need to pay extra money. That is called as preferential location charges. Some people will feel like for their horoscope, north facing flat will be best and east facing flat will be best. No, it's all about the belief, what they believe in. And taking this as an advantage, builders also will collect some extra money. So what is the treatment of that extra money that is collected by the builder? Simple. Whether that extra money that we are paying along with the purchase of the flat or separately are we paying? If you pay along with the purchase of the flat, whatever is the rate applicable to flat, that will be applicable for that extra charges also. Suppose if that flat there is no GST. Why there is no GST on flat? When there is no GST on flat, if entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, then there is no GST on the flat. Even on that preferential location charges also there is no GST. Suppose if that flat is taxable at 1.5%, preferential location also 1.5%, like a composite supply we treat it. Say this, taxability of preferential location charges, be careful, definitely this will be connected as one adjustment in the question. Paid along with the consideration for construction service, treated as construction service by applying composite supply and taxable based on construction service. And if entire consideration is after obtaining completion certificate or first occupation, whichever is earlier, as the construction is not chargeable to GST, so this preferential location charges also not a supply. Suppose in other cases means what? Already we have seen. If part consideration before, part consideration after, or entire consideration after, that will be chargeable to GST, it is a supply. So this preferential location charges also chargeable to GST. Sometimes what they will do, first they will buy the flat. After buying the flat, so they will be knowing that the car parking will be outside in the sense open car parking. Open car parking means definitely the car gets spoiled because of the sunlight, rain and other reasons, dust, etc. For that reason they want a closed cover parking. But for closed cover parking they need to pay 5 lakhs extra and they are okay. Compared to the car, say they have a car worth 30 lakhs, 40 lakhs. For that 5 lakhs is not a big deal, it's okay. So because ultimately we need to protect that car, for that reason they pay 5 lakhs. Are they paying it at the time of purchase of the flat or later? Later. What is the treatment of that? It's an independent supply, taxable at the separate rate, that is 18%. Say this, paid separately, independent of construction service, taxable separately as supply of service, where the GST rate will be 18%. So that is about taxability of preferential location charges. Then next, so see this circular, whether GST is applicable on annuities paid for construction of road. This point again it will be coming in miscellaneous exemptions. I am connecting it now itself. Generally for construction of road, the builder will construct the road and they will be collecting toll charges from the people who are using that road. So many times in highways when you are going, so when we take a car, we need to pay some 40 rupees or 50 rupees as toll charges. Na? What is the logic behind the toll charges? Government will put the road and on the people who are using that road, they will be recovering the toll charges, which is nothing but recovery of their investment. So this recovery of investment will be nothing but exempted. It is exempted, no need to pay GST on that. Sometimes rather than recovering it from the people, they will recover it from the government by way of installments. Whether that is also equal to toll charges? No, that is not equal to toll charges. That is normal consideration and that will be chargeable to GST. Is it clear? So that is this. GST is applicable on annuities paid for construction of road where certain portion of consideration received upfront while remaining payment is made through deferred annuity spread over years. In this regard, you write down one point. However, collection of toll charges is exempted. However, collection of toll charges is exempted. Toll charges is exempted. However, collection of toll charges is exempted. Then, already this point also I told yesterday itself that 1/3 deduction will be available in case of sale of land, and I just gave you the example here. You see that sale value of the flat including value of land or UDS is 75 lakhs, and in that 75 lakhs how much will be the reduction that we will be getting? 1/3, means 75 lakhs into 1/3, that is 25 lakhs we will get as a reduction. Remaining 50 lakhs is the value on which GST will be payable. Suppose sometimes in question they will give the split separately, that is land value is this much, building value is this much, like that split they will give. Then in that case what we need to do? In that case you club everything. For example, land value is 40 lakhs, 50 lakhs and flat is 40 lakhs. Then what we need to do? Then also same story, club everything. 50 plus 40, how much? 90. In that 90, 1/3 will be reduced. So 90 into 1/3, 30 lakhs. So what is the balance? 60 lakhs. 60 lakhs is the value on which GST will be payable. Are you understanding this? So if they give single value or if they give separate value also, you need to always do this adjustment. 1/3 of the gross amount will be excluded towards undivided share of land. Remaining only will be chargeable to GST. Is it clear? Then next we are moving on to, so we completed all the services. Now look into exemptions under IGST Act. Sector wise we have completed. There are some specific exemptions under IGST Act. Look into that in page number 61. Here the first point is simple. Supplier of service is located outside India. Recipient of service also located outside India. How can Indian government charge GST on that? Indian government cannot charge GST. For example, there is a person who go to US and watch a movie in US. Okay, say for example, Good, Bad, Ugly and all is releasing, and our person is going there outside India and they are watching there in US because they want to watch first. You know that US movie will release first, you know that, and first it will release in US and then it will come in India. So our people will go there, will watch, will take a phone and will capture the title etc and all, and they will put it in their status that I watched like that, and the people will be waiting for their review. So therefore a person is going outside India to watch a movie. Now in this case, can the Indian government charge GST on that? How can they charge? Supplier of service is theatre owner outside India. Recipient is also outside India. So GST cannot be collected. Is it clear or not? And we don't have like residence based taxation in GST wherein, so if it is income tax na, so if there is a non-resident also, if there is Indian income, they need to pay GST like that. Rarely only it can happen. But in this case completely they are telling, if supplier of service is outside India, recipient of service also outside India, then there is no GST, all services are exempted. Then next second point, there is an Indian tour operator. That Indian tour operator is providing tour operator service to a foreign tourist in relation to the tour conducted fully outside India. For example, say there is an Indian tour operator and a US citizen is asking the Indian tour operator to conduct the tour in Australia, okay, or to conduct the tour in Sri Lanka. So Indian tour operator receives money. Why will a US citizen ask Indian tour operator? Because Sri Lanka is a neighboring country to India. So better, definitely Indian tour operators will have more idea about Sri Lanka than any other person. For that reason, they are asking Indian tour operator. Now where the tour is conducted? Completely outside India. Whatever money that is collected will be exempted. See there. Services provided by a tour operator to whom? To a foreign tourist in relation to the tour conducted fully outside India. What if the tour is conducted fully in India, then it will be taxable. We don't have any exemption. Okay. And won't it become export of service? Again, no. Why? Because tour operator is an intermediary. Intermediary means location of supplier will be place of supply. But to become export of service, the place of supply should be outside India. So due to that reason, it is not an export of service. Read that. Tour operator service is intermediary service and the place of supply is location of supplier. Therefore, it cannot be regarded as export of services. Is it clear? Next. Services provided by a tour operator to a foreign tourist in relation to a tour conducted partly in India and partly outside India. What is this? So tour is conducted partly in India, partly outside India. So then whether exemption is available? Yes, exemption is available. Proportionate to tour conducted outside India. So we need to see total value of inward supply, like total value of supply, that is consideration, into number of days the tour is conducted outside India divided by total number of days. For example, if the tour is conducted outside India for 6 days, one second. Yes, say this. If the tour is conducted outside India, total consideration for the tour, total consideration for the tour is say 1,50,000. 1,50,000. Tour outside India is for say 6 days, and tour in India is for 4 days. Then to what extent it will be exempted? So what is it they are telling? The exemption will be A, that is total consideration 1,50,000 into number of days the tour is conducted outside India 6 divided by total number of days 10, that will be equals to 1,50,000 into 6 by 10. So 30, that is 90,000. Correct? Then next B, 1,50,000 into 50%. What is that? 75,000. Whichever is lower. So that is 75,000 will be exempted. Is it clear? So what is the taxable value? Therefore, what is the taxable value? The taxable value will be 75,000. Understood? So that is this. If the tour is conducted partly in India, partly outside India, exemption will be total consideration into number of days the tour is outside India divided by total number of days, or total consideration into 50%, whichever is lower. What if the number of days the tour conducted outside India is for 12 hours or more than 12 hours? Take it as full day. Take it as full day. Greater than or equals to 12 hours, take it as full day. If it is less than 12 hours, take it as half day. Don't ignore it. Take it as half day, okay, and do the computation accordingly. Then fourth point, services provided by an intermediary. So that intermediary is connecting a supplier outside India and a recipient outside India. There is a seller outside India, buyer outside India. I am a broker or an agent. I am connecting the seller and a buyer outside India, for which I get a commission. That commission is exempted. Is it clear? Seller outside India, buyer outside India, I am getting a commission. That commission is exempted. Again, won't it become export of service? Definitely no. Why it will not become export of services? Because again, place of supply should be outside India for export of service. But in case of intermediary service, the place of supply will be India. That's why it will not become export of services. That is about this 4 exemptions under IGST Act. Then some miscellaneous exemptions you can see. Transfer of a going concern as a whole or independent part thereof. That is slump sale. In capital gains, you might have come across slump sale, transfer of a business as it is. On that there is no GST. Already we have capital gain tax. They don't want to charge any GST. So in GST they have given the exemption. Then second point, supply of service associated with transit cargo to Nepal and Bhutan. India map you have an idea now. And India map if you see, like India map above there will be Nepal and Bhutan. Nepal and Bhutan are surrounded by Myanmar, and then we have China and India. So it is surrounded by land. So if they want to import through waterways, so they cannot import through waterways. So the goods will be first imported into India, and through land route it will be going to Nepal and Bhutan. This is known as transit cargo to Nepal and Bhutan. For the transit cargo, if you provide any services like loading, unloading or transportation, any services, that service will be exempted. Sometimes what will happen, the vehicle will go to Nepal and Bhutan carrying the goods. After they unload the goods, the vehicle will return empty. When the vehicle returns empty, for that return also we will be collecting some money, correct? Generally auto people you would have seen night times and all, what they say, so sir, I have to drop you and come empty sir, so for return also you pay, then only I will come, like that they will tell, correct? So then what about the return charges? That is also exempted. But suppose if they carry some goods and if they come from Nepal and Bhutan, that freight will not be exempted. Read there properly. Supply of service associated with transit cargo to Nepal and Bhutan, both to and from covered in the exemption, both to and from, as per CBSE circular, when if the cargo container returns empty. Then service by way of collecting or providing news by independent journalists, those who are not associated with any newspaper or magazines, but they will be collecting the news and selling the news to news channels or media, etc. They get some money, that money received by them will be exempted. Then Press Trust of India, United News of India, these are news broadcasting agencies. For example, I wanted to disseminate the news. I have an information which I wanted to give. For example, say, one person will tell like so and so actor has cheated me, like that and all they will tell. Now the actor needs to respond. If the actor is not responding, then these allegations will become true only. So what that actor will do, that actor has to go to the Press Trust of India or United News of India and needs to speak, and that information needs to be displayed to all the telechannels or newspapers, that is this PTI and UNI. Next time when you read any English newspaper, you see there will be a column, some information they will write, news they will write, source they will give, PTI, UNI, like that they will be mentioning. So that is this broadcasting agency. So money collected by them is also exempted. Then service of public libraries by way of lending books, publications or other knowledge enhancing content or material. So that is lending libraries. So nowadays also people will go to libraries, not to read books, to read each other, but generally to libraries people will go and borrow books also. That lending fees will be exempted provided it is a public library. Okay. So ICI is also having a library. In that library students will go and will be taking books on rent, and they pay the lending fees. Whether it is a public library? No, it's not a public library, it is only for CS students. And whether this will be coming under chargeable, that is taxable, or exempted? Even though it is not a public library, but it will be exempted. Where it is covered under exemption? It is covered under services provided by an educational institution to its students, faculty and staff. In that category it will be coming under exemption. Got it? Then service by an organizer. There is a business organizer. What they are doing? They are organizing the exhibitions outside India. So the success of any product depends upon the marketing today. You understood? So if there is no proper marketing, no one will be able to do business. That is the order. And even service sector also. Any business that we need to do marketing, you understood? Otherwise people will not know anything about anyone. And products also same. So what these manufacturing companies will do, they will be participating in the business exhibitions. Where the exhibition is held? Outside India. Who is organizing that business exhibition? A person in India. Supplier also India, recipient also India, but the exhibition is held outside India. For that exhibition, if any amount is collected, that is exempted. What if exhibition is held in India? Then it will be taxable. Read that point once again. Services by an organizer to any person in respect of business exhibition. Where is it held? Outside India. Then service by way of public conveniences. That is this washroom, lavatories, etc. Public toilets are there, na? they collect 2 rupees, 5 rupees, etc. for allowing you to use the toilets. Whether that 2 rupees, 5 rupees is taxable or exempted, thank God it is exempted. There is no GST on that. Okay, but I don't think so it will cross 20 lakhs and all, correct? Threshold limit it will cross. I don't think so. Our people like open space only, where they will go and pay and use. So public conveniences is exempted. Next, service by way of access to road or bridge on payment of toll charges. This is the point I was referring to. Toll charges which are collected for laying down the road will be exempted. However, other than by way of annuity, just now I told you na, what is the meaning of annuity? Rather than people paying the toll charges, the government only will pay, because lot of people will object to the toll. So they will say, this many days we are using this road and we are not paying toll charges. Suddenly if you levy toll charges, we will not pay like that. When people object, government will tell, fine, don't worry, we will only pay to the builder like that. That is called as annuity, and that annuity will be taxable. But only toll charges collected from the people who are using the road, that is only exempted. Sometimes we will not have fast tag sticker. When we are not having fast tag sticker, they collect extra toll charges. Have you observed? That extra toll charges is also exempted. Sometimes big lorries and all, heavy load they will be taking. So they have to pay overloading charges. Those overloading charges is also exempted. You can see here. Overloading charges at toll plazas is also exempted. Higher toll charges for not having a functional fast tag is also exempted. Then next, services by a performance artist. Who is a performance artist? One who performs before the audience is known as performance artist, not one who performs before the camera, because performance before the camera is very easy. Performance before the audience is very difficult. So simple. So recorded class like that I can easily take, because cut, ot. You understood? So cutting and otting, and we can do. But taking a class full day, morning to evening, standing, so that requires the dedication, and that's where the pain will be known. So therefore, I'm not telling about myself. Everyone, every faculty who is taking face-to-face classes, so the reality will be known only when they take face-to-face classes. Recorded classes everyone can take. So yesterday, day before yesterday, cleared people also can come and take recorded classes. But face-to-face is something which only a hard-working faculty can only take, because that requires dedication. Same is the case. Before camera, anyone can act, but acting before the audience without making an error, that is important. That's where the exemption is given to performance artist. I'm not telling that I am a performance artist and all. I gave you an example here. Performance artist will get the exemption. How much will be the exemption for a performance artist? How much should be their consideration? Should not exceed 1,50,000 per performance. Okay. If it exceeds 1,50,000 per performance, then entirely it will be taxable. Per performance. And what if an actor or a person, an artist, is giving a performance, say Bharatanatyam performance, 2 performances in one show, wherein for each performance we need to see, but cumulatively 2 lakhs. 2 lakhs divided by 2, that is 1 lakh. Even though 2 lakhs, if you see total, it is more than 1,50,000, but per performance, if you see, it is only 1 lakh, which does not exceed 1,50,000. Due to that reason, it is exempted. In what art form they need to perform? Either music or dance or theater. And it what genre? In what genre? Folk or classical. Classical means which got the national recognition, like Bharatanatyam, then Kuchipudi, Kathakali, then even Mohiniyattam. These are all something. Whereas folk means native to that particular area. Example, Karagattam, Nayandi. These are all something which is native to Tamil Nadu, that will come under folk. Either folk or classical art form, or music, dance or theatre, where the amount charged is up to 1,50,000 for a performance, excluding service provided by such artists as a brand ambassador. Brand ambassador means, so they will be promoting a particular brand and they will be performing. So then in that case, it will not be coming under exemption. What if it is a event, cultural event that is sponsored by a company? It's okay. Sponsored by a company, it is okay, because today lot of events are sponsored by various people, that's okay. But to promote a particular brand only they are performing, okay. For example, hair care brands and all, what they do, hair oil brands, they will be asking some Bharatanatyam dancers to go to the villages and perform the Bharatanatyam dance show and endorse the hair oil, because still there is a misconception that because of using that hair oil only Bharatanatyam dancers will have long hair. First of all, none of the Bharatanatyam dancers will have long hair, they cannot maintain. So maintaining hair is very difficult, you ask me, I will tell you. So therefore what they do is that, you know, it is everything is attachment only, okay. But God has given them very good benefit that if they attach also, no one will know that it is like an attachment. When we put attachment and all, easily everyone will come to know, you understood or not. And therefore this rural people don't know this fact. For that reason, these hair oil brands and all will use Bharatanatyam dancers for endorsing their product. Then even though the amount does not exceed 1,50,000, that will be taxable. Is that clear? Next, point number 9. Services by way of training or coaching in recreational activities relating to arts or culture. So arts or culture, what is that? Arts, example, dance classes, music classes, drawing classes, or any kind of arts like karate, kung fu, etc. All arts classes will be exempted, provided that arts classes should be conducted by an individual. If it is by a firm or company, etc., then it will be taxable. Then culture, that culture also should be by an individual. Culture means imparting Vedas, imparting languages, imparting Upanishads, etc. That will be coming under culture, that should also be by an individual. Then suppose if it is sports, training academies, there are a lot of sports academies, cricket academy, badminton academy, shuttle academies, etc. And all these academies are exempted, provided it is by a charitable trust. And MRF Cricket Academy, like that one cricket academy is there, very popular cricket academy in Chennai, in India, and lot of big national players are from that MRF Cricket Academy only, and they charge 5 lakh rupees per annum as fees for training in cricket. Whether that 5 lakhs will be taxable or exempted, definitely taxable, because that is not a charitable trust. What if they create that as a charitable trust? Then it will be exempted. Then satellite launch services supplied by a person, by any person. Previously they gave it only for ISRO, etc. But now they are telling any person, mainly to invite foreign satellite operators, mainly SpaceX, mainly Elon Musk. They wanted Elon Musk to come to India and start the business of satellite operations, so that lot of employment potential gets created and we get lot of revenue inflow, foreign currency inflow to India. For that reason, so they have brought in this exemption, any person, satellite launch service by any person. Then service of transmission or distribution of electricity by an electricity transmission or distribution utility. That's what I told you last class itself. Electricity is exempted, and any transmission of electricity. Transmission means from the place where the electricity is generated to the place where it is distributed, they will send the electricity through power grid. If you see outskirts of Chennai and all, big transformers, the power grid will be coming. And as soon as you enter into Chennai, beginning, there will be substations. From the substations, they do the underground electricity network for the purpose of distribution of electricity. In some areas, on the top also, lines, poles and all will be there. That is distribution. But let it be transmission, let it be distribution, that electricity is exempted. Previously, electricity was only exempted, but other activities related to electricity was not exempted. Example, for increase in the phase, 1 phase to 3 phase, or increasing in the power load, or changing the meter from one location to another location, or meter rent, then issuing duplicate bill, all these things previously was taxable, but now for May 25 exam, they brought in as an amendment. So all other incidental activities or ancillary activities relating to electricity is also exempted. See the next point, supply of services by way of providing metering equipment on rent, then testing of meters. Sometimes meter testing will be done, because in my house also, so 2 months, 4 months before, I got a bill of 25,000 rupees, electricity bill for 2 months, 25,000 electricity bill. that much I am not using and all here in my home, and I did not understand what is it, and for which I asked the electricity department. They said we need to test the meter, and they tested meter. Someone's electricity and all got added to my meter, you understood, and for that purpose I have to pay, and for meter testing I paid some extra charges, 1500 plus GST. At that time this exemption was not there. Had it been there, at least the GST I would have saved. Okay, so now it is exempted. Testing for meters, releasing electricity connection. For getting a new connection, we need to pay some charges. That is also exempted. Shifting of meters or service lines. See, not only these activities, don't just get carried away. So, etc. Highlight that. Etc. 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 means these are all illustrative list. Apart from that, any other activities which are incidental or ancillary to supply of transmission or distribution of electricity provided by an electricity transmission and distribution utilities to their consumers is exempted. Got it? Next, last one, in income tax, section 35 of Income Tax Act, scientific research expenditure, have you heard of that? And any money contributed by the company. If the company or any person is incurring expenditure on scientific research, 100% of the expenditure is allowed as deduction in income tax. Instead of spending the money on scientific research, they can donate it to one association, scientific research association or a university which is carrying out scientific research. Then also they will get a deduction. Like that, one point is there in income tax. You know that? Now, that association or university which got the fund for doing scientific research, now I want to carry out a scientific research. I am one individual. Now I will approach that association or that university for scientific research, and they will give me a grant. They will give me the fund. That fund that I have received will be exempted. Read that. Research and development services. So I am providing research and development services against consideration in the form of grants. I am getting grants. From whom I am getting grants? From a government entity or a research association, university or college notified under section 35 of Income Tax Act. Got the clarity about this? Then with this we completed all the exemptions that we have in GST. Little time we took, yes, because what happens is that exemptions is an area which usually students will neglect. And even when you have attended any regular class also, it will take lot of time. As it takes lot of time, even you will forget what is there. That's why I made a revision of this, because you cannot imagine a question paper at intermediate level without exemptions. It is connected in many places for that reason only.